big way. I would say this is, I mean, a very, very large tax budget more than anything else, with lots of changes on, direct taxes, lots of changes on the custom side, indirect taxation, and much more as well. 350 points down on the Nifty now, so that's the kind of cut that we're seeing. At this point, the market, of course, reacting in a pretty large way. This is a knee-jerk reaction, but I think what was the market's fear has come through. 24,190 is where we're at on the Nifty. Shireen, you've been talking. Sorry.
To be fair, there has been a little more money put in the hands of taxpayers as well.
Yeah.
But I think the market at the moment is only reacting to the fact that market gains are going to be taxed, and taxed substantially higher.
Yeah.
I mean, 15 to 30% to 20% is 30% more amount in terms of
Though that exemption of 1 lakh that we had on long-term capital gains, that's been increased slightly to now
1,25,000,
but not
marginal.
I mean,
it is a very big takeaway from the markets, and the markets are reacting. To be fair, they were also sitting long, and therefore some bit of a correction. Buy on news, buy on rumor and sell on news was always there. But this is something very big for the market. Shireen, anything more with you?
Yeah, Lata, outside of what we've already discussed, which is the changes on the capital gain side as well as F&O and so on and so forth, I think the fine print will have to be looked at, and we have our tax panel here with us. I think the larger message is the message that we've been pointing out to here on CNBC TV18. I said very clearly that there is going to be no departure as far as the fiscal math is concerned. What was industry saying? That the government capex number has to go up substantially. What has the finance minister delivered? 11.11 lakh crore rupees. Exactly the same number that was there in the interim budget. Similar story playing out even as far as the rural allocation is concerned. So there has been no deviation, no departure from the fiscal arithmetic as far as the interim budget was concerned. Good news on the fiscal deficit, again something that we had reported, 4.9% is the government estimate now as far as fiscal deficit is concerned. So making it clear they are sticking to the fiscal consolidation roadmap. But there is a lot in this budget, Lata. A lot of it is work in progress. The energy transition framework, the employment schemes that the government has put forward. Many of those 9 priorities continue to be work in progress, and of course allocations will have to be looked at in the fine print and so on and so forth. But let's bring the tax experts in on what they make. This was being speculated whether this is going to be the budget that finally moves as far as capital gain simplification is concerned. Dinesh Kanabar, Ashok Vadva, to you first, your reactions on what we've heard from the finance minister. Ashok, to you first.
Obviously, the increase in capital gains tax on listed securities is a bit of a disappointment. I mean, we were all hoping that they will keep it intact and retain market buoyancy. But I guess, as the economic survey had mentioned, government wanted to make a move. The distinction is that they're trying to save for the smaller person. In other words, the lower middle class, they've increased the exemption from 1 to 1.25 lakhs. They've increased they've reduced the tax rates. So in a sense, they have provided some comfort there. But obviously, to the market participants, it's 10 going to 12.5, 15 going to 20 on listed stocks. Only partial good news is that they have therefore brought on the unlisted securities, they have brought the capital gains tax down. So where we were taxing long-term at 20%, that will come down to 12.5%. And where we were taxing short-term, 25 or 39, depending upon whether it was a corporate or an individual, they've brought it down to 20%. What we don't know is what they have done with real estate, because that didn't come out very clearly in the messaging. So that's unfortunate, but as I said, par for the course now.
Okay, and what about you,
Yes, and
Dinesh?
we will have to look at the fine print on that. Yeah, Lata, go ahead.
No, I was just going to ask Mr. Kanabar, what were the big takeaways on tax?
Quite a few things. Angel tax going away will mean that huge amount of money which was coming in, and we are seeing some horror stories. Although there was a lot of liberalization in the recent part, but still there were horror stories. Again, buyback tax, and we discussed this just before the budget was presented, that be careful what you wish for. So it's not being treated as capital gains, it's going to be tax in the hands of the recipient, which would mean that it could actually, in the hands of larger taxpayers, mean a larger share of tax being paid, because it will be taxed at a full rate. So that's what's going to mean. So it's for lower income people, it's going to mean good. For those who are at a higher tax bracket, it's going to mean higher taxation.
The arbitrage between dividends and buybacks in that sense also goes away.
Goes away, absolutely.
Well,
Except Dinesh, what if, I mean, are they going to tax buyback on long-term holding as capital gains, or the tax? Because if they are going to tax it in the hands of the individual and it is then taxed as capital gains tax, then the 20 comes down to 12.5. Because today the company is paying a tax at 20%.
I don't think she said that. We have to look at the fine print.
I know, but if it's going to be taxed in the hands of the individual, it has to be taxed in the individual as the character.
Yeah.
And if the character is long-term, it doesn't matter whether you buy it or the company buys it. If the character is long-term, then it will be 12.5%. So then there's a gain.
Okay.
The company was paying 20, the individual would be paying 12.
Ashok, as Lata says, we have to see the fine print.
Yes.
You're right, actually. It's not long-term or short-term, it's the characterization. So if the characterization is capital gain, then obviously whatever is the capital gains treatment will apply. If it is treated as normal income, then we have a challenge.
Okay.
So we'll have to examine.
You know, the budget papers are still not loaded.
Yeah.
So we will wait for more clarity, and you guys, I guess, will be on your phones till you get that clarity. But let's get to the market expert. Madhu Kela of MK Ventures joins us now. Madhu, okay, we also have Sunil Singhania of Abacus Asset Management, more experts joining us shortly. Madhu, first thoughts, the market's worst fears realized with short-term capital gains going up to 20%. Yes, Madhu.
Lata, I can't hear you properly.
Okay, it's just that STCG gone up to 20%.
Yeah, I think this is completely not in expected lines. I don't think any market participant in that sense was expecting a change in the short-term capital gains as well as in the long-term capital gains regime. And also the STT is being actually increased. So, and the buyback taxation, if it is moved from company to the individual and there is no charge to the company, then it will be incrementally positive. But by and large, to me, in a lighter sense, looks like the market wants the markets to cool off. The government wants markets to cool off. You know, while the fiscal math was all adding, you know, this was not the basic expectation of the taxation increase. And already, Rata, markets have run off very hard in the last few months. So some kind of a correction because of this is not overruled, and that is what the markets are showing off.
Well, the markets have recovered coming off those intraday lows. But let me bring Sunil in. Sunil, Madhu is saying the market wasn't expecting this, but the speculation was rife, especially over the last few weeks, that something has got to give as far as the capital gains regime is concerned. It has now been put forward in the budget, and of course, fine print is awaited. Sunil, your first reaction to what we've seen the finance minister deliver?
I think the market reacts based on expectations and what actually comes out. So I would tend to agree that there was hardly anyone who was expecting any change in the capital gain regime, at least in this budget, because we are only 6 months away from the next budget, right? So I think to that extent there has been a disappointment. And the other thing is uncertainty on this buyback tax. Because the intention of the finance minister maybe was that dividend tax and buyback tax, there was a difference in tax treatment, and buybacks were getting maybe a slightly more benefit in terms of lower taxes. So we have to see the fine print, but obviously when something is not expected, the market definitely reacts. And anyway, I think over the last 10-15 days, market was showing signs of cooling off, at least the broader market. So while the Nifty was not showing signs, the broader markets was clearly showing signs of overheating. So it's a combination of two factors, I would say.
That the fiscal deficit has come down arithmetically to 4.9. So at a macro level, that is a positive, but that doesn't mean they're going to borrow less. The borrowing was originally 14.1. That's just come down to 14.01. So they're going to borrow the same amount of money, but yes, for the arithmetic, it's 4.9. Go ahead, Prashant.
Absolutely. I mean, look at don't lose sight of the index, the market as well. We had fallen about 400 points on the Nifty, and it's a 250 odd point recovery since. So, is it going to be as powerful, a recovery as we've seen after the election shock? Some have, of course, said no. But this is too early. I mean, this is the first knee-jerk kind of reaction which is coming in, and I think it'll take time for it to kind of sort of seep through in markets to find an appropriate kind of level. Prashant Khemka is also with us. Prashant, I'm going to come to you. Madhu, but what is your sense? I mean, as I said, this is immediate kind of market reaction, but is this going to do slightly more lasting damage? Or, as you said, government wants markets to cool off. Will it cool off?
I do not think it will be a lasting damage or anything of that kind, Prashant. It doesn't change the medium and long-term outlook of Indian economy or the stock market per se. I think the government in other sense has done quite a lot for agriculture, for job creation. There is a lot in the finer print. They have retained the capital expenditure as budgeted in the interim budget. See why there is a knee-jerk reaction, because this, at least I was not expecting, because see, when we went into the budget, in 30 years of my career, I have not seen a better financial position of any government or any budget which being presented, when because of the RBI dividend and because of the higher taxation, the government fiscal situation was really in a very sound path. So this was not expected. There is some knee-jerk reaction, but I don't think it changes any trajectory or it will bring in any meaningful correction in the market just because we have slightly higher capital gains taxation.
Okay.
Sunil, you want to sort of come in on that point? I mean, today the reaction is the reaction because it's a surprise, but do you think we'll have a sort of lingering kind of impact, or the market just moves on?
No, so if you go back, Prashant, when long-term capital gains tax was introduced, to 10% from 0%, we did have an impact in the market. But then the market started taking it on its stride, because ultimately you're paying capital gains on the gains you are making. So I would agree that at least on this point, the market will take it on its strides. But there are a lot of things which we have to understand, whether there will be grandfathering like the ones which we did earlier, or is there a date from which this is going to be applicable, whether it is going to be applicable from day one, or whether, it's going to be applicable after a month. So if that would be the case, then there would be obviously some pressure because investors would like to book their gains at lower tax rates. So I think let us see the fine print, but I think the markets were clearly overheated and some cool off for some reason was necessitated. And basically, maybe this is the reason why markets would cool down a little bit. So I would say that it would not sort of collapse per se. Maybe they will spend some time here, but I would not expect either a big correction or a V-shaped recovery.
Okay. And any stock preferences, sector preferences, Sunil, after you heard the budget, any stock sector preferences?
I don't think there is anything, which is sort of a surprise as far as positives or negatives in the budget is concerned. I think we were all expecting a focus on infra to continue, focus on housing, obviously focus on giving more to the middle class, which they have done by way of reduced taxes. So I think everything has been on line. I don't think, except for some minor tweaks here and there in terms of import duties, it's the same as it was earlier.
Okay. Thanks for that, Sunil.
Let's begin Prashant Khemka as well. He's waiting by.
That's what I was
And he manages a lot of foreign money. Prashant, good to have you with us here. From an attractiveness point of view, purely on a taxation regime basis, how does this capital gains tax increase count, I mean, in your opinion?
Certainly, Prashant, like every budget, it has some puts and takes, and maybe from an investor perspective, this budget, after a few budgets, is a bit more negative, I would say, on the taxation front in particular. There was some expectation that a long-term capital gains tax might be increased, but with indexation benefit. So today what we've seen is that there isn't an indexation benefit, and plus it, I think, increases the risk. In a way, there was a stability in the capital gains regime for the last several years. Now the long-term gains tax has been raised by only 2.5%, short-terms raised to 20%, but this increases the risk in investors' mind that it could be not a given tax regime for next many years. It is possible that this could be inching up higher again. at some point in time. So that I would say is negative, but that is the primary negative of the budget. There are several positives as well,
Sure.
most particularly on the review of the tax code, which hopefully would simplify and make it easier to comply with.
Okay. Prashant, hi. Thank you for joining us on the show. So this, of course, is the knee-jerk reaction that we're seeing on the markets right now. And it has come as a negative surprise, and hence the market is factoring in. But, you know, as Sunil was also mentioning a while back, this may not change the medium-term outlook for the market, because at the end of the day, you are paying capital gains tax on gains in the market, which have been aplenty over the last many years. So if this dip continues because of the reaction to these changes, would you suggest a buy on dip strategy is a good approach? I mean, would you buy the dip that we're seeing in the market right now?
So certainly taxes are on gains only. I mean, you don't, on the other hand, you don't recoup anything on your losses. So, you know, net, it is hard to paint it as a positive. But on the knee-jerk reaction or not, yes, I mean, taxes, I don't think ever have had a lasting impact. As Sunil and Madhu pointed out, and we all know the markets have been somewhat of a heady, progression over the last 2 years, up 60%, 2 years up 30% or so over the last. These are not like normal returns from the market. So, regardless of the budget, one could have reasonably expected markets to be more normal going forward, which is deliver high single-digit, low double-digit returns. So this would not, whatever reaction the market has to have to this tax would be done either today or by tomorrow. But regardless of market reaction, I think the point remains that the expectation was not there of a capital gains hike without indexation benefit in this budget.
Yeah, no, absolutely. You know, I'm going to come to the tax experts as well, but I think Madhu, you want to make a point?
Yeah, Prashant, I just got a message, I hope it is right, that this capital gains taxation calculation, as Sunil was saying, is on a prospective basis and it is not applicable to securities held before this budget announcement today. So whatever you buy after today will be applicable on a long-term capital gains and short-term capital gains. So it is some relief. It is not applicable, hopefully, to the shares being held before this date. I hope this message is right.
No,
I'll pray for it.
We will.
It is right.
No, I think everyone will prefer it. It's on a prospective basis and not a retrospective basis, and we'll sort of look at the fine print in just a bit. But I think Nilesh Shah is also with us. Nilesh bhai, okay, I think we'll just go to him in a bit. Ashok, the point about prospectiveness. I mean,
historically, it's always been point of sale.
Yeah.
So if you go with the point of sale, it doesn't matter whether you bought it before or after. I would believe that consistency is unlikely to have changed.
Okay.
But let's look at the fine print. I mean, who knows? They may have just brought in a specific. But Dinesh will make an important point on dividend. I had said that it's likely that buyback could be treated as capital gains. That clarification has come. It will be treated as dividend.
So they have actually specifically amended the law to say that any buyback income will be treated as dividends.
Income.
And therefore, virtually it kills buyback because for higher income.
Okay, and so it's treated at the slab rate.
Absolutely.
And I'm seeing quite a few. I mean, too early to comment on all the fine print, but as I was going through, one of the things, for example, in the pharma industry, we see is that there are litigation on infringement of patents and things like that.
Yeah.
And then you do a settlement. Now that settlement payments are treated as non-deductible because it is treated as infraction of law. So it's a number of fine prints. I could see quite a few things.
Okay. We'll come to that. At the moment, the market is kind of recovering from the big blow. It was down about 3%, the mid-cap index in particular. Now still down about 1.3%, but I think people are more playing profit booking or profit taking, as the case may be. I think we will have to give it to the budget that it has tried to ameliorate some of the important long-term work. For instance, trying to encourage corporate apprenticeship of newcomers. You know, the benefits that they are providing if you hire new employees. I think up to 1 crore youth could benefit. So there are these long-term benefits. Macroeconomically, the deficit is down. Maybe in the days to come, that would mean a rating upgrade for India because we are rapidly bringing down our fiscal deficit. You cannot take away from these macro positives in terms of what is done for employment and in terms of what is done for macro health of the economy. But at the moment, we are focused on the capital gains, and therefore the market is reacting the way it is reacting. Madhu Kela, any sector preferences at this point in time after what you heard in the budget?
Yeah. Lata, is life back to normal in my view? I think this is now these days budget do not have a more than 48-hour lifeline, and because the reforms are carried throughout the year, I would continue to focus on bottom-up stock investing opportunities. I think agriculture could be one interesting sector to look at it. One will have to read the fine print, but there will be some beneficiary on the agriculture sector and also on the broader economic front, because they have retained the capital expenditure plan which was being outlaid in the interim budget. So Lata, it will be a story not of any big sector, but bottom-up stock picking going forward.
Yeah, I just want to come in here and bring Nilesh into the conversation as well. And while we're talking about the negative impact of the tax announcements that have come in, there have been many positive announcements that have come in as well. Abolishing the angel tax, which is a big one for the venture capital and the angel tax community for the startup ecosystem. The equalization levy, by the way, has also been done away with it. What was popularly called Google tax, that's been done away with as well. There is a TDS cut even as far as e-commerce platforms are concerned. So there is a lot actually on the tax front, and of course the benefits to taxpayers, to the salaried class, if they move to the new tax regime. The finance minister holding out a number of about 17,500 rupees by way of savings. But Nilesh, on balance, as far as the big numbers are concerned, it's the same. It's pretty much status quo when we talk about capex. When we talk about capex, when we talk about the rural spends, etc., food subsidy, that number flashing on our screens, and of course we will go over the fine print of many of those schemes that were announced. By the way, the MSME scheme, and I think the bank stocks reacted to that as well, because this was a proposal, it was a demand made by the MSME sector in terms of credit guarantee and especially not counting them as an NPA when they were SMAs. So there's been plenty that's been announced as far as the SME sector is concerned. But let me go across to Mr. Amitabh Kant as well. He joins us now for the first reaction from the government's end. Mr. Kant, always a pleasure. Many thanks for joining us. The budget is now delivered. There's plenty there on the tax front. Some of the concerns there with respect to long-term capital gains and the changes that have been announced. But on balance, the message is one of continuity. The message is one of macroeconomic stability. Your first reaction, Mr. Kant?
So, Shireen, I think the focus really is on growth with huge emphasis on employment. I think the important thing is to, if, as the economic survey said, if you have to create 8 million jobs a year, these new schemes on employment, that first-time employees to get their 1 month salary, or the second one, both employer and employees to benefit, and secondly, from their EPFO account, and thirdly, for the employers again to benefit. And then a new scheme for skilling, the centrally sponsored scheme for skilling, and to my mind, this internship with about 500 top companies. All these are path-breaking measures to my mind in terms of employment. But the other big thing too is the focus on urban development. Creating growth centers next to 100 cities, creating industrial parks next to, the 12 industrial parks. Because if you want to create good quality jobs, it's not through subsidization. That'll come through manufacturing and through urbanization. And that's very important. And the third is, the focus on energy transition, which is very important. And this emphasis on pumped storage, for which, to my mind, there's huge potential. And small modular reactor, because these are cutting-edge technology where India has to leapfrog. And, this doing away with the angel tax for startups is again a path-breaking move. So other than the stock market may look at the tax on the long-term investments, etc., stock market, but from a perspective of growth, from the perspective of employment, from the perspective of research and innovation and urban development, it's quite a remarkable budget.
Yes, we will have to see the fine print of those schemes that were announced specifically for employment. The good news is that they have linked that to the EPFO enrollment for the formal sector. But Mr. Kant, two questions I have specifically for you. Yesterday, the economic survey made it very clear that, look, corporates are sitting on record profitability. Corporate profitability has quadrupled in the last 3 years, and it is now time for the private sector to take up the baton. And if you look at the capex number, the ask and the expectation was that the government needs to do better than the interim budget, but that's not the case. It's status quo on capex. So the message that the government seems to be sending out is, we've done our part and now the private sector needs to pick up the pace. But in that transition period, do you envisage some hiccups on growth, Mr. Kant?
So, Shireen, taking it from 1% to 3.4% is a huge amount. And if you look at it, the government in the last 3 to 4 years has really pushed all its resources into capex spend. And to my mind, it continues to do that at 3.4%. But it's also time now for the private sector investment to kick in a big way. And to my mind, that was impacted because of the COVID, but it has started kicking in and it'll drive greater impetus with this budget. So I envisage that in the coming years, in a lot of sectors, particularly the PLI related sectors, you'll see a lot of fresh investments coming in. And I don't think we need to worry on that count. The government has really done its best. To stick on to 3.4% capex itself is a very huge thing, and yet to bring down your fiscal deficit to 4.9%. That, to my mind, is a remarkable thing, that you are saying 4.9%, you will bring it down to 4.5%. You are really laying down the glide path for the fiscal deficit in the budget, which in the long run is very critical for the Indian economy.
Mr. Kant, a valid point that you make there. I will address the PLI issue with you in just a second, but let me get Madhu Kela back into the conversation. Madhu, from a consumption point of view and the changes that the government has brought in to try and provide some sweetness to and some relief to the salaried class, what do you believe that that's going to result in as far as the consumption cycle is concerned, if anything at all?
I think it will argue very well for the consumption cycle, Sareen. Any which way we are coming off from a 2-3 year kind of low, wherein because of inflation concern and because of unemployment concern, there has been some kind of a consumption slowdown. And in a way, market is validating. If you see the uptick in lot of consumption related companies over the last 1.5, 2 months, a lot of companies have gained ground. So I think this budget as a whole, if there was really no tinkering of this short-term and long-term capital gains, I think markets would have really celebrated, because there is, as Mr. Kant was saying, there is a lot of positives in the budget and there are a lot of positives in the fine print, and the unemployment issue is really being addressed as much as I could hear and understand. That there will be a lot of job creation opportunities for the youth going forward, which will argue very well for the broad-based recovery of the economy and also of the consumption-related sector going forward.
Gentlemen, just for the benefit of all of our viewers, you had asked for that clarification. Sunil had asked for it, or I think Madhu specifically. The STT hike is effective from the 23rd of July. So basically, it's effective from today. The hike as far as the securities transaction taxes, the STT hike has come in from the 23rd of July. I would imagine that's the case for some of the other tax changes that have been announced as well. So that's the clarification coming in, effective the 23rd of July. But Mr. Kant, coming back now to the measures as far as the manufacturing sector is concerned. And I guess you will need to see this holistically in light of what has happened on the customs duty side, in light of what has happened on the announcements on the industrial parks, MSMEs and so on and so forth as well. But the expectation was more PLI schemes would be introduced, especially for labor-intensive sectors. That's not been the case. Your comments on that?
So I think the best thing, to my mind, Shireen, the finance minister has done is not to spread the PLI thin. An important thing is that the PLI is meant to create large champions, big champions. And PLI should be limited to 14 sectors. We must ensure success, as we've done in the case of electronics, in the other 13 sectors. PLI should never be spread thin. That is not a long-term solution. The long-term solution is to make India a very highly competitive nation. It should become very easy, simple. It must become the most cost-competitive nation in the world. That is what the budget aims at. PLI is meant for 5 years if you go big, bigger, bigger, and biggest. But it's not a solution for inefficiencies. The government is trying to address macro inefficiencies in our economy. We must get that right. And therefore, I'm really, really grateful to the finance minister that she's not spread out the PLI thin.
Mr. Kant, coming back to you in just a second, sir, but we do have more clarifications with regards to the capital gains tax. Lata, the fine print, what do we know now?
Yeah, you know, there was an understanding, and I want Madhu Kela to listen in to this. There was an expectation that the short-term capital gains increase will only apply to shares purchased hereon. Dinesh Kanabar clarifies, no, it applies to all shares that you hold, and it will apply from whatever sales you do from today. Mr. Kanabar.
Actually, the entire income for the year will be taxed at 12.5%. So it's income arising after 1st April 24. Okay. If you have made a long-term capital gain, the rate will be not 10 but 12.5%.
And
likewise for short term
as well.
Absolutely.
And on real estate, Mr. Kanabar, can you just...
The period of holding has been reduced from 36 months to 24 months, which again is a very... I think what the finance minister has done is she has taken the suggestion of simplification very seriously. So instead of having multiple holding periods for multiple class of assets, she has put financial asset on one side, other assets on the other side, and put up a common structure
and
for
financial assets, it's 12 months?
Yeah.
Or all other assets are 24 months?
That's right.
I wonder if there would be some impact on realty stocks.
What we don't know is, given that this budget is being presented on July 23rd, whether gains made between April and July. So if I sold something in this financial year between April and July, is that 10% or 12.5%? It will be 12.5%. So in a sense,
it is retrospective. It's opposite of what Madhu is saying.
Versus Madhu saying that this is prospective. It is actually, so STT is prospective.
It may be, yeah, STT is prospective, but STCG and LTCG.
Both short-term capital gains and long-term capital gains is effective April 1, 2024.
Okay. Fair enough.
In a sense,
and just to clarify, it is always so. So, for example, even the last interim budget, 2018, the surcharge was increased substantially. That was the budget where it went to 41%. It applied to all income from 1st April.
April 1st.
So, to that extent, it does become retrospective, and that can't be helped.
Madhu, you want to come in quickly, respond? Okay, I think we don't have Madhu. Nilesh is with us of Kotak Mahindra Asset Management. Nilesh bhai, good to have you back. You know, your first thoughts on what's been done on the capital gains tax side?
So essentially, you know, if we look at capital gains, they were removed and STT was levied. Then in 2018, capital gains came back. And now the rates have been increased. The amounts are not going to be more than 30,000 crore by way of collection. And if we include the revised increase limit from 1 lakh rupee to 1,25,000 rupee, then even that collection will come down. Now, clearly for such a small amount, was there a need to increase this taxes? I think this could have been achieved by creating level playing field between foreign investors and Indian investors. When Indian investors trade in derivatives, it's business income and it gets taxed at applicable slab rates. When foreign investors trade in derivatives, it is considered as capital gain And there are so many high-frequency traders trading in our market, making tons of money and paying no taxes. It would have been better to tax them and create a level playing for investors and get the same amount of money. Even the proposal on buyback of shares. Now, you are saying that if a company does buyback, we will shift the tax to the recipients. What if the company is doing buyback in the market? How will I know I have sold to the company or in the market? So clearly, there are certain changes which have some nuances, and this could have been handled in a better manner from a market point of view.
Nilesh, apart from the taxation part, what else in the budget stood out for you? And from a market standpoint, given that we've seen a dip, what is your recommendation now? Should one use this opportunity to buy into the market?
Sonia, I think the biggest benefit or positive of budget was fiscal consolidation. Okay. FY20 fiscal deficit was estimated at 5.8%. We are starting FY25 at 4.9%. That's 90 basis point consolidation without taking into account tax buoyancy. My feeling is that the tax collection will be higher than what is estimated in the budget, as the June quarter advanced tax collection is running at a higher level. Second, it is also committing fiscal consolidation going ahead, 4.5 for FY26, and debt to GDP ratio to remain lower thereafter. I think fiscal consolidation, fiscal prudence is the most important part of this budget.
Okay. You know, I want to make 2 points. One is this STT bit, which is going to be rolled out immediately. Will it be an issue for brokers, etc.? Because they got to calculate it, right, at a different rate, almost immediately from, I don't know.
So they will have to simply change the software.
It's nothing.
No, that's easy. It's already done probably.
Okay. And the other one is, I want to point out what ITC is doing right now. ITC is up 4.5%. Okay. And that is the single biggest sort of mover. Okay. I mean, it's not the change which has happened for ITC, it's a change which has not happened. I think it's adding about 40-50 index points to the Nifty, and that's the reason why the market has recovered actually quite sharply. So just wanted to make that point as well.
Okay, 1 minute. There's a clarification, Mr. Kandabar and Ashok Wadhwa in particular. The higher capital gains tax kicks in from today.
So from July, sales from July.
Yeah, sales from July 23rd.
So
Page 6 on the explanatory memorandum, it's a message that we've got from Ridham Desai. So he says he has seen that page, and therefore sales here on, and the previous 4 months sales will not be taxed at 12.5%, but it will be taxed at 10%. Prashant Khemka has been patiently waiting by. Thank you so much for your patience, Prashant. Well, this is also a Bihar Viksit budget, you will have to say, and an Andhra Viksit budget. And also I want to give credit to the government. You know, 11.1 lakh crore is a very good capex budget. If it has not been increased, it is because there are only 6 more months to spend that money, and there is no point increasing that. So maybe we should not be too unfair to the government. 11.1 lakh crore is a very good capex budget. But anyway, is there anything on the capital goods side that attracts you, Prashant? What exactly makes you attracts you in the market today?
No, I think other than the topic that we've discussed at length, which is the capital gains tax, which is negative, but I think overall, otherwise, it is a good budget of continuity. The prior budgets have all been very well welcomed by the market because they had all essentially the same ingredients as the budget today, except for the capital gains tax, right? So the rest of the elements, including the capital expenditure, as you pointed out, there's 6 months left, there'll be new budget. No, I don't think there are particular expectations of revising upwards that number from the February budget. So that's as it is. On the consumption side, yes, the heavier emphasis on rural development and on job creation should be beneficial for consumption overall. And most particularly what I'm excited about and hopefully maybe somewhat wishful think we should make considerable progress on, and if Ashok or Dinesh have some comments on that, is the review of the tax code.
What did you want clarification on?
So the review of tax code, how it sounded like very material to me. And simplification, ease of doing business. Also the fine print on gift city, because in passing, the FM did mention that taxes have been reduced and simplified or something to that effect for the gift city. That would be very important to see in the fine print.
Mr.
Okay.
Kanwar,
I would just respond to that very quickly. I think that it's a very important point, and sometimes you tend to miss in the light of this capital gains thing. So there was a request that the TDS rates be unified. That has been done. There was a request that TCS, one should not wait for a refund. It should be allowed to be set off against TDS. That has happened. So number of changes. So on TDS, on capital gains tax, on charity, again, I had to study all of it. So, and what she is saying is that these are the changes I'm introducing here and now, and all the other changes I'm going to review, and in 6 months, which means that the next budget is also going to be a lot about taxes.
Okay, I just want to make it clear what Dinesh has said. It's a very important point that Mr. Kanwar is making. We were all worried that if you say you bought a foreign travel ticket on a credit card, you had a TCS of 20% on it, and you had to wait for the next end of the year to claim that back. Now it will be claimed in your next salary payment itself, which is very efficient. After all, the idea was to catch those who are having foreign travels and credit card payments but not paying tax. So, you know, this cleaning up the process is extremely important. But Kiran Mazumdar-Shaw is with us, the executive chairperson of Biocon and Biocon Biologics. Kiran, thank you immensely for sparing time. What were the first takeaways for you?
Well, you know, everyone has touched upon all the various, financial and capital allocations and tax, slabs. But I'd like to really shift gears and really focus on a couple of areas which I thought were very positive indicators of how the government is looking at economic development. One, of course, is about the startup sector and the kind of, allocation of budgetary spending is being looked at, especially, I think the startup sector has much to cheer about when it comes to the abolition of the angel tax. But apart from that, I'm glad to see that even at the rural level, you've got the Mudra scheme also that's looking at entrepreneurship. You're looking at a large, fillip for the startup sector in many ways in terms of ease of doing business. And in the case of our sector, I was heartened to at least hear an announcement that research and innovation is going to be a big focus for the government. You know, how they've actually set aside 1 lakh crore as a budgetary allocation for private sector research, but we need to read the fine print. How is this going to be deployed? How is this going to be converted into incentivizing industry, etc., etc.
Yeah.
So overall, I think, like everyone's been saying, I think no one expected a huge change from what was announced earlier this year. I think they're trying to build momentum, and at least, everything is moving in the right direction. That's how I would put it.
Okay, point.
Right. I just want to highlight one more thing. Gold, right? I mean, gold has seen changes. So the total incidence of tax, including GST, has gone from some 18%, has gone down to about 9% or so. And look at what some of these stocks are doing.
Basic customs duty is down to 6%.
Correct. Titan is up 6%, Senco is up 10%, that entire sector. I mean, I think expectation is that, this will actually spur sort of gold sales and demand, etc., in a meaningful way. So we'll have those stocks up in just a bit. But I wanted, Mr. Vadva, your thoughts on real estate, that threshold being brought down from 36 to 24 months. What will it do to for the sector? What will it mean?
Obviously, it's very good. I mean, not only 36 comes down to 24, but the rates are also aligned, which means that for long-term capital gains tax now, there's one rate, 12.5%.
Which is 12.5%.
12.5%. So you are paying long-term.
So if I sell my house now, the capital gains I'll pay will be
12.5% versus your
original of
20%. Of 20%.
Okay,
no, short-term was, long-term was 20% plus the surcharge. There's just one other clarification that you need to bear in mind. So when buyback happens, earlier, the company paid the tax, but the individual did not pay the tax. Now, it will be taxed as dividend in the hands of the individual, but then the question is what happens to the cost?
Okay.
That cost will be treated as a loss and will be allowed as a set-off against your capital gain.
That's a bit of a relief, big relief.
That's a big relief.
Yeah, absolutely. Mr. Anish Shah is with us. Mr. Shah, before I hand you over to Shireen, the last statement you made before we went into the finance minister's speech was that something should be done for skilling and employment. And there is a fairly good scheme for 1 crore youth employed corporates get some kind of a benefit for formalizing those jobs. What's your first reaction?
So first reaction is very positive. We see this as a growth-oriented budget that meets various different factors that we would want from an industry perspective.
Right, Anish, let's get down to some of the specifics, and we didn't hear it in the finance minister's speech, and I don't know whether this is going to be part of that green transition plan and roadmap that the government says is work in progress and will be announced, but no FAME 3 in the speech so far. We still have to go over the budget documents to see if there is an allocation there. Anish, what do you make of that?
So Shireen, we were not expecting FAME 3 in the budget itself. All indications that we had received was that that would be done separately as part of the normal course from the various ministries. So this is not something that we were expecting in the budget.
Okay, so you weren't expecting FAME 3 in the budget, but on balance, in terms of what the government has done, continuity on the big numbers, in fact, pretty much staying intact with the interim budget projections, as well as some of the changes brought in, relief for the salaried class, some of the tax changes on the simplification side, and of course on capital gains, the changes that have already been discussed in detail by our tax experts. But on balance, what would be your biggest takeaway from what this budget has managed to achieve?
On balance, Shireen, it's staying the course. It is a growth-oriented budget that focuses on inclusive growth. There is a strong element of simplification and ease of doing business. And if I were to look at it from a FICCI perspective, it really meets all the priorities that FICCI and the industry had laid out, which is around Make in India, women-led development, farm prosperity, and sustainability.
Specifically on the manufacturing side, and I want to link this to the job creation schemes that have been highlighted by the government, and link this also to what they have decided to do to nurture and bolster MSMEs. What, from an overall holistic manufacturing perspective, Anish, how much does this change things? How much does the compass move on account of the many measures announced by the budget on jobs, on industrial parks, on supporting MSMEs, on access to credit?
Shireen, it's a significant step forward in terms of developing India as a manufacturing hub. The focus on infrastructure, the focus on capex continuing to be at 3.4% of GDP. The focus on jobs, because that's going to be, skilling is going to be an important aspect for India to become the manufacturing hub. And that combined with the short-term stimulus on demand through tax break for salaried, which is to the tune of 17,500 rupees, I think all of those things are positive from a manufacturing standpoint and are the right steps to be able to really make India the manufacturing hub for the world.
Nilesh, let me come back to you now. While we go over the fine print, again, in terms of some of the policy announcements, for instance, PM Awas, etc., also the allocation not being announced, saying that we will put that number down. Many other such work in progress, including the income tax simplification, that was, of course, a big positive that has been spoken of. Nilesh, to your mind, outside of the tax-related changes, the 3 or 4 big-ticket items that you take away from this?
So one, the fiscal consolidation, that's really big and positive. Second, import duty cut on gold. Today, gold returns are included with 18% tax incidence. Tomorrow, that will be included with 6% or 9% tax incidence. And that will take away some return of gold and hopefully allocation to gold. The third thing, which is very good, is related to new pension scheme. The employees' contribution has been upped from 10% to 14%. I hope and pray every employee takes advantage of NPS. Not only they secure their future, but it also cultivates long-term investment habit. And one more thing from a market point of view is safe harbor clause review. Today, so many of Indians are managing money into India from outside jurisdiction of India. We don't benefit in any way. and we allow other countries like Singapore and Dubai to develop as a regional financial center. The finance minister, in our pre-budget consultation, we had requested Honorable Finance Minister to look at safe harbor clause. And I'm very glad that it has been announced in the budget. Hopefully, next time Prashant Khimka will be in studio and not giving from outside of India.
Okay, good point, Nilesh. You know, there is a doubt about whether indexation has been removed for property. Would that be at all done?
I mean,
I think it's an error.
So if they brought the tax rate down to 12.5%, I would be surprised.
They would remove indexation altogether?
Altogether. So there are two changes.
Okay.
One is that there was an arbitrage on interest. So if you had debentures
or bonds... a house
bonds,
you bought for like maybe, 30 lakhs or something back in the 90s or back in the 80s would now be worth several crores. You mean the 12% will apply on that level?
Okay. So two changes, Rita. First is that if you have any interest yielding asset, debentures or bonds, what you could do up to now is that you would have interest maybe back-ended, sell it and make capital gains.
Yes.
To remove that, they have now said that bonds and debentures, if you sell, the income will be short-term capital gain, even if you held it for a period of more than 2 years.
No, I'm more worried about the property bit.
Yeah. So it's not just property. On all asset classes, indexation seems to have been removed for sales after July.
Okay, now that's a big one. We'll have to ask realty companies and even individuals.
Yep.
I think whatever you got, the paltry gain you make in terms of capital gains limit being raised from 1 lakh to 1,25,000 is more than wiped out.
Or the rate coming down.
Or the rate coming down gets wiped out with this. Yeah. But Nilesh made a very important point about the macros and that 4.9% fiscal deficit. It's very good to see that 4 handle on the deficit after a very long time, after maybe 4 or 5 years. Does that put us in line for an upgrade, Nilesh? I mean, is this a very big step towards a very long journey, of course?
So, Lata, I will start with a lighter vein and then let Sajid answer it in a serious way.
Okay.
The rating agencies are saying that we are Moody's and we have poor standards. To expect from them a rating upgrade will be a bit difficult with these numbers in a track record of not defaulting since Mohenjo-daro days.
Okay.
I'm sure rating agencies will require long-term track record to upgrade India's credit rating. 5,000 years is not good enough.
No, Nikhil, Nilesh, see, we have to live with what we have. So there's no point, trying to compare people.
Will answer.
No, we also have to remember that compared to all other BBB minus countries, we have a higher fiscal deficit and a much higher fiscal deficit. But that's a different debate for a different day with a different audience. Sajid Chinoy has joined us. Sajid, all the big numbers are with you. What would your take be? Fiscal deficit down.
I would say macroeconomically very prudent, very sound, right? So the deficit, as you said, the center is below 5 at 4.9. Importantly, center and states combined in FY25 should be below 8% for the first time in 5 years. Now that's meaningful. Number 2, this is a good balance between saving and spending. Compared to the interim budget, the government had about 0.5% of GDP in extra resources, both taxes and the RBI dividend. And that's been split very well. It's a half of that has gone towards more consolidation and lower deficit, and half of that has gone towards revenue expenditure, which I think was needed. Number 3, the assumptions and taxes, very conservative. Last year, on a nominal GDP of 9.6, gross taxes grew 13.5%. This year, nominal GDP is pegged at 10.5, which is fair enough. And on that, we're just assuming gross tax growth of 10.6%. So it's 10.8%. So it's just barely over 1. Now, to be fair, there are many tax changes, so we need to account for how much that adds or subtracts. But prima facie, the assumptions of taxes are extremely conservative and could surprise to the upside. And the last thing I'll say is, there's a lot of focus on what's happening in financial markets. I think we should step back and look at the important things this budget has done on plumbing. For me in particular, focusing on employment, focusing on skilling, focusing on cutting import duty so exports become more important, focusing on reforming direct taxes so that we've got more space for higher expenditure. These are the plumbing issues that I think we'll grow to appreciate over time.
I completely take your point on employment. If this really fires, if corporate India is able to take advantage of, the SOPs given so that you hire newer employees and those SOPs are available for the next 4 years for 1 crore employees, then we've definitely inched up on formalization of employment and employment per se. So full credit to the government for those. And the benefits of that are only going to be reaped in the years to come. Employment, I mean, an employer cannot start employing more new people simply because 4,000 rupees is available per new employee. But nevertheless, it is one small step, and it will perhaps help mid-cap companies. Mr. Anisha, you've perhaps gone through the budget and thought over it in greater detail. Do you think this moves the needle on employment?
I think it's a good step because it starts signaling that we should be looking at growth with jobs, with skilling. And even if you were to take it as here's an amount that's given for skilling new folks coming in and making it easier for companies to employ faster, I think that's a positive step. So therefore, it's not going to change a decision to employ based on what was mentioned earlier, especially for larger companies, because that's going to be based on growth, on capex, etc. But I think this does make it easier and pave the road for us to be able to start looking at jobs and skilling in a much bigger way.
Okay, fair point. Once again, I would say that we wouldn't fault the government for not increasing the capex budget, because you have only 6 months left, and increasing money, and the capex budget was not met. Capex expenditure was not met in the April-May numbers, which we already have, for the simple reason that the government was busy. Several bills would not have been passed by the departments concerned, and therefore not increasing the budget this year is okay, but 1.5 lakh crore has been given as interest-free grant, 50-year interest-free loans to the states, and therefore that kind of capex can continue. Shireen, you have some questions?
Oh, well, that's right. We do have our panel here, the top brass of CII with us. Sanjeev Puri, CB, many thanks for joining us. ITC, the stock of the moment, the last time I checked, it was up by about 4%. So that should certainly be good news for you, Mr. Puri. But let's talk about the budget on balance now. Many of the things that we talked about in terms of continuity, in terms of stability, especially macroeconomic stability, the budget has clearly and squarely delivered on that. Some of the ideas, and a lot of this will boil down to finally execution as well. But on the job creation front, because again, the compact with industry is what the government is hoping for. Do you believe that this will incentivize industry to hire more? Or do you believe that, look, there has to be a business case for industry to hire? The incentives may not move the needle much.
Okay, let me first start by saying it's quite a commendable budget, because it's really looked at the issues of jobs, as you've spoken about. It's looked at in depth about rural and agriculture, issues of climate change. At the same time, very important focus on, the journey for the next phase of transformation, next generation reforms, a lot of work on ease of doing business, and a lot of, coordination with state and incentivization with state, looking at a lot of important issues of natural resources like water, land, and all of that. So extremely, extremely good. Now coming to this specific question on livelihood. Now, of course, there has to be no doubt a business case, but what is required is that the economic transformation continues, which is what the policy continuity and additional interventions will do, and all these incentives reduce one element of the factor cost. So it does kind of add some impetus to the whole employment situation. But more importantly, I think what is going to lead to more livelihood creation is also the very strong focus on skilling. Yeah. And this whole ideas of, top 500 companies, apprenticeships, and a lot of other schemes are there within education and skilling. I think those are very important, because today we are also sitting on opportunities which are not filled in a timely fashion because there's a mismatch in skills. So I think that itself on its own will lead to job creation.
So your biggest idea or your biggest takeaway from the budget?
I think it's very comprehensive, and it addresses this whole area of economic transformation for livelihood and for fighting climate emergency quite well within macro stability.
And we need to see the roadmap as far as the green transition is concerned. Welcome to Mr. Mukundan as well, and Rajiv Memani, you're back. You stuck your neck out and said you believe this will be the budget that will move on capital gains, and that's what's happened. The expectation was that they wouldn't do both short-term as well as long-term. Both have happened. Go over the fine print for us, and what to your mind will be the implications and any clarifications that you believe are needed.
Yeah. I haven't gone through the fine print as yet, but I can, from whatever I've made out from the budget speech and a few paras here and there, I would say that you can break the tax thing into 4 sort of buckets. One, I think, is there has been a focus on simplification. So whether it's announcing that they will come out with a new tax code by next year.
Next 6 months.
Or Vivad se Vishwas, and then on TDS, providing TDS credit and everything else. The reassessment thing is a big thing. So I think there are many things. The second, obviously, is capital gains, which on long-term capital gains, the rate's gone from 10 to 12.5%, on listed equity, 15 to 20%. At the same time, for land, it's come from 20% down to 12.5%, although indexation has been done away with.
So that's the clarification that we were hoping for, and Prashant, Lata Surabhi, Rajiv Memani confirming that the indexation for real estate has been done away with, even though the tax has been reduced to 12.5%, the indexation benefit has been done away with. Go ahead, Rajiv.
And buyback tax, which has been changed. But the way they have said is it will not be treated as capital gains in the hands. Earlier, company was paying buyback tax. It will be treated as dividend income, and the cost that they have, that will be treated as an expense against that. So I think that's a logical way of doing that. So I think that on the capital gain side, debt-oriented mutual funds will be happier. So on the capital gain side, and on REIT and InvITs, there was an anomaly. So that REIT and InvITs now becomes at the same way as listed equity shares. So I think earlier the capital gain tenure was 3 years. Now that comes to 1 year, and the rate also changes. So I think overall, I think the second level of change would be in the capital gain area of capital gains. The third, foreign companies, I think equalization levy of 2% going away. It came in 2020.
Correct.
Not as part of budget, but it was later on added. And secondly, foreign company taxation
being reduced
by 5%. So I think that was a big ask from a lot of people. So I think that will benefit a lot of the foreign companies who have branch setups here or who have got project offices here. And I would say fourthly, on the personal tax side, as we have discussed, I think the pivot towards the newer tax regime is there. So standard deduction benefit only available to in the new tax regime. There's some changes in slab rates that have happened. I think that's also
only in the new tax regime. That's right.
And NPS also, if I'm not 100% sure, but I think that also is probably only in new tax regime. I'm not 100% sure.
Well, on the NPS, she said we're working on the solution and we will arrive at that.
No, she said 10 to. So what was earlier available to government employees, they could get 14%. And private sector employees were getting 10%. Now both of them go to 14%. So that gets balanced out. So I would say the tax things I would break into sort of as it on direct tax. If I was to look at it, I would break into 4 buckets. I think a number of tax changes, honestly, after a long time in a budget.
Yes, it's been a heavy budget for tax.
For tax. Yeah. I think some, especially on the simplification side, the reassessment piece and everything, there will be. And the big thing, Shireen, I think, as mentioned, I think the government sticking to the macroeconomic stability and the focus on jobs and skilling, I think that's really massive, really bold moves on that, big change on that. So I think government clearly recognizing that this is a big area to solve.
Yes, it is a big area, it's a big challenge, but Mr. Mukundan, as far as growth is concerned, and many of these measures that we just spoke of, the hope will be that this will provide the stimulus needed to be able to get us to 7% plus. Enough in the budget to deliver on the growth promise.
Yeah, of course. I think what the budget has done is budget has focused on fiscal consolidation on one hand, but has not let up on some of the issues which we need to address if you have to have a long-term growth. One is where Sanjeev said fundamentally on the climate change, how do we make the energy transition? There's clearly a measure of that. There's a measure on R&D. But if you look at agriculture, she spoke about agriculture productivity, very, very important for us for stimulating rural demand. Then the focus on skilling and jobs and internships at the company level, incentivizing it so that we get more people on the workforce. At the same time, focus on MSME and the focus on infrastructure, because if India has got to be competitive, we've got to focus on these 3 factors. And I think all these 3 are welcome factors. One more layer which was added was a look east policy. I think the look east, in some ways, you've got to think about it is to say if India is to have inclusive growth, the eastern part of India needs to also have a GDP growth which is commensurate with its potential, including agriculture potential in east is far higher than the rest of India. And I think getting that focus right is very, very important.
Yes, and of course, there was special mention for both Bihar and Andhra Pradesh, which which was the expectation, 15,000 crores in FY25 for the state of Andhra Pradesh, for Amravati, and of course there was specific allocations for the Polavaram irrigation project as well. But on FDI, and that was again, a piece which is work in progress, simplification to bring in more FDI, but she didn't specify what the government is thinking of. What would you take away from that?
It was a policy statement. I think the details of that is still to be seen. But I think some of these steps on foreign company taxation, equalization levy are good indicators. They don't apply to investments. They apply to project offices and branches. But I would say that the investors should look at just the macroeconomic thing, the FDI, the fiscal deficit coming down, borrowings coming down. I think broad themes are very strong.
And the broad themes continue to be the focus areas of the government, whether it was the 5 schemes or the 9 priorities. It's pretty much a continuation of what the government has been focusing on, CB. The 2-3 ideas that you like, that you hope the government will build on and will be important from an execution standpoint.
I think one thing which I see having gotten carried forward is the focus on how the private sector is being given space to participate and in the growth story. So there's a lot of now focus on the private sector to come in. There's a lot of space given to the private sector to come in. So it's an entire story of how do we build trust and get the private sector to take the benefit of the incentives being given on jobs, on skilling. So you talk about skill gaps, and you talk about you are not getting people, as well as you're talking about an employment issue. So that's where I see a lot of role which the private sector can play, and I hope that they will. The second part is, very interestingly, I found one of the things that we have talked about in your show earlier is the role of states. While we talked about 2 states, but it has also talked about how it incentivizes states to participate in the next generation reforms. I think that's a very, very interesting takeaway for me, because we need that to happen. And third and lastly is the rural side. I think the focus on the rural infrastructure, when we see the capex and the quality of the capex spent on agriculture, irrigation, I think that would be one of my key takeaways from the budget.
Enough here to drive consumption. I mean, if you move to the new tax regime, the savings account to about 17,500 is what the finance minister mentioned. But do you believe that on balance, with everything that's been put in place, enough to stimulate consumption further?
So, the ultimate solution for consumption is actually what's been done in the past is a virtuous cycle of investment, employment, consumption. And I think that's where the predominant focus of this budget is, and that's what, we've always said that. And we had said that some bit of relief given the context today. So there's been some relief provided in income tax. And I think with the measures that are being taken in agriculture, the measures being taken in skilling, a lot of that should hopefully benefits transfer to the rural area, the investments in infrastructure. I think that should itself stimulate demand. We should also see the lagged impact of all the investment-led growth, because there is there's always a lag between the investment and the consumption coming. With passage of time, I think the benefits of that should start coming in also. And fortunately, the weather gods are still kind so far this year on balance. So that itself should provide a positive for the rural economy. Of course, that's a serious monitorable, because it's difficult to predict today. But so far, it appears to be on a positive compared to the past.
Holding up so far, the weather gods. Mr. Mukundan, before I let you go, in terms of the many measures, and as I pointed out, some are specific announcements, but many will be work in progress, whether at the central government level or in coordination with industry as well as states. Do you believe that, we had the smart city project, for instance. Today, the government is talking about urban cities and, improving infrastructure and so on and so forth, as far as cities with a population of 30 million plus and so on and so forth. So do you believe that, is there a fear or a concern that, we might get lost as far as the execution roadmap is concerned? Intent, strong on intent, but perhaps execution may be a cause for concern.
So I think in terms of making sure our urban bodies are much more, let's say, vibrant, much more able to execute on the ground, I think is one thrust this government has brought on table. But I think it's a work in progress because, at the first level, he said go to states. And when you go to cities, it's one more level below. And I think it's got to be something which both center and state have to work together.
Well, yes, a lot of coordination and collaborative federalism is the need of the hour, not perhaps as much competitive federalism as we've gotten used to over the last few years. But gentlemen, appreciate you joining us. I would imagine that much more will be revealed in the fine print as you go over that. So we will look forward to speaking with you again. But thanks very much for your time. That's the view here. Industry, as always, confident that the budget has put enough on the table to spur growth and feeling good about private investment picking up from here on. The markets at this point in time, it's a 600-point drop on the Sensex, well, about 575 points drop on the Sensex, and reacting, as we pointed out, to the changes that have come in on capital gains. But the mood in industry continues to be sanguine on balance as it was ahead of the budget. Lata.
Okay, thanks a lot for that, Shireen. Mood may be positive for industrialists. Hopefully, that will make them employ more people, which is what the CEA and the finance minister seem to want. But there is one issue on which the mood is definitely somber, and it is not just capital gains tax rising on short-term and long-term sale of equity. It is also that you don't get indexation on property that is sold. Say a house which was purchasable in the thousands in the early 90s or 80s would be sold by a person after he retires today for probably a crore. Until now, it was indexed. You got the CPI indexed to these 30 years, and only on the balance you had to pay your long-term capital gains. That long-term capital gains has been brought down to 12.5%, but there is no indexation available. Basically, if you sold a 30,000 rupee house for 1 crore, you're going to pay the tax on the entire 1 crore, 12.5%. So there is going to be definitely some problem for real estate guys who are trying to sell new houses, because almost everyone is selling the house to someone who is selling an old house and buying a new property. So there could be some kind of problem for real estate guys, at least the budgets go down.
Actually, two things, Lata, which were there. One was, it was not only indexation, there was a reset of the cost. So if you acquired a house 50 years ago, there was a resetting of the cost to 2004 and then an indexation. Indexation is gone. I'm not too sure as yet
about
as to whether
reset.
the 2000 reset also or not.
Indexation.
We have to hold on to this conversation.
Indexation versus taxation going down. At the margin, is it neutral? Is it negative? Is it positive?
It really depends on how long you have held. If you held it for very long, then it will be negative.
Okay. Right. Okay.
I think we have to go to two corporates who are waiting anxiously, and we'll come back to you.
Yeah.
We have Sunita Reddy of Apollo Hospitals joining us, and Mr. H.M. Bangur, the chairman of Shree Cement, as well joining us. Sunita and Mr. Bangur, thank you very much for your patience. We are getting lost in the litany of tax litigation and the fine print, so hence the delay. But Sunita, first thoughts, what have you made? There are some benefits given for R&D, some a basic customs duty on some import of medicines has been revoked or brought down to zero. Your first thoughts on the budget itself?
No, I think it was a good budget, very stable. I really like the focus on skilling and the fact that, for 4.1 crore youth, the government is willing to invest 2 lakh crores, and we can use our CSR funding for internships. I think this will have a huge impact on the healthcare industry, because skilling was something that was much needed in this industry. What you mentioned about customs duty, realization and reduction for, especially in the oncology space, for 3 other medicines, as well as on tubes, I think, is going to reduce the cost of delivery of oncology care. And I think that this is something that is much needed because it's growing at 20%. So it will be very impactful. The third that I wanted to stress on is, they did make some mention about women and creating better workspaces. I think this issue of creating jobs, helping them to stay as working women even after they have children, enabling them to come back to work is a very important factor in contributing to the GDP of the country.
Most of the tax.
Should we should really recognize this. With regard to research, even though the allocation was 1 lakh crore, I believe that we're still at 0.7% of GDP. And I'm hopeful that we could work with the government to really increase this from 0.7% to something more meaningful. And finally, I have to say that for the healthcare sector, I think the GST, where we have no set off against the input cost, is something that we need to have conversations with the state and the central government and the GST Council.
On what specifically, Sunita Reddy, GST?
Yes, I think,
No, which
we really
specific-
need to do some. No, I think, for example, for the input tax, GST tax that we pay, 18%, there's no set off. We're in the negative list.
Okay.
So I'm hoping for some rationalization there.
Okay. Yeah, that's outside the purview of the central budget. So
Yes,
it
but
will
she
have to be
did
raised.
mention, she started by mentioning that there will be some look at a GST.
All right. Then that's extremely positive. Hold on, Sunita Reddy, for just 1 minute. Let me invite Mr. H.M. Bangur, the chairman of Shree Cement, as well. Mr. Bangur, again, thank you for coming and thank you for your patience. Well, under the PMAY, there is 3 crore additional houses that are going to be supported with subvention on credit. So more houses would mean more cement. Your overall takeaway from the budget?
Yes, that is right. But more houses means much more jobs. Construction industry is one where the maximum number of jobs are created per unit of expenses. So 3 crore house is the cheapest way to create more jobs. So that has been achieved both ways. Houses
Bangur?
are needed here. Yes, please.
Right. Mr. Bangur, do you think, what does the slew of announcements which have come through, does it give a leg up to cement demand as you see it?
Of course, more than 12 lakh, about 11 to 12 lakh crores are being spent on infrastructure. And in the infrastructure, maximum consumption is of cement. And it will be done very fast. Secondly, the road connectivity also leads to cement availability in the rural area at the affordable cost.
Fair point. Yeah, fair point, Mr. Bangur. Just hold on. I want to come to Sunita Reddy also on the point of the extraordinary munificence shown expectedly to the state of Andhra Pradesh. There is going to be a lot of road development, 15,000 crore of additional spend on that state. I'm sure, Sunita, of course, you have hospitals all over the country, but I wouldn't be surprised if you had, a little more of an emphasis in the states of Telangana and Andhra Pradesh as well. What's your sense? Do you see, a greater deal of infrastructure activity in the state?
I definitely do. I think that with the leadership currently in place, with this allocation and the fact that there's a lot of foreign direct investment looking at this state, the signal from the center will only incentivize more investment, including healthcare infrastructure.
Yeah, there is also a lot. I mean, one of the many programs she announced also was industrial development and grants for water, power, railways, etc. There is, the Visakhapatnam corridor as well, which was mentioned. So the backward region of Rayalaseema is going to get some benefits. So all this will mean, of course, demand for everyone. And there is likewise a similar package for Bihar. So, Mr. Bangur, are these centers you sell to? Are these important centers for Shree Cement as well? And therefore, your reaction?
Yes, in Bihar, we are having the biggest factory, and Bihar was having consumption much lower than the Indian average.
Okay.
So even if the Indian average consumption comes there, and with road connectivity, with all these infrastructure and the money available there, because when money is spent, a lot of profit will be remaining with the people of Bihar. We expect Bihar to grow much faster. And moreover, this budget is a continuity not only to be seen for this year, but for next 5 years. It is a groundwork. This year it is Bihar and Andhra. Next year it may be some other states. Now, full India will be developed in fast mode.
All right. Hi, Mr. Bangur, and welcome to the show. This is Nigel on this side. A couple of questions with regard to demand first. Post this, you're sounding quite optimistic with regard to the steps that have taken. So, industry demand, What are you focusing on? It should grow by around 8 to 10% for this growth this year, if you could confirm that. And also, would you have liked some more focus on the green energy side? Because companies like you are putting a lot of money, a lot of focus on that side. Since prices are not moving up, maybe some relief on the cost side?
Yes, 8 to 10% demand growth is expected. And as far as the renewable energy, it is because so many things are being said. One important point of incentivizing pump hydro that has been missed. So a lot of work has to be done and is being done for seeing that the renewable energy remains relevant. And if additional energy is produced in the off time, then that can be stored and reused. So the renewable energy is definitely the future.
Okay. The other important announcements in the budget, of course, have been on capital gains. Mr. Bangur, basically, as from a finance standpoint, for a company like yours, are there any differences at all if long-term, short-term capital gains change and indexation of property is gone? Do all these make a difference to a corporate, or is it largely an individual's headache?
It is largely an individual's headache. We have to, every time we normally talk about how the collection is made. This time the budget has to be focused on how the spending will be done. There is very little thing has been done, small changes in collection side.
Okay.
For individuals and for the specific cases, it will be big. But overall, it will have not much meaning.
Okay. Sunita, I want to come back to you on that very important point you raised, that all the advantages of skilling and the subsidy given by the government for corporates that have new employees, I think about 1 crore employees at least for the next 4 years. If you can tell us whether this is this will mean what, more nurses, more sub-staff for the hospital industry? How do you see it playing out? And will it make a very big difference in terms of increasing the number of hospitals and help?
Oh, definitely it will, because especially at Apollo, where we're adding 6 hospitals, at least 2,000 beds, I could quantify the difference, and let me say it's meaningful. So not only from staff that are from the back office to those that are consumer facing, I think this will be a huge benefit for the healthcare industry.
Okay. Now, would this actually make you employ more? I mean, employment is always a budget which you have to keep in mind among other things. But will this be an incentive to employ more people, especially at the new joinee level?
Yes, I think it is definitely an incentive to employ more. But more important is that you have to think of the ripple effect. When you do one healthcare job, there are 4 ancillary jobs that are being created. So the impact on the industry will be large.
Fair point. Sunita Reddy, thank you very much, and for giving us this human welfare angle or skilling angle. Mr. Bangur, similar question to you. Do you think this broadly encourages formalization of labor? There are a lot of lower skilled labor which companies, large companies, outsource to the staffing companies, and not all staffing companies are only looking at formal jobs. Do you think largely formalization of jobs will be increased?
Formalization job is one part, but my focus will be if they are there for 1 year in a big company, first 500 companies, the skill level there will increase tremendously, and they will be fit to be employed anywhere in any industry. So staying with these big companies for 1 year will definitely increase their skill level. And I am focusing on a skill level which is there, which will be increasing. Teaching the skill is best done by practical on-ground experience.
Okay. Any other comments you have on the budget, Mr. Bangur? Anything we may have missed asking you?
Not really missed. Only positive things is that this is the first step of the 5-year term. A lot of things that we are moving towards more on capital expenditure, which means long-term growth of the country. So we feel that short-term small pains will be there. Somebody will be disappointed this has not been done. But overall, when we see, it is that next year 7.5% to 8% growth also of the country may be expected.
Okay, all right. Mr. Bangur, thank you very much for joining us here. Appreciate your time here. Ms. Reddy, great to have you with us as well. on the program. Sajid, good afternoon. Prashant here. Good to have you back. By the way, have you had the chance to hop over to the on the equity side to figure out what the chatter is like there? Is it a lot about taxation or what is it?
Good afternoon, Prashant. I'm going to stick to the macros. I think this was both fiscally and financially very prudent, actually.
Okay. No, absolutely. Any finer points that you can tell us in terms of food subsidy, fertilizer subsidy, or the way in which expenditure has been distributed? We only asked you about the broad fiscal deficit, which has come down. But any of the finer points in terms of nature of expenditure?
Yes, thanks, Lata. So a couple of things. We now have some more detail. Remember, the deficit, if you compare actuals last year to what's projected this year, goes from 5.6 to 4.9. Now, the good news is that most of this is happening through either asset sales or happening from what I call the non-contractionary component of the RBI's dividend. Because a lot of that dividend came from interest earnings on foreign assets. A lot of that dividend came from FX revaluation. So what's important is to understand when the fiscal deficit is consolidating, how much of that imparts a negative fiscal impulse on the economy, how much of that is going to be contractionary. And the good news is because a lot of the consolidation this year is happening from the RBI dividend, you get a 0.7% of GDP consolidation, but only a 0.3% in terms of contraction. A lot is happening on the revenue side, number one. Number two, I think what you're seeing is the mix on expenditures continues to be healthy. Capital expenditure compared to last year goes up further from 3.2 to 3.4%. Subsidies go down. Revenue expenditure, ex-interest and subsidies, actually goes up compared to the interim budget. So essentially what's happened is the government had about 0.4% of GDP in extra resources compared to February. Half of that went towards non-interest, non-subsidy current expenditures. Hopefully that should boost rural demand, aggregate demand. Half of that went towards fiscal consolidation.
Okay, got that. But from an employment point of view, do you think, you must have just heard Sunita Reddy saying that it gives a huge fillip to the health industry because it is employment oriented and they will actually be incentivized to take new joinees because there is some kind of an EPFO subsidy. The more number you enroll into the EPFO, that is, the more formal jobs you give, there is some 4-year subsidy that is given to those companies. Do you think this really moves the needle on employment and therefore can have multiplier effects?
A couple of things that one is, I just make 3 quick points. One is, as we've discussed before, the key issue for private investment is demand. Right? So we have to find a way to boost demand. Now, there is no cyclical space, as we previously discussed. Deficits have to come down. Monetary policy has limited room given what's happening globally and with food inflation. So this will have to be, how do you structurally boost demand? And the structural demand has to come either from consumption or from exports. And to structurally boost consumption, you need employment. Now, why are today's measures important? Because, as I've been writing for the last year, if you look at the last 20 years in India, India's manufacturing has been becoming increasingly capital intensive at a time when we're undergoing our demographic transition. So just when working force population is rising rapidly the last 2 decades, capital labor ratios, this is ASI data, have continued to go up. Right? So the whole focus has to be, how do you redress the balance between capital and labor? I think today's steps are an important first step in doing that. How do we incentivize firms to hire more people and undertake less machines? Now, you'll need efforts both on the demand side and the supply side. And we saw some of that today. But there are some demand measures for firms. There are some supply measures. Skilling is important. Education is important. To be fair, this is 1,000 small steps. But some really important steps have been initiated. And I think today, the signaling is really important. That the focus in the next few years is going to be on employment, on skilling, on education, not so much on fiscal 0.5% here or there, but on what are the structural measures to redress the capital labor balance.
Okay, point taken. Sajid Chinoy, thank you very much for sparing time in what must be a very busy hour for you with client calls. But the point is that the needle has been moved on where it has to move. And just to add to what Sajid said, we should have been a country where labor has a huge advantage and therefore more labor is employed per unit of capital. What we were actually seeing in India, as Sajid points out, is for every unit of output, we are actually employing more capital than even some of the capital-rich countries and labor-scarce countries. So this capital intensity has to be moved away and therefore the incentives given to employing more people is in the right direction.
Yeah.
Now, how will it play out? Whether people will set up more hospitals will not depend on the subsidy. It will depend on the demand.
Absolutely.
So the point is taken that ultimately the economy has to show that demand growth, but the government has definitely done its job on skilling.
Okay, well, we'll take a quick commercial break here. We'll come back. We'll touch upon individual stocks and sectors which are moving. Ramdev Agarwal, chairman and co-founder at Motilal Oswal, is also going to be with us on the other side. We continue the budget conversation. Stay with us.
Government will implement following 3 schemes for employment-linked incentive as part of the Prime Minister's package. These will be based on enrollment in the EPFO and focus on recognition of first-time employees and support to employees and employers. Scheme A, first-timers. This scheme will provide 1 month wage to all persons newly entering the workforce in all formal sectors. Direct benefit transfer of 1 month's salary in 3 installments to first-time employees as registered in the EPFO will be up to 15,000 rupees. The eligibility limit will be a salary of 1 lakh per month. The scheme is expected to benefit 210 lakh youths. Scheme B.
Okay, welcome back. Markets are down just 75 points. And, it's quite incredible, I have to say. Capital gains taxation, worst fears come true. Market sells off 400 points. And within 2 hours, not even 2 hours, we are basically down just about 1/3% or so. Big recovery. One of the big reasons why that recovery is happening, of course, is ITC. Mangalam is standing by. So there is ITC, where there is no change which has happened, and there are jewelry companies like Titan which are rallying on the back of changes which have happened. Mangalam is here to tell us the exact implications for both these sort of sectors and companies as well. Mangalam, take it away.
Well, from what we know of the budget so far, 2 things are clear. It's a positive for both gold and gold flake. Why do I say that? Well, for starters, Titan is the top nifty gainer because the basic excise customs duty on gold and silver has been reduced from 10% to 6%. And don't just look at it as 10% to 6%. If you take into account the incidence of GST, etc., the effective tax on jewelry actually is down from 18.5% to a little over 9%. So on that ticket size, it makes a very big difference. Remember this ahead of the festive season and ahead of all the key wedding dates that are there in the second half more than the first half is a big positive, especially after a dismal first quarter performance from Titan on account of lower wedding dates and poor consumer sentiment along with rising gold prices. This bodes well for them, as a result of which this is a positive for Titan. More so for Titan than the others is because Titan does not sit on any unhedged inventory on their books. So any reduction in prices immediately benefits them, protects them from any inventory losses as well. The second part, ITC. As always, no change is good news for ITC, but this time around, that was expected, but more importantly, any improvement in rural sentiment would aid their non-tobacco business as well. That makes it positive. What also makes it more attractive is the fact that over the last 1 month, irrespective of the move that we've seen in the stock price, over the last 1 year, the stock is absolutely flat, making it trading at close to around 26 times 1 year forward earnings, which is at a discount to, not only the FMCG index, but a lot of the other tobacco players which have seen a big surge as well. And finally, we have a big move on both gold and gold flake.
Right. I think we have Prime Minister Modi. Mangalam, thanks for that. Prime Minister Modi on the budget. Let's listen it.
पूरी टीम बहुत बहुत बधाई की पात्र है। साथियों, ये बजट समाज के हर वर्ग को शक्ति देने वाला बजट है। ये देश के गांव गरीब किसान को समृद्धि की राह पर ले जाने वाला बजट है। पिछले 10 वर्षों में 25 करोड़ लोग गरीबी से बाहर निकले हैं। ये जो न्यू मिडिल क्लास बना है, यह बजट उनके सशक्तिकरण की निरंतरता का बजट है। इन नौजवानों को अनगिनत नए अवसर देने वाला बजट है। इस बजट से शिक्षा और स्किल को नई स्केल मिलेगी। ये मिडिल क्लास को नई ताकत देने वाला बजट है। ये जनजातीय समाज, दलित, पिछड़ों को सशक्त करने की मजबूत योजनाओं के साथ आया है। इस बजट से महिलाओं की आर्थिक भागीदारी सुनिश्चित करने में मदद मिलेगी। इस बजट से छोटे व्यापारियों, एमएसएमईज को, यानी कि लघु उद्योगों का, उसकी प्रगति का नया रास्ता मिलेगा। बजट में मैन्युफैक्चरिंग पर भी बल है, इंफ्रास्ट्रक्चर पर भी बल है। इससे आर्थिक विकास को नई गति मिलेगी और गति को भी निरंतरता मिलेगी। साथियों, रोजगार और स्वरोजगार के अभूतपूर्व अवसर बढ़, ये हमारी सरकार की पहचान रही है। आज का बजट इसे और सुदृढ़ करता है। देश और दुनिया ने पीएलआई स्कीम की सफलता देखी है। अब इस बजट में सरकार ने एम्प्लॉयमेंट लिंक्ड इंसेंटिव स्कीम की घोषणा की है। इससे देश में करोड़ों करोड़ों नए रोजगार बनेंगे। इस योजना के तहत जीवन में पहली नौकरी पाने वाले युवा की पहली तनख्वाह हमारी सरकार देगी। स्किल डेवलपमेंट और उच्च शिक्षा के लिए मदद हो या फिर 1 करोड़ नौजवानों को इंटर्नशिप की योजना, इससे गांव के, गरीब के मेरे नौजवान साथी, मेरे बेटे बेटी देश की टॉप कंपनियों में काम करेंगे। उनके सामने संभावनाओं के नए द्वार खुलेंगे। हमें हर शहर, हर गांव, हर घर एंटरप्रेन्योर्स बनाना है। इसी उद्देश्य से बिना गारंटी के मुद्रा लोन की लिमिट को 10 लाख से बढ़ाकर 20 लाख रुपए किया गया है। इससे छोटे कारोबारियों, विशेष रूप से महिलाओं, दलित, पिछड़े, आदिवासी परिवारों में स्वरोजगार को बल मिलेगा। साथियों, हम सब लोग मिलकर भारत को ग्लोबल मैन्युफैक्चरिंग हब बनाएंगे। देश का एमएसएमई सेक्टर मध्यम वर्ग से जुड़ा हुआ है। एक प्रकार से एमएसएमई सेक्टर की ओनरशिप मध्यम वर्ग ही है और इसी सेक्टर से गरीबों को ज्यादा से ज्यादा रोजगार भी मिलता है। छोटे उद्योगों की बड़ी ताकत, उस दिशा में हमारा अहम कदम है। इस बजट में एमएसएमईज के लिए ईज ऑफ क्रेडिट बढ़ाने वाली नई योजना का ऐलान किया गया है। मैन्युफैक्चरिंग और एक्सपोर्ट्स इकोसिस्टम को हर जिले तक ले जाने के लिए बजट में अहम घोषणा की गई है। ई कॉमर्स, एक्सपोर्ट हब्स और फूड क्वालिटी टेस्टिंग के लिए 100 यूनिट्स, ऐसे कदमों से वन डिस्ट्रिक्ट वन प्रोडक्ट अभियान को गति मिलेगी। साथियों, ये बजट हमारे स्टार्टअप्स के लिए, इनोवेशन इकोसिस्टम के लिए ढेर सारे नए अवसर लेकर आया है। स्पेस इकोनॉमी को बढ़ावा देने के लिए 1000 करोड़ रुपए का फंड हो, एंजल टैक्स हटाने का फैसला हो, ऐसे कई सारे कदम इस बजट में उठाए गए हैं। साथियों, रिकॉर्ड हाई कैपेक्स इकोनॉमी का एक ड्राइविंग फोर्स बनेगा। 12 नए इंडस्ट्रियल नोड्स, देश में नए सैटेलाइट टाउन्स का विकास और 14 बड़े शहरों के लिए ट्रांजिट प्लान, इससे देश में नए इकोनॉमिक हब विकसित होंगे और बहुत बड़ी संख्या में नए रोजगार बनेंगे। साथियों, आज डिफेंस एक्सपोर्ट्स रिकॉर्ड स्तर पर है। इस बजट में डिफेंस सेक्टर को आत्मनिर्भर बनाने के लिए अनेक प्रावधान किए गए हैं। आज पूरी दुनिया में भारत के प्रति आकर्षण बढ़ा है और भारत में टूरिज्म के क्षेत्र में नई संभावनाएं बनी हैं। टूरिज्म क्षेत्र गरीब और मध्यम वर्ग के लिए कई अवसर लेके आता है। इस बजट में टूरिज्म क्षेत्र पर भी विशेष बल दिया गया है। साथियों, एनडीए सरकार ने पिछले 10 साल में ये सुनिश्चित किया है कि गरीब और मध्यम वर्ग को लगातार टैक्स से राहत मिलती रहे। इस बजट में भी इनकम टैक्स में कटौती और स्टैंडर्ड डिडक्शन में भी वृद्धि का फैसला लिया गया है। टीडीएस के नियमों को भी सरल किया गया है। इन कदमों से हर टैक्स पेयर को अतिरिक्त बचत होने वाली है। साथियों, देश के विकास के लिए भारत के पूर्वी क्षेत्र का संपूर्ण विकास पूर्वोदय के विजन द्वारा हमारे इस अभियान को नई गति, नई ऊर्जा मिलेगी। हम पूर्वी भारत में कई महत्वपूर्ण इंफ्रास्ट्रक्चर जैसे हाईवेज, वाटर प्रोजेक्ट्स और पावर प्रोजेक्ट्स का निर्माण कर विकास को नई गति देंगे। साथियों, इस बजट का एक बहुत बड़ा फोकस देश के किसान है। अन्न भंडारण के लिए दुनिया की सबसे बड़ी स्कीम के बाद अब हम वेजिटेबल प्रोडक्शन क्लस्टर्स बनाने जा रहे हैं। इससे एक और छोटे किसानों को फल, सब्जियों, अन्य उपज के लिए नए बाजार मिलेंगे, बेहतर दाम मिलेंगे, तो दूसरी ओर हमारे मध्यम वर्ग के लिए फल, सब्जियों की उपलब्धता बढ़ेगी और परिवार के लिए पोषण भी सुनिश्चित होगा। कृषि क्षेत्र में भारत का आत्मनिर्भर बनना समय की मांग है। इसलिए दलहन, तिलहन की पैदावार बढ़ाने के लिए किसानों को मदद की घोषणा की गई है। साथियों, देश में गरीबी समाप्त हो, गरीब का सशक्तिकरण हो, इस दिशा में भी आज के बजट में प्रमुख घोषणाएं की गई है। गरीबों के लिए 3 करोड़ नए घर बनाना तय हुआ है। जनजातीय उन्नत ग्राम अभियान सैचुरेशन अप्रोच के साथ 5 करोड़ आदिवासी परिवारों को मूलभूत सुविधाओं से जोड़ा जाएगा। इसके अलावा ग्राम सड़क योजना 25,000 नए ग्रामीण क्षेत्रों को ऑल वेदर रोड से जोड़ेगी। इसका लाभ देश के सभी राज्यों के दूर दराज गांवों को मिलेगा। साथियों, आज का बजट नए अवसर, नई ऊर्जा लेकर आया है। ये ढेर सारे नए रोजगार, स्वरोजगार के अवसर लेकर आया है। ये बेटर ग्रोथ और ब्राइट फ्यूचर लेकर आया है। आज का बजट भारत को दुनिया की तीसरी सबसे बड़ी आर्थिक ताकत बनाने के उस पूरी प्रक्रिया में कैटलिस्ट का काम करेगा। विकसित भारत की एक ठोस नींव रखेगा। सभी देशवासियों को बहुत बहुत शुभकामनाएं।
Right. Well, that's Prime Minister Modi really sort of laying out the vision and the intent behind all the announcements which have been made in the budget. Gautam Trivedi is now with us. He's, of course, manages Nepean Capital. Gautam, great to have you with us here on the program. Appreciate it. I have to say, it's quite incredible. The market briefly traded in the green. We kind of fully recovered that 400-point cut of the Nifty. We went back into the green, and now we are flat, down about 40 points or so. So actually, the reaction on a day when capital gains taxes on equities have increased is even better than the 4th of June, when you had that election surprise, when the market was down significantly, right? Unimaginable 10, 15 years ago, actually even 5 years ago, but that's the kind of market we are in. Gautam, your thoughts on, of course, what you're seeing on the market, but more importantly on the taxation bid itself. What does it do beyond today?
Frankly, I like the budget, and I think maybe a bit of a minority given the way the markets reacted. But the fact is, it's not populist. Strong emphasis on infrastructure, agri, bringing back hopefully rural demand. So I think the entire debate, and I've had this, since 12:30 or so when the budget ended, till 5 minutes ago, I've been on multiple calls with friends in the industry discussing the short-term capital gains tax increase to 20%. Frankly, I think it's a good move to cool down the market. The market needed some sort of a indication from the government. The SEBI chief, of course, has been talking about it for the past few weeks. I hope that now the SEBI ends up also carrying forward some more strictures to rein in the F&O market, rein in, of course, the overall excessive speculation that's going on in mid and small caps. So, sorry, go ahead.
Yeah, Gautam, I guess the market has taken a very sanguine view of everything that's happened.
But let's say usually sort of, news of this magnitude is digested over a couple of sessions. So my question really is that let's move beyond tax for a minute. I think the market was prepared for a tax hit to be delivered, and it was delivered. So maybe to an extent it was getting factored in. But even if we move beyond, the capex numbers have not changed. They are where they were in the interim budget. So that kind of a major bazooka is no longer coming in. And obviously there is a lot of stress on social sectors, on agriculture, on MSMEs, etc. The question is, what from here? I mean, the dips are getting bought on the assumption that this market will just keep running on steroids. But do you think that's going to be the case?
Yeah, so I think you make a fair point, Surabhi. The fact is, I think the fund flow is not necessarily going to significantly slow down just because of this 20% move on the short-term capital gains tax. And the fact is that new investors are entering the market, newer investors are discovering the equity markets. And, I think the fact is, as I said earlier, the government and the SEBI will have to bring in some degree of curbs. I don't mean kill the market, but basically bring in curbs that will shift the momentum away from speculation to long-term investment. And that's really what this market needs. But having said that, the future of this market, as has been the case for the past 3 years and for the next 10 years, a lot of it will be focused on fund flows. So if the fund flows from the domestic side were to slow down, hypothetically, let's assume for a minute, if that were to happen and valuations start to cool off, I see money in a big way coming in from foreign institutional investors.
Gautam, hi. A quick word on real estate. That's a sector which is taking the biggest knock today. The Nifty Realty Index is down over 3%. Your quick take on what's been announced. Is it time to book profits in real estate stocks because they've had a fantastic run? And is it going to be incrementally very negative? The fact that on long-term capital gains, even though the tax rate has come down to 12.5%, there is no indexation. So on the margin, how negative is it?
Well, it is negative for people who are sitting on properties. Let's assume for a minute your grandfather bought a property in Midtown Mumbai, as an example, 50 years ago for 1 crore. And that's now valued at 30 crores, as an example. So you're paying now 12.5% on 29 crores if you were to sell that property, that asset. So I think that for legacy properties, obviously, is a negative. But having said that, there are a lot of first-time buyers or people moving into newer homes, and prices are pretty elevated at this point of time. So if you're looking at 10 years out of what property prices will be in the neighborhood that you bought your property, that's a very longer-term view on where the real estate market could be. So my view is it will impact legacy properties and less so newer acquisitions.
Well, take that point, Gautam. It appears very, very negative for those legacy properties. Earlier, they're getting the benefit of indexation, and now that goes out of the window. It could impact a severe amount of tax it could be attracting. Well, let's get in Dharmesh Mehta as well of DAM Capital. Hi, Dharmesh. Good afternoon, and always good to see you on the show. Tell us your first take, first of all, on the budget. Taxation, you asked, I think, 9 out of 10 people, they said they won't tinker with the STCG or LTCJ. They've done that. Your view?
Well, the bigger disappointment is that you increased the long-term capital gains, but you didn't remove the STT, which was in lieu of long-term capital gains. So first we brought in long-term capital gains, which was not there. Then they increased they brought in STT that time. Then we moved it to 10%, and now we moved it to 12.5%. Ideally, they should have removed the STT part, but it is what it is. It's 25% rise in long term, so it's a big hit to the markets. But people don't come here for 2.5% increase or decrease in the tax gains. Basically, people come here if they see they're going to make money in the long run. So this whole negative impact on the taxation will be forgotten in next 2 days, and markets will be back to normal. And people will start looking at the economy and what kind of growth profile we have and what are the valuation in the market. So the taxation is negative, but it'll be forgotten in next 2 days.
I mean, if I can dare say, I think people are already shrugging it off. The market traded in the green and, unimaginable, right? I mean, sometime back, the fact what has happened and how the market is reacting. So incredible resilience. There is no two ways about it. I'm going to come back to you, Dharmesh and Gautam. Let me welcome in Ramdev Agarwal as well, Chairman and Co-founder of Motilal Oswal Financial Services. Ramdevji, good to have you with us here. When you were with us on the program, you were jokingly saying taxation always is a googly, and we don't know. And one hope you're saying you hope nothing is done, things are going great, etc. It's both have been done. Everything has been done. STT on FNO and short term, long term. Your view in terms of how this changes anything, if at all.
Yeah, so we are open to tinkering of everything any point of time. So there are two things. One is capital gains, and then second is the capital gains tax. So markets are all about capital gains, and that story is not impacted. The good thing is that capital gains per se will happen irrespective. And then once you have the capital gains, then whether short term, long term, speculative, then you pay a little more. So I think as far as the market side is concerned, where capital gains are made, I think that is pretty much protected. That's what I would think, because capital gains is about corporate earnings growth, liquidity flow. I mean, those things that story is very intact. So I would think that they are looking at it, that the real boom is happening in stock market, and hence let's take cream off the top, and they have increased the long term, short term. I think speculative gains, in any case they are taxed at the marginal rate. There is no more scope. But I think the biggest story is about the buyback. If the buyback tax has been abolished and it has to be taxed in the hands of recipient, in that case all the buybacks will go, instead of 20%, it will go to 12.5%. So where is the dividend now? Which management would be encouraged to pay dividend and get taxed at 38%? So I think there is going to be a massive arbitrage between 38% and 12.5%. So let's see. I mean, we have not seen the fine print. Only abolition of buyback tax has been removed. So it will be in the hands of recipient. But let's see. I mean, what is there?
You know, Ramdev ji, actually I was looking at the fine print because I was looking at a lot of these tax issues that have happened. The fine print says that buybacks are going to be taxed as dividend in the hand of the recipient. And what is the prevailing regime for dividends? It is the slab rate. And the highest slab rate for high income earners is 38% right now as per the new regime. So I think the current interpretation is the arbitrage is completely gone. Even if you want to enjoy income from buybacks, you have to pay 38% tax. I think the difference is that what they're saying, that the cost of acquisition of that share that you'll eventually tender in the buyback, that will be treated as a loss. So you can offset that loss against your other capital gain. That's the fine print that I got. I mean, speaking to a lot of tax experts after the speech. But my question, just to come to Mr. Agarwal's earlier point, sir, you were saying taxes are fine as long as there is capital gain. So let's address that. Does the rest of this budget give enough impetus for this market to really move into a new trajectory? The flows are there. We've discussed that with you. You're saying taxes can be handled. But what about, fresh impetus?
Yeah, so that is due to the corporate earnings. So they have done nothing which will hurt the corporate earnings. If anything, because there is a dole out to all sections of society, I think there will be some impetus to the consumption, which in any case was reviving from the rural side. That's what RBI governor was saying. The revival was there and with a good monsoon and hopefully little lower interest rate. I think, and the handouts which we are seeing across through the standard deduction and rationalization of rates, I think there will be some money in the 25,000-30,000 rupees in everybody's hand to spend more. So hopefully there would be some at the margin, some impetus to the consumption.
Ramdev, this is Reema here. Did you speak to any foreign investors? What is their take? Because for them, the post-tax attractiveness of the Indian equity markets comes down, especially when you're competing with other emerging markets where you don't have long-term capital gains tax to begin with.
Yeah, again, I think it is a capital gains tax, but I think like any other investor, they would also be more interested in the capital gains first and then capital gains tax. So if the macro story of corporate earnings growth of about 15 to 17% that remains intact, I would think that this negativity which has developed for few hours right now, it will be shrugged off maybe in a day or two. That's my thinking.
But Ramdev, the problem is, FIs were sellers till say 2 months ago, and you had made this point, they'll come in at higher prices. They did, and suddenly out of nowhere this taxation comes.
Yeah.
It could derail the story a little bit, because in the last 1 month or so, India's been standing out. We have even got a couple of $1 billion. Other emerging markets, actually, they've seen selling. You expect them to keep the faith and they'll take it in their stride?
I would think so, because see, right now the story is that of not capital flow of foreigners, it is the more of the domestics. And actually for last 2 months, domestic flow has been record flow and investment has been very low. Actually, if you see the July month, domestics have not bought anything. And even in June, I think they bought little, but the flow has been extremely robust. So all the mutual funds are sitting on very good quantity of cash across the schemes, maybe 5%, 7%. So ahead of the event, knowing that there is going to be bad tax proposals, everybody was sitting on fence. My sense is that if the corporate earnings are not impacted, they have to come and buy because the flow is still on.
Yeah.
So it is the domestic flow which is going to decide the fate of the short-term direction of the market rather than the foreigner flow.
Right. No, got that. And it is all retail. I mean, Nimesh had put out a piece, I think this was last Friday, that mutual funds are sitting on some 1.25 lakh, crores on as far as cash levels are concerned. I mean,
but he also made the point that that's still about 5% of the AUM. It's just that the AUM has become so large that a 5% is still a mighty 1.25 to almost 1.5 lakh crore.
And it takes a lot more to move an index at 24,000. So yeah, I mean, that point is taken. But yeah, mutual funds are sitting on cash. Ramdevji, just a quick word on real estate. This entire indexation benefit being taken away. I know you're not a big fan of sort of real estate in that sense, for other reasons. But what is your sense?
Incidence of tax. I think they don't have any intention to give any tax break to the guys who are making capital gains. They have definitely increased the taxes for anybody who has got the capital gains, whether it is the real estate, whether it is shares, everything. So, I'm quite sure it will be detrimental to every asset class if you look at from the prism of capital gains.
Dharmesh, just react to those 2 points. One is attractiveness, as Rima was saying and Ramdevji was also pointing out, from a foreigner perspective, how does this LTCG hike make any impact? Does it have any impact? And second is the change for real estate. What are the implications in your view?
See, as Ramdevji rightly mentioned, people come here for capital gains, not worry about what tax they pay. So if they see they can make decent returns of 20, 30% or more, they're happy to pay more 2.5%. And generally, the long-term FI holders don't come in any country just because of tax benefits. First objective is to make money. I think so that story is intact, as Ramdevji mentioned, and I think so government has not done anything which derails that story. Now, just one more point on the buyback. When we were talking about buyback taxation issue, I'm still confused what happens if the company announces a market buyback.
Correct.
Nobody knows whether you're selling in the buyback or you're selling in the market.
Yeah.
So what you may see is that the tender may shut down, but the normal buyback may continue. In fact, this is the good positive news for actually companies to do buyback from the market now. Because then they're going to be taxed at a lower rate and the investor will be taxed at, if it's long term, at 12.5%. Not the 40% dividend tax which they are paying.
So if you're selling in the market, you get taxed and you don't know who's buying on the other side. So both seller and buyer used to end up paying the tax, right?
Yeah, but I'll pay a long-term tax, right?
Yeah,
correct.
Pay
dividend tax or a 40% tax.
Correct.
In fact, I'm happy to sell in the open market and instead of in the lieu of the buyback through tender route. This is what I understand from the fine print. They're not mentioned what happens when you sell in the market.
Okay.
So you just shut down the tender route, buyback route, nothing else.
Okay, so buybacks through the open market. And in fact, that was one of the asks that, do away with this so that confusion sort of doesn't exist. But what we've got is a very different facet. Dharmesh, just the point on real estate as well, till there's further clarity and absolute clarity on this indexation piece. I mean, what's your sense? To any extent, does it lead to a slightly more medium-term cool-off when it comes to property stocks? What is your expectation on this?
Well, as I understand, the newer properties won't get impacted, right?
Correct.
So if I'm buying the newer companies, I'm buying for the new projects they're launching, not for the old ones which they have. So this is bad news for the individual owner, which owns because of ancestral property or he's been owning from last 10, 20, 30 years. But the new projects coming in won't be, getting that tax issue.
So you think that this is
in the coming budgets that can change also eventually.
So you think this is more of a knee-jerk? Because, I mean, the overall announcement seemed a little negative without indexation, but you think this is more of a knee-jerk from a, real estate stock point of view?
Yes, the stocks you're buying here are for the future growth rather than the past.
Okay.
Got it. Ramdevji, any other sectors your team is highlighting? I mean, there's something done for gold. Stocks are rallying. Any other sectors come to mind?
I mean, I heard the entire budget speech. What we could figure out is that, of course, the gold jewelry has become, I think, the taxes have gone half in that, from 18% to effectively 9% or something. I think your own analyst was saying that.
9%.
So that was one, but basically there is no relief anywhere. I mean, there is no freebies anywhere unless something by mistake, like this buyback thing, I think the buyback thing, if you do the open buyback in the marketplace and you surrender shares and you pay 12.5, I think it is the end of dividend. I think just the arbitrage is too big. And the dividend is not decided by small guys. Dividend is decided by the management. So if the management has to pay 38% of the dividend and if you have to pay 12.5 for the buyback, I don't know what will be the story of dividend. So I think it's a much broader issue, much bigger issue, because in dividend discount model, dividend is everything for the market. So it's a big thing. I think the subject, whatever they might have proposed, even if there is some loophole or unintended benefit which we are seeing, I think they will try to plug it and make it as tax intensive as the dividend is right now. So once that is done, then there's no arbitrage. Otherwise, there is a massive arbitrage.
Right. Ramdev, since you're saying this is a big issue and a broader issue, can you, in very simple words, explain what has happened and what is this arbitrage? I mean, how does this work?
Yeah, so, dividend is decided by the management.
Correct.
Now, management declares dividend looking at their own corporate tax rates. Okay, they pay 38%. So if they can buy back they can surrender some shares and buy it back through the company money at 12.5%. So they would do that. No, one thing is it reduces the number of shares in any case. So the EPS of the future outstanding shares in any case go up. Is the healthiest thing to happen. But I'm doing both the things right, in the sense that I'm cutting my tax rate and I'm reducing the number of shares in the marketplace while holding the same percentage of the company. So I think it's a huge arbitrage. I think let's see in what form finally it comes. Right now it is just a proposal, abolition of dividend distribution tax. But when it is in the hands of recipient, how the exchequer is defining it so that there is no arbitrage left between dividend and buyback. I don't think they have intention to make buyback very attractive in the hands of management vis-a-vis dividend. That is not the intention at all.
No, I take
but let's see in what form it comes.
No, I completely take your point, sir, because if that is sort of a backdoor route that the market tries to sort of come up with, perhaps we'll see more action from New Delhi in the next years and the subsequent sort of prints that come in. And remember, I mean, the budget still has to be passed, and a lot sometimes happens when the final sort of passage is happening through Parliament. Dharmesh, one more point. Now, angel tax has been completely abolished. Of course, you're in the deal market. You bring so many companies to the listed space, right? It's becoming very, very simple now, once again, for startups and unlisted companies to go back and raise capital in the private universe. Should this have any bearing on the IPO pipeline funding appetite? Because this is, I mean, I think they've got, amongst most participants, they've got the best deal. The whole tax has been taken away.
In fact, there's one more, tax announcement which has happened, which we are still trying to check, saying that, the unlisted segment now will be taxed at the long-term capital gains. So basically now, if you're selling before your IPO, you'll still be paying only 12.5%.
Absolutely.
Which was not the case right now, which was 20% right now.
So the private equity markets become very, very interesting, right? From an investor point of view, I had to write, I mean, up till now, it was 2 years of holding and paid 20% long-term gains on unlisted shares. But now it's 12.5%. So listed, unlisted is at par at 12.5%. What implications, what do you foresee in the coming weeks and months on the private equity side, both from the company standpoint and the investor appetite standpoint?
See, it becomes very attractive for private equity guys now to invest in companies because they get an exit route even before the IPO and at a much lower tax rate. So in that sense, it's very positive for the country also because more money can come in prior to an IPO, which is much required. So that overall, actually, it's a positive thing for the inflows to come in this. And this will be more long-term money rather than short-term money coming.
Yeah, no, got that. I think we'll wrap it up here. Dharmesh, thank you very much for speaking on this important day. Appreciate your time here. Ramdevji, great having you with us. Appreciate it. Gautam, appreciate you joining us as well. Thanks indeed. We'll take a quick commercial break, but you are watching our budget coverage from the CNBC TV18 Motorola Studios. We'll have Nilesh Shah of Envision Capital with us. He's right here. And Nilesh, thanks for waiting. We're going to come back after this break and continue the budget conversation. Stay with us. Welcome back. We were talking about how the Nifty had earlier come back into the green. Let's put the index up. We are 12 points higher on the Nifty. So just an incredible reaction. Who would have thought? I mean, at 9 o'clock, 10 o'clock in the morning before the budget, if you'd have told someone, well, this is what is coming and, what the market reaction is going to be, I don't think anyone would have said, we're going to be in green by 2:30 or 3 o'clock or whatever. So it's just that kind of a market.
Prashant, I'm sure you remember when we first had the 10% capital gains tax, and it was introduced in this country, it was 2018. We saw the market reaction, the jitters, the mayhem, the hue and the cry and the fall in share prices, right? Cut to 2024, I think we're in an absolutely different market.
Chris,
is this a day when capital gains tax has been increased? Is it really the day?
Looking at the market, you wouldn't know. I mean, you just cannot tell. Let's welcome Nilesh Shah as well, Managing Director and CEO at Envision Capital is with us. Nilesh, good to have you with us here. Just incredible, right? The reaction.
Absolutely. I think it's good. I think it's good that the market has been able to absorb the hike in capital gains tax and some of the other provisions which have come in. So I think it's a big positive. It just shows that there is liquidity waiting in the wings. Any dips are being used to kind of buy into. Today has been a day not necessarily like the way it was on the election day outcome, where there was a sharp cut and then again a strong pullback. Today is a bit of that, but not to that extent.
I mean, if this reaction stays, the government would be thinking, thoda kam kiya hai.
And even STD, the STD rates have been practically doubled.
But that's for FNO.
Yeah.
See, I think there was also a bit of expectations that there will be hikes, be it STT or be it LTCG. I think there was some bit of expectation, and there were some which are probably in some bit of denial as well. So I think, yes, there's been a knee-jerk reaction to this, but then it's finally, again, business as usual.
Okay, all right, Nilesh, let's talk about stock sectors now, because now we look ahead, right? It's all about earnings, as even Ramdeo said. What do you like? The budget is digested. We get back to tracking earnings, global developments as well. The themes you liked, and will you alter your strategy?
So I think, Nigel, clearly, if I were to kind of look at the earnings season so far, tech essentially has been the place where there's been the maximum amount of surprise. And leave aside the top tier tech companies, but down below, the smaller tech companies have delivered far better numbers. So I think that continues to be a extremely interesting space, number one. Number two, if I were to kind of just look at the budget today, there are huge positives for MSME lending, in the sense huge amount of encouragement there for MSMEs, as well as the huge focus on urban housing. So that takes me to affordable housing finance companies or NBFCs focused on lending to MSMEs and giving out business loans. That, I think, is again becoming a pocket which has been strong so far. I think it just becomes more stronger with this budget.
All right, Nilesh, what was your view on real estate, prior to this event? Because for those who are holding those legacy properties, it's come out of nowhere. One would compare it to maybe an indirect inheritance tax, because all of a sudden you've got a property that's gone up multiple times and you were sitting easy, you're saying that I'll use the benefit of indexation. That's gone out of the window. So your view on real estate stocks?
So I think it doesn't have too much of implications for real estate stocks because they are dealing with new inventory and selling it to a fresh set of buyers who've got nothing to do with it.
Right.
If at all, it's actually a boost for them, because probably the guys who are selling may not want to sell real estate.
Okay.
Because now you are going to encounter a fresh set of taxes.
Right.
You don't have the indexation benefit. So if you sell, you probably might end up paying a higher rate of tax. So probably they might just kind of take a step back, let me see, may not sell. So to that extent, it's quite possible that the secondary market in real estate may kind of dampen a bit.
And then the primary market. So
and the primary market essentially gets a new lease of life.
Interesting.
So maybe a day or two the market may take to absorb this, and it might look sentimentally negative for real estate stocks.
Interesting.
But I think post that, it might actually lead to a fresh wave of demand for them.
Interesting.
Nilesh, is there anything in the budget because of which you will increase your weightage on consumption? Disposable income has gone up. There is a thrust on job creation. So post the budget, would you look to buy more consumer-related stocks? And which ones?
The only consumer-related sector which benefits quite phenomenally with this is the jewelry space. Okay, so across the board with the cut in customs duty, gold prices have corrected. That should essentially bring back demand. Also with increasing disposable income, essentially you basically want to allocate more to areas like jewelry, which is slightly more aspirational.
Okay.
So I think that's one sector which stands out.
But that sector, or some companies there are also facing competitive headwinds. So how do the two offset each other? And would you buy today? Would you recommend buying a Titan
Rima,
today, for instance?
I think jewelry is also facing the same fate as IT or private banks, where the big boys are facing competitive intensity. Their growth rates are no longer in double digits. They're getting relegated to single digits. There's already ownership in that space. But the tier 2 names, be it banking, be it technology, or be it now jewelry or some of the other consumer spaces, they essentially are able to grow at a much faster pace, and therefore fresh allocations are getting into the tier 2 names versus the tier 1 names.
I just want to highlight that broader markets are also very positive, and maybe we should just take a minute to highlight some of these large movers. Right? I mean, jewelry, of course, we've been highlighting. Look at something like an Angel One, right? Again, what was the fear? Taxation and regulation, etc. All of that has sort of come to pass. Stocks up 5.5%. To be fair, you could kind of look at it that, well, it's out of the way now, although not entirely, because on F&O, I think we'll still see something from the market regulator, SEBI, later, perhaps. But, that one is a big volume-led gainer. Then TeamLease is up about 11.5%. There is a lot of talk about sort of skilling and staffing, etc., incentives to companies to hire more in the formal sector. TeamLease is seeing a big 11.5% move. You got a few other sort of large gainers. MapMy India is up about 9%. I'm not sure if there's anything there. Nilesh, you want to?
So I think it's got to do with the digitization of the land records.
Digital public infrastructure and
that's
kind of mapping.
One is DP, and then there was a specific mention of digitization of the land records.
Okay.
So clearly that means more business for companies which are into geospatial technology.
NCC is another one, right? That package for Andhra, etc. NCC is up 10%. Stocks at about 347. It'll come up on your screen. You track this one, this space construction?
No, honestly, don't track it. No.
Nilesh, I just wanted, since we were talking about the jewelry stocks, I want to get that segment out of the way. We spoke about the stocks, but I also wanted to ask you about the financiers, the gold financiers. Since gold prices were moving up, I thought the indirect way of playing it was through the financiers, and things were looking pretty okay. Muthoot trading at 2.2 times. I think Manappuram was around 1.2 times odd. Suddenly, out of nowhere, these gold prices could come down because of the cut in duties. And in reaction to that, those stocks are getting a hard clonk in today's session. Your view on it?
Yeah, that's a bit paradoxical, Nigel, because when gold prices go up, the opportunity for them increases. But when gold prices comes down, the risk for them increases.
Right.
Because they have challenges of collateral, whether they have enough margin, especially on a day like this where gold prices have kind of got shaved off. They could have higher levels of risk if they don't have enough security. So yes, I think that's a bit negative for them. But again, I think these are things which just take a day or two for adjustments. And after that, it's again business as usual.
Let me ask you, what happens to the poster boys of the market? PSU, railway, defense, because there's no major increase in capex, but like Ramdev said, there's nothing materially negative also. So now this huge bogey that's been running for the last 1 year, what happens to this?
I think the fundamentals are still strong. The challenge is valuations. Many of them are now quoting as if they are like kind of those perma growth stocks, long-term technology creators types.
Yeah, disruptive, like changing the world with
and,
almost like AI, right?
Absolutely, so it's hard to differentiate between railways and AI or railways and data centers.
At least that's how they trade.
That's right. So I think that's where the valuation, I think the risk is valuations, but not the underlying fundamentals.
We should put the railway stocks up. Just look at these names, if you can quickly pull them up. RVNL is down 5, IRFC is down 4, IRCON is down 8, Railtel is down 5. So yeah, that's the but a lot of other PSU names. Mazgaon Dock is down about 4%. So at least today, and mind you, this is, these stocks do sort of go into a bit of a sell-off once in a while, but that usually lasts a day, 2 days. That's the history so far.
Counting day as well, right?
Counting day as well. Yeah. So, the shipping companies, Mazgaon is down 4. I think Shipping Corporation, Garden Reach, they're all down between 4-5%. Shipping Corporation is down 6.5% as well. So,
even defense names, BEL, for instance, is down over 3%. So the entire PSU cohort is under pressure across railways, defense, shipping, etc.
I think the PSE index would be the sort of biggest loser at this point in time, 1.25% lower on the CPSE index. Nilesh, any trades come to mind beyond today?
No, I think it still is going to be business as usual. I still believe that it's going to be the growth stocks which essentially kind of come back because that's what market is going to be looking out for. I think there's fair bit of froth which is there in some of the PSUs or some of the cap goods side where stocks are trading at astronomically high P multiples. I think they'll continue to witness pressure. There is kind of probably a bit of over ownership out there as well. So you're going to see money being taken off the table. You could see unwinding and money go back into the conventional growth space.
So just to complete that point on rotation, while cap goods come under some pressure, the FMCG trade, and the same thing happened, right? On counting day, it was all about the FMCG trade, but there was no follow through. Do you think this time it's going to be different? Because there are incentives that have been given, sweeteners that have been given to middle and the bottom of the pyramid.
Yeah, so probably they could stand out. But I still believe that there would be the space which is more likely to do better is going to be the discretionary space, the premiumization space. I think the aspirational space. I think that space will continue to do a lot better versus the conventional staples.
Okay, all right. Nilesh, request you to hold on to that thought. We have the real estate space that is calling for our attention, and Sonal joins us to fill us in with a quick analysis on that one. Sonal, the stocks are still down. They've come off a little bit from the low point of the day.
Oh, yes, they have. But, the news that has come by, that is in terms of the long-term capital gains tax rate that has been changed. It's a big cut that we're seeing, 12.5% versus 20% earlier on any property sale. However, the indexation benefit, that has been removed, and that is something which spooked the street when the initial announcement was made as well. The short-term capital gains, they stay at 20%. And the time period for property is 24 months and more, that is long-term, and anything below that is short term. Now remember, we have seen this big real estate rally in last 5 to 6 years as well, but the legacy houses, that is something, the legacy properties, that is something that could see an impact because you will not be able to adjust for inflation in terms of cost of acquisition. Then that would mean the tax outgo for any seller would be high, and that is something which is worrying the street in terms of maybe people will not like to buy houses, but of course that is the initial sentiment, but it has come in as a negative, and that's why this reaction on the stocks today.
Hey, thanks a lot for that, Sonal. Well, let's get into that conversation for the detail. We have Mr. Niranjan Hiranandani, founder and MD of Hiranandani Group, who joins us on the show. Hi, sir. Good afternoon, and thanks a lot for joining in. Well, the street is a little bit confused with regard to this. For the time being, it's appearing as a negative because long-term capital gains, that was 20%. It's come down to around 12.5%, but the indexation benefit is gone out. But the other way of looking at it is maybe supply gets curtailed, which in turn will be a positive in demand for new homes. How are you viewing this?
We view it very positively. We've been asking for matching the long-term capital gains tax with the capital markets for a long period of time. So historically, those who are investors into the capital markets or also in the case of real estate always looked at this differential of 10% to 20%, which was there in the investments into real estate. So I think the investor market will come back into real estate because of the long-term capital gains tax now being 12.5%. Yes, but for historical properties which are coming into the market, yes, they will have to pay much more for the purpose of it because indexation is sought to be withdrawn. So I think there is an issue of property sale which takes place. But anyway, I think 90% of the investor market would benefit from the reduction in the rates of capital gains tax. And I think that's a very positive move as far as this is concerned. The other part of it, which is very important for the investor market in the long run, is the issue which the finance minister has said she's going to emphasize to the state governments to reduce stamp duty and also other charges which are levied by the local authority and the state government, which is causing an inflation in prices which is unprecedented. So, for instance, in Mumbai, if you take 50% of the cost of expensive homes, they are all part of taxes, whether in terms of stamp duty, whether in terms of development charges, additional FSI which is there, all these costs are there. And that is also a thought which has come over there for the purpose of it. But affordable housing, those segments which comprises today a large part of the market throughout the country, is going to see a boost, 11 lakh crores. And I think focus urban areas, 1 crore housing in the affordable segment. We have to read the fine print as to how this is going to be done. Is it the same way? Is there a cap on the value of the flat, which was earlier 45 lakhs, which we expected to increase to 75 lakhs or 1 crore in order to benefit into metropolitan towns like Mumbai, Delhi, Calcutta, Madras? And overall, I do believe that interest rates, hopefully in the next year, with inflation coming under control, I think long-term investment into real estate will continue, and the benefit of capital gains tax will be shown for investors to come back from the capital markets to the real estate market.
Mr. Hiranandani, sir, just one quick clarification. For older projects, legacy homes which were bought in the 1970s, 80s, 90s, do the prices get reset to, say, 2000, 2004, as we were made to understand? And from there, the capital gains tax would be calculated at 12.5%?
No, now the reset will not take place, as you have asked. It will be counted on the basis of the cost of the house which took place when you purchased the house. So that is the negative part of it. So in reality, for those homes, when they are sold, they will still have to pay a tax. But if it is a single house and you resell it and you utilize the entire capital gains to buy a new house, then of course there is no tax in terms of it. It will be exempt from taxes. So there are various regulations to be done in terms of legacy homes. But legacy properties which are on sale will certainly have to pay a higher long-term capital gains tax, because some of them are inherited properties, old properties. So there will be no other benefit that will be there. There, the taxes will definitely be higher.
Okay, all right.
But all in all, I think real estate should go on the upside.
Okay, all right. Thanks for that perspective, Mr. Hiranandani. Always great to get that. There's about 30 minutes to go, a little over 30 minutes to go for market closing. We're up about 13 points and we're trading in the green. We'll take a quick commercial break here. We're going to come back. We'll have Jigar Mistry with us. Samir Arora will be with us as well, and many more perspectives in terms of what's happening in the market and what the budget does for individual sectors. Stay with us.
Coming to personal income tax rates, I have two announcements to make for those opting for the new tax regime. First, the standard deduction for salaried employees is proposed to be increased from 50,000 to 75,000 rupees. Similarly, deduction on family pension for pensioners is proposed to be enhanced from 15,000 to 25,000 rupees. This will provide relief to about 4 crore salaried individuals and pensioners. Second, in the new tax regime, the tax rate structure is proposed to be revised as follows: 0 to 3 lakh rupees, nil; 3 to 7 lakh rupees, 5%; 7 to 10 lakh rupees, 10%; 10 to 12 lakh rupees 15%, 12 to 15 lakh rupees 20%, and above 15 lakh rupees 30%. As a result of these changes, a salaried employee in the new tax regime stands to save up to 17,500 rupees in income tax. Apart from these, I am also making some other changes as given in the annexure. As a result of these proposals, revenue of about 37,000 crore, that is 29,000 crore in direct taxes and 8,000 crore in indirect taxes will be foregone, while revenue of about 30,000 crore rupees will be additionally mobilized. Thus, the total revenue foregone is about 7,000 crores annually. Coming to personal income tax rates, I have two announcements to make for those opting for the new tax regime. First, the standard deduction for salaried employees is proposed to be increased from 50,000 to 75,000 rupees. Similarly, deduction on family pension for pensioners is proposed to be enhanced from 15,000 to 25,000 rupees. This will provide relief to about 4 crore salaried individuals and pensioners. Second, in the new tax regime, the tax rate structure is proposed to be revised as follows: 0 to 3 lakh rupees, nil; 3 to 7 lakh rupees, 5%.
7%. But there has been a big recovery from that initial blow that came through just after the speech. We have Jigar Mistry of Buoyant Capital now joining into the conversation. Jigar, thanks for joining in. It's quite astounding, right? That's what we've been discussing, that this market has the appetite to digest almost anything. Election upsets, tax increases. What do you make of things? And, what would your sort of first thoughts be on what we've seen today?
Yes, good afternoon, Surbhi. So I think in terms of the broader math, I couldn't really make a huge difference between what the numbers were presented earlier versus now, right? So I think other than the RBI dividend, they have broadly allocated that to other revenue expenditure. And besides that, I think there's nothing really to take home. The only other point I could find was that transportation now is somehow the largest item on the RevX besides your interest payments, right? So after interest payment, transportation today is the second largest item. That share has gone up from almost 9% to 12-13%, which is a very large jump. And therefore, I think the businesses that they are doing well will continue in that space. I think the only other thing, if you want to sort of look at this, is that if you pull up the capital gains tax on an individual standpoint, but not on mutual funds, then essentially that will start creating a divide. If this stays at 20 or increasingly it goes up to 30%, then it would inherently make one asset class a lot better vis-a-vis even the alternative space. So I think that's one thing that people can take away from the entire budget things.
Okay. All right. I think, Jigar, good afternoon. Stay with us. We also want to get perspectives from companies which are impacted. We have the management of Senco Gold with us. And we also have the management of Muthoot Finance with us. So Mr. Suvankar Sen is CEO at Senco, and Mr. George Alexander Muthoot is, of course, head of Muthoot. Mr. Sen, gentlemen, good afternoon. Good to have both of you here. Thanks very much, Prashant, this side. Mr. Sen, if I can come to you first. So we have a jeweler and we have a gold finance company. The effective tax on gold drops from, including GST, drops from some 18% to about 9% now. Does this spur jewelry sales in a big way, Mr. Sen? Yes,
it would spur jewelry sales in a big way. If we really look at it, the way gold prices have moved up the last 1 year or so, it was creating a stress and a constraint in the pockets of consumers, especially the upper middle class, to come and buy jewelry. This relief that the government has given to the upper middle class would really enable them to buy jewelry, and we're all very positive about it, that the sales would go up.
Mr. Sen, 2 quick questions then. One, in your mind, how much do the gold prices come down by? Do you have a number, an estimate in mind? And 2, are you sitting on any sort of inventory which could offset this benefit?
So if you really look at it, 9% on a base of about 60,000, which is the international price, which 62,000 makes it to about 70 to 73,000. So the benefit that the consumers would get is around 590 rupees per gram, or 5,90,000 rupees per kilo. So that would be the extended benefit that they would get. Yes, over a period of time, gradually that benefit would pass on to the consumers. Maybe initially the benefit would be of 300 per gram, 350 per gram, and gradually move on to 550, 600 per gram kind of a benefit. That is number one. And in terms of the hit on the inventory valuations, any organized players would ensure that their inventory is hedged. So they would be hedging either on the MCX, or they would be hedging by taking gold loan from the banks. There would be some inventory which is prepaid. The duty would be already prepaid to the banks, and which could range between anything between 20-30% for a company to up to 60-70% based on how much of hedging is done by the company. So I think that those which are hedged on the MCX, there is a straight benefit, or I would say risk protection. And to that extent that it is bought from the banks directly, there would be some minimal impact. But the positive way to look at it is that the demand that would really rise up with the festive season coming in. We are towards the end of July. We have August, where Rakhi is coming in, and then September, October is the Dhanteras Diwali season. I think that consumers would be much more positive towards buying jewelry as a category, and the wedding season looks to be wonderful.
Okay, all right. So the street believed it's positive for Senco, and you're saying that yes, they're reading it correctly. But let's focus on the other stock. Muthoot Finance and other finances, they're under pressure. We have Mr. Muthoot who joins us on the show. Hi, Mr. Muthoot. Good afternoon, and thanks a lot for joining in. Well, the stock is under pressure. The street believes prices of gold will come down, which in fact could impact your growth as well as your book. Give us your first reaction.
Yeah, thank you, Prashant. But as I usually say, gold price is not the determinant for the gold loans. See, gold loan is somebody's need for money. And from the budget, I see that there is a lot of uptick in the MSME sector, a lot of business going in the MSME sector, the lot of credit requires for the construction sector, and also for the affordable housing. I think that should perk up the demand. Now, to talk on the prices, yes, when the tax goes down, the price of gold generally should come down a bit. But I'm sure in a week's time, 2 weeks' time, it will stabilize, and it's just a blip in the market. So that is the gold price. But of course, we are not very much concerned with the gold price, though, because the gold price is still very high, and people requirement for funds is better. So, but as the previous speaker was saying, there will be demand for gold will rise. People buy more jewelry, and finally, at some point of time, when they need money, they will bring the jewelry to the gold loan financiers for funding. So I don't think there is any huge impact. It's just a market sentiment which is happening. So it will be business as usual, probably in a week's time.
No, perhaps, sir. But I think at a time when gold prices have been soaring, going through the roof, this relief on duty perhaps just lets you buy that little much more, right? On that, let me just go back to Mr. Sen as well. Mr. Sen, you did mention, a rough sort of impact in terms of, the grammage. Any sense on what the immediate impact on sales could be? Because this has happened before we, get into the festive season. So the timing in that sense is going to be good. It will all be sort of, once the budget is approved, it will all be put into motion. So your sense on the impact, let's say in Q3, which is when the peak season sets in?
So I think that, this 9% reduction in value will automatically enable a 10 to 12% increase in business beyond what we were expecting. consumers would be like, anyway, thinking, procrastinating, postponing their purchase decisions. But the moment this has come in and the uncertainties continue to remain, the US elections are in place, the war across the world is still there. And, so those external pressures will always push the gold price upwards. So consumers should jump into the opportunity, those who have weddings towards the end of the year. And I believe that 10-12% increase in business immediately in I would say in a windfall manner or an unexpected outcome of this whole budget would be there. And if you look at the long-term part of it, we shouldn't miss out, as even sir was saying from Muthoot, that if you look at the agricultural sector, if you look at the way government is trying to support the women empowerment schemes, I think consumption overall would increase with infrastructure expenditures.
Right, Mr. Sen, if I can pin you down on numbers, you'd said 10-12% same-store sales growth, 20% top-line growth for the next 2 years. Will those numbers change?
See, those numbers would continue to remain. I wouldn't really,
you'll have more confidence on those numbers.
But the short-term impact, say, if we talk of July, August, September, I'm sure that there will be a short-term impact on the upside.
And you said about 9 to 10% perhaps increase in sales because of this relief that's come in. Gentlemen, thank you very much. It's a quick analysis and a very helpful one. Obviously, stocks are very excited. The market is excited when it comes to the jewelry segment today. Well, let's bring back Samir Arora into the conversation. He gave us that final warning in the final minutes going into 11 a.m. Something bad is going to come. But Samir, I mean, technically, maybe you can say something bad did happen. Yet look at the market's reaction.
I think, first of all, we should say hats off to our fund management and broker community. I think they should all go and learn from companies like ITC, which have been able to convince the government that, our smokers will stop smoking if you increase the rates, if you increase any duties, and therefore the government does not increase it on cigarettes. But our fund managers and brokers come on TV and say it's a one-day affair and a two-day affair. So if you keep saying that, the government will keep responding with higher and higher taxes till you say the fine balance has been achieved. But my first thing is, it's too early to say, because I remember 2018, which even the new guys in our market will remember. On that day, the tax rate was increased from 0% to 10% long term, and the market fell 0.2%. And then it fell some 15, 18, whatever percent, and the mid caps fell 30, 40%. So it's not like that. But what I'm saying is, this is hardly the day for us to say to the government that great thing you have done, because just look at it big picture. That we have, as a country, encouraged investment into gold. And the whole world, including India for 20 years, was saying, move away from gold and maybe even real estate a little bit to financial assets. So on the same day, we have increased taxes and whatever. But I have one more thing. I can bet anything that the long-term capital gains tax is going to 15% in February. Because you tell me in a big picture sense, let's say 20-year story, 10-year story, everything is frozen, that the capital gains tax is 12.5%. It makes no sense.
Yeah.
It could very well have been 10 in that case.
Yeah.
So you're saying it's going up to 15. But Samir, just very quickly, I think we'll have the FM speaking very soon. It's just, very, very quickly. So are you saying that like 2018, maybe we could have a delayed market reaction? But it's a very different market. I mean, look at who's driving the market. 40,000 crores coming into mutual funds every month.
No delay. There is no delay. It can't be falling that much, obviously. That much it may not fall because that time you are right, there were less foreigners, more foreigners, this, that, whatever. And actually the 2017 rally was also very big. But to say that everything is okay when you've increased all the taxes, but more than that, broadly signaled that there'll be another hike in Feb, according to me, because 12.5 is an odd number to have. If it was only this, you might as well have kept it at 10. It would not have made such a material difference to the world. So the good thing is the fiscal deficit, which is a very good number. Yeah. The second good thing is any word you say about tourism, doesn't matter whether it's one or two temples or two places. Every day we should invest in tourism because it's the easiest thing to do. I don't know why that is not made the number one sector of India, not in terms of my stocks, but in terms of where we have to focus, because there is so much low-hanging fruit. Just clean bathroom, just put Wi-Fi, just put some security, some clean, and you have 1,000 places where people can go and they don't.
Got it.
But otherwise, it was okay.
Yeah. Samir, you're telling us, you were telling earlier that bad news, more bad news, right? So 15% in February is what you're saying. And now, so direction of travel is higher, according to you. From a foreign investor perspective, how does it make Indian stock less attractive? Or what's the comparison in that sense?
No, it's very obvious. I don't know why people come and say it makes no difference. Let us say pre-tax. Oh, everybody says pre-tax will make money. So we are, as a market, if you can just see last many number of years, the Indian market in dollar terms has been making around 12%. Okay. And other markets, the good markets, the bad markets have been making 6-7%, and the good markets have been making maybe, like US has made more, but let's say broadly 9-10%. They are not making 2%. So now on that 12%, we put an average tax. And please note, please let us not say that the long-term tax is 12.5%. There's a surcharge. It's about 14.5-15% even now. I mean, not now.
Right.
It was till yesterday 11.9. So it will become, say, 14 point something. And say half will be 20% plus some surcharge. So you are reducing 12-15% per annum from the 12%.
Right.
So you are at 10.
Right.
So how can it not matter? Please explain to how it cannot matter that the other market was giving, let's say, 9 only.
Yeah.
And we were giving 12.
Yeah.
But when we give 10 and they also give 9, then obviously relative attraction goes down. I mean, it doesn't have to come tomorrow morning, but it is bad.
Got it. No.
And for what end game? To subsidize gold?
Yeah. No, points taken. Samir, let's listen to the finance minister who's speaking, and then we'll come back to you.
One. Second, if anything, the average taxation actually has come down when we say it is 12.5%. Because we've worked out for each of the different asset classes, each varied with the indexation. I'll ask secretaries to elaborate on it. But the point that we brought it down from below the average to 12.5, which is the lowest if you can look at the last several years, encourages investment in the markets. With that said, I'll ask Somanathan or who is going to elaborate, Sanjay, on the specifics.
So you had, there were, I think, 2 or more parts to your question. One was on real estate and gold and other assets. So earlier the rate was 20% with indexation. It has now been reduced to 12.5% without indexation. If you assume that the rate of return on real estate is typically above 10% per annum, and if you take inflation at about 4% per annum, the real rate of return was earlier, let's say, somewhere between 6 and 16% per annum in real estate. If it was 16%, 20% of 16% was being taxed. The effective rate was 16%. It has gone down to 12.5%. If the rate of return was 10% per annum nominal, it has also remained approximately the same at 12.5%. So actually there is either a reduction or no change in respect of the effective rate of tax on property and gold. Now, as regards the equity, yes, it has gone up from 10 to 12.5, but you'll also find that unlisted equity has gone down from 20 with indexation to 12.5 without indexation. Basically, we have a very, very simple, easy regime. All listed, all unlisted are at 12.5% long term. And all are at 20%, equities are at 20% and everything else is at applicable rate for short term. So yes, short term has gone up, and yes, long term has been rationalized. It has not necessarily gone up. And Sanjay, would you like to add anything?
One point I would like to add over here is that we also need to keep in mind as to the kind of people who are actually paying these taxes, the capital gains on the securities, the listed securities especially. And so over there, when we did this analysis for the year 22-23, we found that about 88% of the tax is actually coming from people who have an income of more than 15 lakh. 61% of that income is actually coming from people who have an income of more than 1 crore.
That is income on capital gains on this.
And we are all aware that otherwise, the standard rate is, about 30%. and for some it can go up to 39%. So this marginal, very small marginal increase is actually impacting only those, primarily those who have an income of more than 15 lakh rupees per year.
Okay, number 3.
On capital gains.
Ma'am, Timsi Jaipuria from CNBC TV18. You announced a very lucrative new tax regime with changes in tax slabs. A lot of new changes are there in the income tax side, on the revenue side. And in the speech, you mentioned that revenue foregone will be around 29,000 crore rupees, whereas government will now try to mobilize around 30,000 crore rupees. What will be these revenue mobilization measures, and from where do you think this foregone revenue will be recovered? If you can highlight, where are you foregoing the revenue and where are you going to recoup this revenue from?
First of all, it is not just because we've mentioned it in this budget, but the attempt to widen the tax net is something which we've been repeatedly saying, that India's tax net will have to be widened, whether it is in the direct taxation or indirect. Second, there are also now the PSU dividends which are improving because their valuations have gone up really high. And their performance is also now substantially increased. So revenue mobilization is not just tax-based, you have non-tax revenue mobilizations which are also coming up. Then we had, for almost now 3 years, been talking about asset monetization, which is not selling of assets, but optimum utilization of those assets which are lying in the form of unutilized stadiums or land which is available with PSUs which can be utilized for better purposes. That's a third one. Fourth, you're also looking at generating resources from newer areas. So in all those, the revenue is going to be mobilized better, and as a result of which the revenue foregone will be now made up for, is our expectation. We've said that in the budget. In my speech itself, I mentioned it. And I'm sure there are secretaries who will want to add to it. Sanjay?
Ma'am, I'll give the details. 37,000 crore, 29,000 crore in direct taxes and 8,000 crore in indirect taxes. So 29,000 crore direct taxes primarily comprises of 3 taxes, which is the increase in the STT only on derivatives, which is only on futures and options. And secondly, the buyback tax, which is to be now done in the hands of the recipient. While on the one hand, it will rationalize the tax and be more equitous and fair, because those who should be paying the taxes, higher taxes, in the higher income groups, they will pay higher tax, and those who are in nil tax category or in lower tax category, they don't have to pay a tax or a lower tax. While it does that, at the same time, it does bring in some revenue also, about 4,000 crore. And remaining, about 15,000 crore should come, from the capital gains taxes. On the indirect taxes, we are losing, as I said, about 8,000 crore primarily on the reduction in duties, especially in gold. There is a huge reduction from 15% to 6%. And then there is revenue foregone because of the personal income tax rates and the standard deduction being allowed in the new tax regime.
280, please. Backside, please. Give the mic.
Good afternoon, ma'am. This is Surabhi from Business Today. Ma'am, the angel tax has been abolished, which is a very welcome move. But just wanted to understand that one of the things the angel tax was also doing was checking money laundering concerns. So could you explain how these will be taken care of now? Thank you.
Thank you very much, and I'm glad to hear it is welcome. You've been raising this issue as with many others outside of media also saying, are you considering it? Although it was introduced during the UPA government, and it was introduced in 2012. 2 years had passed, and since after that, when we came in, we tried keeping as a good governance principle, government being a continuum. The tax continued. Although we tried giving carve-outs for startups and also making it simpler, bringing parity for the non-resident Indians, the way in which they've been treated as opposed to the Indian investments and so on. Today we've announced that we will indeed remove it. Exactly the details, Sanjay, would you want to elaborate on it?
Yes, sure, ma'am. So we should be aware that this is actually a tax measure. It's not really a money laundering issue, but money laundering issue was being tackled through a tax measure. So first of all, I want to clarify that this tax, there are other provisions in the income tax itself, first of all, to find out the source of these funds. Number two, there is already, the Prevention of Money Laundering Act, which continues to be in existence. So if there is money which is being laundered, money, being paid as a bribe or for use in, other purposes for terrorism, etc., there are enough laws, including the Nyaya Sahita, Bharatiya Nyaya Sahita, and the Prevention of Money Laundering Act to take care of those issues. While on the other hand, now some genuine money for investment, actually, there is this deterrent provision no longer exists, while provisions for money laundering remain, and they should be sufficient to cater to it.
I would add that there are also certain provisions of the Companies Act which can be invoked if there is deliberate undervaluation of shares. So there are other legal remedies. The balance here is between preventing money laundering but accidentally also preventing investment. So that balance is what we are seeking to get it right.
211, backside. Yeah.
Hello, ma'am. Prakash Pedashi from ET Now. My question is, will the increased STT be applicable from April 1 or prospective? And if from April 1, will there be retrospective tax calculation for the increased amount?
It's not retrospective. It is with effect from 1st of October 2024. So we are giving sufficient time for the exchanges and the people, who collect this tax to put their systems in place to be able to collect it. It's not retrospective, it is prospective.
13. 11. 11.
Ma'am, Karishma here from Business Today. Ma'am, congratulations to you and everybody. Ma'am, my question is on this special assistance to Andhra Pradesh and Bihar. 15,000 crore is the number that you've given for Andhra Pradesh for this financial year. Is there further assistance that you are looking at, or is it going to be need-based in terms of the amount?
I've already mentioned in the budget speech that 15,000 crore is coming through the multilateral development assistance, which we borrow from the multilateral banks, whether it is World Bank or ADB or AIB, whatever. And I've also ended that paragraph by saying further assistance will also be extended.
Okay, well, that's the finance minister. And we'll keep going back to the FM as they continue to address specific issues, really, which have been addressed and which have been sort of announced in the budget. But Samir is back with us. Samir, okay, I think Samir will be with us in just a bit, and we'll be able to go across to him. I just want to take stock of the market, which is down 42 points. Market breadth is almost absolutely unchanged. I mean, 1,300 stocks are higher and about 1,300 stocks are lower as well. It's a long list of PSU stocks which are facing the brunt. They're down anything between 5 and 7%, along with, a few others like gold finance companies like Manappuram, etc., which are selling off about 6%. Samir Arora is back with us. Samir, thanks for joining back. Just complete those points, that you were making. Interesting kind of direction you were going.
Sorry, I forget which one, but I was saying big picture,
yeah,
that if the system can understand and accept that, if you increase duty on cigarettes a little bit, then the gross collections go down because there is a sensitivity and elasticity. At some point, they have to do that for STT stroke capital gains taxes. Because just because our fund managers come on TV and say it doesn't matter, doesn't mean it doesn't matter. It matters. And there'll be that sensitivity at a point. But I think as an industry, we've been unable to convey that. Because the cigarette guys have been able to convey. That's why even when there is a need for taxes, cigarettes have been spared again and again. And we increased long-term capital gains by 2.5%. And I was saying one more thing, that 2.5%, and not just 2.5%, but the fact that it's a non-round number of 12.5% makes me feel that this is going up more to 15 maybe, or whatever, maybe 15 only. But it is definitely, this 12.5 is too much in between, and it's not a round number for it to be a long-term number for a long-term capital gains tax.
It's going up to a round number.
What I'm saying is normally taxes are not like this.
Yes.
That, that's what I meant. It'll be rounded up to 15.
We had these numbers. We had Ramdevji earlier with us who was talking about how dividends. He was comparing dividends and buyback. He was saying that, well, why should companies give out dividends now because of what is happening?
No, in fact, I heard that.
Yeah.
I think you guys clarified that it will be taxed as equivalent to dividend.
Yes.
So now there is no difference.
The arbitrage has gone away. But you know what? Another point that Mr. Ramdev made was that capital gains tax can be handled as long as there is capital gain. Now,
this is all story. I don't do stories, please. Even though Ramdev is my friend, I don't do stories. What does that mean even? I don't understand. As if other markets are giving negative returns. They are giving lower returns than India. But it's not that they are negative returns. And we can't keep looking at China in that sense, because if you look at China from 2010 to 2020, it outperformed India.
Samir, you made the argument on dollar returns. Big picture, next 2 to 3 years. Okay, so big picture, next 2-3 years, you're saying that the Indian market will at best give you just 10% return per year?
No, I don't say that. All I'm saying is that every time we do this, we reduce the relative attractiveness of India. That is all I'm saying. And that matters. It may not matter in 1 year, but it matters. According to me, in the last 5 years, we may think India has done well, but it has mattered in the sense that the foreign flows have been less. And why should foreign flows be less? Why should both not be there? You are making it less attractive. And at some point, the STT has to be counted in the taxes collected from the capital market activity or whatever, stock activity. We can't have those two as separate, because the private equity guys are not giving... the real estate guy might be giving in some form, but private equity guy is not giving you STT. Then why should we compare our taxes with him?
Point taken, Samir. There is taxation which has gone up, and sort of made sense of a lot of that. Samir, thank you very much for joining us. It's a pleasure having you here, and hope we can speak again soon on some of these aspects. As views get settled, and if there is any fine print, etc. It doesn't look like it. I think it's already pretty settled in terms of what has happened. We heard it from the finance minister earlier, and of course some of the secretaries there. But 30 points lower on the Nifty. We're at about 24,476 in terms of closing. Nifty Bank ends up 500 points down. That's a 1% cut. Doing much worse off as compared to the Nifty. 51,758 on the Nifty Bank. I think the broader market will come up on your screen as well. The mid-cap and small-cap indices. Mid-cap index ends about 0.5% lower, and the small-cap index ends 0.84% down as well. Lots of pockets of sort of stock moves. To be sure, some positive as well. Gold was one sector which was flying through the course of the day. Guys.
So Titan was up 6.5%. ITC was the top gainer. That also rallied 6.5%. Generally, consumption. So pull up the Nifty FMCG index. That had a gain of 2.5%. Names like HUL, Tata Consumer, higher. IT, not bad. It's a nearly 3% rally coming through on Infi and HCL Tech. Those two heavyweights. On the losing side, cuts on private sector banks like HDFC Bank, IndusInd Bank, Axis Bank, Asian Paints on the back foot today, and Bajaj Finserv too, down over 1%.
Okay, if we talk about some of the gainers on the mid-cap screen, and apart from the biggies like ITC and Titan, some of the companies that have exposure to Andhra, like NCC, for instance, 7% higher over there. Some of the travel and tourism plays like Thomas Cook have been up and about. Easy Trip about 5-6% higher. So those are some of the major ones. But otherwise, jewelry was shining bright from large caps like Titan all the way down to a Thangamel jewelry. Those are the stocks that were up and about. Teamlease and all the talk of upskilling. That stock was up about 12.5 as well. Quick check on PSUs because that's where a lot of money was coming off. Look at Aircon 7% down, Railtel 5% down, RVNL, IRFC, Hoodco, NBCC. PSU party cooling down today.
Oh, that's right. There are a few more stocks that did well. Indus Towers was up and about in today's trading session. There was an official MSCI announcement that was out. Expected flows in the next few days, 24th, and it'll be effective from 25th out. So that stock as well did pretty well. Suzlon was up and about. That was up close to around 5% in reaction to its numbers. We'll speak to the management tomorrow as well. And MTNL, the stock, it just in the last 1 month or so has doubled. So that's the way that one has moved.
Okay, I think that's the market close, and it's not a bad close at all, but it is sort of, the day of the budget, 30 points down and nothing. 24,476 is where the index is finally left off at. It's a wrap on at least the market programming here from all of us. Thank you very much for staying with us through the course of the day. But programming will continue. Lots of important interviews, lots of important interactions and perspectives continue to follow here on CNBC TV18.
Bihar has frequently suffered from floods, many of them originating outside the country. Plans to build flood control structures in Nepal are yet to progress. Our government, through the Accelerated Irrigation Benefit Program and other sources, will provide financial support for projects with estimated cost of 11,500 crore rupees, such as the Kosi-Michi intra-state link and 20 other ongoing and new schemes, including barrages, river pollution abatement, and irrigation projects. In addition, survey and investigation of Kosi-related flood mitigation and irrigation projects will be undertaken. Assam grapples with floods every year by the Brahmaputra River and its tributaries originating outside India. We will provide assistance to Assam for flood management and related projects. Himachal Pradesh suffered extensive losses due to floods last year. Our government will provide assistance to the state for reconstruction and rehabilitation through multilateral development assistance. Uttarakhand too suffered losses due to cloudbursts and massive landslides. We will provide assistance to the state. Recently, Sikkim witnessed devastating flash floods and landslides that wreaked havoc across the state. Our government will provide assistance to the state. Pradesh Reorganization Act. Our government has made concerted efforts to fulfill the commitments in Andhra Pradesh Reorganization Act. Recognizing the state's need for the capital, recognizing us.
So right on Dalal Street as the Sensex and Nifty recovered in late trade after a sharp drop. Union budget has hiked short-term capital gains tax to 20% and long-term capital gains tax to 12.5%. It's also hiked the securities transaction tax, that is STT, on the futures and options segment.
Real estate stocks slide as the sector loses the benefits of indexation, but long-term capital gains tax has been reduced from 20% to 12.5% on property. Short-term capital gains tax on property sale unchanged at 20%.
Shares of Titan and other jewelers rally after the government proposes to cut the customs duty on gold and silver from 15% to 6%. But shares of gold financiers struggle as the fall in gold prices is likely to reduce growth visibility.
Shares of ITC rally in trade as the budget leaves the tax on tobacco unchanged. A potential recovery in rural demand can also boost the FMCG business.
Well, it's been a busy day. Hello and welcome to this budget special. So over the next 30 minutes, we hope to wrap out everything which happened, what matters to you, what matters to markets, investors, corporates here, sector by sector, measure by measure. And we'll have our research team to help through the course of the next 30 minutes. I'm Prashant. With me, Surabhi Padya. Surabhi, hi.
Hi, Prashant. And the big headline was that hike in taxation. Capital markets did get a jolt, a dual jolt, if I may say, because capital gains tax has been hiked long-term and short-term, and the securities transaction tax has also been hiked. Let's listen into the finance minister announcing these changes.
Short-term gains on certain financial assets shall henceforth attract a tax rate of 20%, while that on all other financial assets and all non-financial assets shall continue to attract the applicable tax rate. Long-term gains on all financial and non-financial assets, on the other hand, will attract a tax rate of 12.5%. Security transaction tax on futures and options of securities is proposed to be increased to 0.02% and 0.1% respectively. Second, for reasons of equity, I propose to tax income received on buyback of shares in the hands of recipients.
Well, that's essentially the finance minister announcing those changes. The market reaction has been quite incredible. If you've not been tracking markets and you're looking at things now, you will not know that some of these changes have happened, that equities capital gains taxation has gone up the way it has, because the market was, I wouldn't say unfazed, but there was only a brief reaction, very short-lived reaction. Nifty went down almost 400 points immediately after the budget announcement on capital gains, only to recover very sharply. And in terms of points, nothing at all. Nifty Bank was perhaps the bigger loser, and the Nifty, of course, lost a little bit. Mid-caps and small caps also coming under only a slight bit of pressure. We were talking about how the reaction to the election shocker on the 4th of June, actually after the 4th of June, was quite incredible because it was a one-day cut. And then, of course, the market rallied back on to newer highs. In this case, it's actually been even better if you just look at what has happened today, because absolutely nothing. If you didn't follow the news, just looked at the prices, you'd be absolutely... no one can fault if you did not guess that there has been some changes to the capital gains regime, really, which has come through. Lots of movers in terms of specific stocks and sectors, Surabhi.
Oh, absolutely. And topping the list today in terms of the way down was actually some of the larger banks.
Yeah.
The Nifty had a very flat sort of a day. The Bank Nifty was down about, 1% or so. But if you look at the rest of the market and where the gains were coming in, basically it's consumption and gold stocks. They were the toast of town. Titan 6.5% higher. Even smaller jewelers like Senko, Thangamil jewelry, all kinds of jewelry stocks are flying because of the reduction in customs duty. ITC was rallying because obviously there's relief. There is no change in taxation on cigarettes. And in general, a lot of the consumer names saw some takers because there has been that much more given at the bottom and the middle of the pyramid in the form of even some of the personal income tax changes. The other gainers of the day included like the likes of Infosys, HCL Tech from the IT pack. Like I mentioned, Lever, Britannia, Tata Consumer, these were the FMCG names that stood tall. What was noticeable was the PSU side of the market, by the way. The capex number remains unchanged from the interim budget, and it was a cool-off day for all kinds of PSU names, including Railways, IR, CTC, RVNL, and even some of the defense stocks. So those were some of the highlights. And by the way, tourism, didn't mention tourism. So if you look at names like Ease My Trip or Ixigo, the recent listing, or even some of the hotel stocks, delighted and jubilant because there's been a lot of talk about further impetus, particularly on the religious tourism circuit in North India. But let's kick it off with the big shining story on gold. Gold financiers Muthoot and Manappuram were under a bit of pressure, though, of course, the gold jewelry stocks were up and about. Abhishek is here with the fine print. Abhishek.
Well, to begin with, in the budget, gold and silver basic custom duty has been cut to 6% that it was for 15% earlier. So there is a 9% cut on basic duty that you are seeing. And this can impact the gold price, which will begin to fall or will fall in the near future. So lower price related growth does not compensate well for gold financiers. Whenever prices decline, they get impacted, that there is not much of customer who would come and want to take gold loans from them. Gold loans typically do work well when the gold prices are on the higher side because customer gets better value of loans or more loans on their same quantum of gold. So hence growth visibility actually reduces in the near future for gold financiers, and that is why there was this acted as a negative catalyst for gold financiers like Muthoot Finance as well as Manappuram Finance, although Manappuram has just 50% of its AUM with respect to gold financing. Back to you.
No, absolutely. Abhishek, thanks very much for that. That's helpful. I mean, stocks did well on the jewelry side and, of course, hurt on the financing side. Let's take a look at the real estate space as well. The real estate index tumbled over 3%. Sonal is here to tell us the key announcement which mattered for the sector. Sonal, take it away.
Thank you so much for that. Well, the biggest announcement was that the long-term capital gains, the rate on sale of property that had been reduced to 12.5% to 20%. While it's a tax rate cut, the indexation benefit that was removed, and that is something that worried the street. Now, indexation is nothing but an adjustment made to cost of acquisition, adjusting for inflation as well. This would mean that for legacy properties or properties which are really old, the gains would be higher because no indexation benefit would be available, ultimately leading to higher tax outgo, and that is something which was worrying the street. The short-term capital gains, they stay as is, and just for some context, that for properties 24 months or more is the long-term capital gain period. Now we spoke to a couple of experts and analysts as well. Niranjan Hiranandani, he mentioned that while the tax cut would mean better volumes or more interest coming in from the buyer for new properties, the legacy or the older properties, the sale year would mean lower gains for anybody because the taxes would go higher. Analysts and the other consultants, they indicated that this is a cause of concern because indexation benefit has been done away with because the effective tax rate would still be higher without indexation, and that is the reason why real estate stocks, after that sterile rally that we've seen in last couple of trading sessions, ended lower today.
All right, Sonal, got that. Thank you very much. So quite a roller coaster. And from the market standpoint, the critical question is that is it all over? Has the market literally digested this tax hit in one day, and whether it can move on or not? I think we'll have to wait for the next couple of days to get that answer. Well, as we take your leave, let's now actually go across to Shireen because she has been in conversation with the top leadership at industry body FICCI, getting their reactions in on Union Budget 2024.
Joining me now to understand how the budget will provide more confidence to industry when we talk about investment and employment and the other growth-related measures are Dr. Anish Shah, the President FICCI and the Group CEO and MD of Mahindra Group, Anant Goenka, the Vice President at FICCI and the Vice Chairman of RPG Group, Uday Shankar, the past President at FICCI and founder Marigold Park Capital Advisors, Cyril Schropp, Chair of FICCI's Committee on Corporate Governance and Corporate Laws and Managing Partner at Cyril Amar Amarchand Mangaldas, and Dinesh Kanabar, member of FICCI's Committee on Taxation and the CEO of Dhruva Advisors. Gentlemen, appreciate you joining us here on the program. Anish, to you first. As we go over the fine print of the budget, and of course all of this will have an impact not just in the near term, but in the medium to the long term, especially on announcements that are still work in progress. What is the biggest takeaway that industry sees the government sending the message out?
Shireen, the biggest takeaway is, as you mentioned, continuity and stability in the growth agenda for the economy. We are very glad to see that the growth agenda continues. The focus on infrastructure, on capex, on skilling, manufacturing, agriculture, these are all aspects that are very positive for the industry and something that portrays well for India to be able to meet its Viksit Bharat goals.
But, speaking of some of those goals, and I think the big focus area in the speech, and she started her speech with employment as well as skilling, and that's been a point of criticism, and the government trying to combat that on a front foot. The three schemes that the government has put forward, and it hopes that industry will participate and partake in those. What is your take on what the government is trying to do to formalize jobs, linking these incentives to the EPFO, and basically asking industry to up hiring as well as skilling? How do you see these schemes that the government has put forward in the budget?
It's a step in the right direction, Shireen, and it is right for the government to say that the private sector has to step in and partner with us, because driving growth in the economy cannot be left only to the government. I think they've done a number of things to help facilitate that, and it is up to the private sector to step up from a capex standpoint as well as from a skilling standpoint to be able to create the environment to be to ensure jobs in the economy, and that's what's going to drive growth. For manufacturing, if we've got to be multiples of where we are today to meet the Viksit Bharat goals, these are the right steps that will help us head in that direction.
Anant, the expectation was that more PLI schemes would be announced. That's not been the case. What the government has instead decided to do is to give some support to MSMEs, also look at creating export hubs that are linked to e-commerce, also create industrial parks and so on and so forth. From a manufacturing standpoint and specifically from a fresh investment standpoint, how do you read the budget?
So as you was shared, that it is a step of continuity, stability. I think there's a lot that has come in terms of the comprehensiveness of the budget. It covers the 9 priority sectors from agriculture to urban development, Make in India and various other areas. So it is very comprehensive. And finally, there's a lot of element of fiscal discipline that has come in, where we're seeing fiscal deficit being at about 4.9%. In terms of the manufacturing, focus on MSMEs has been important. The entire aspect of security being given to them, credit being handed out to them is going to be a very important step, because they are such a large share of the manufacturing space. I think that is certainly important. And then the area that was touched upon was the entire skilling piece and various new experiments where you're looking at opportunities for first-timers to come into the job market and providing some incentives on that front, as well as internships and other areas which we've not heard before. So as Anish mentioned, it is time for us to partner with government and make sure we make these schemes a success.
Uday, lots of adjustments, which is work in progress, including the simplification of the Income Tax Act, more measures to draw in FDI, which the Finance Minister said, the government will relay back to us what they intend to do specifically. But, your big takeaway as far as the union budget is concerned.
Thank you, Shireen. So 2 or 3 things. First of all, a budget is an economic document, but it's also an instrument of, government's policy indication. And I think on that, it scores very, very heavily. I think there is a huge focus that government has put on rural area, improving productivity of agriculture and building infrastructure in rural areas, whether it is rural housing, whether it is support for women, whether it is incentives for agricultural productivity, etc. I think that's a very, very important message. And I think what I find very powerful in this budget is a balance between growth and growth and welfare and things like employment generation.
Mr. Shroff, let me address that issue with you. This has been speculated on for months now of whether we are going to finally see this happen in this budget. But perhaps, one can argue about the timing, but the timing would never have been perfect for such a move to have happened anyway. What do you see as the medium to long-term implications of the measures announced when we talk about capital gains?
I think given in that sense, some of the frothiness in the markets, it was probably expected. So I agree with you that timing is never perfect for this. But if I can just step back and make a more general comment. So budgets these days are more signaling and they are less detailed documents because there are a lot of opportunities during the year to make changes and to adjust policy and do more fine-tuning. So I see a lot of signals in this budget. One is, I think, for everything that has been mentioned in terms of the 9 pillars of focus, employment, energy security, infrastructure, all of that. Second, I think articulating a financial sector vision. So the vision itself hasn't been spelled out, but the fact that there is going to be a financial sector vision, I think, is very important. Also, the signal that direct tax, the tax code is going to be revamped and simplified. I think that's a big signal as well. So just in terms of all these signals put together, the ease of doing business and making India an easier place to do business, I think is the mega signal of this budget, and supporting all the basic stuff for for continuing the growth story. One can also see the implications of the recent election on Andhra, on Bihar, Northeast as well. These are direct implications of the fallout of the elections.
That's right. We do have that special assistance being granted to Andhra Pradesh of 15,000 crores and measures being announced for the state of Bihar as well, crucial allies for the BJP as part of this NDA government. And you're right in pointing out very high on intent and signaling on many aspects. That's been the overall intent of the budget and the finance minister. But Mr. Kanabar, you've been with us, going over the fine print and helping clarify some of the doubts that may arise from what the budget has delivered. And again, even if you look at the stock market reaction, it has recovered coming off its intraday low, so that knee jerk as well seems to be being digested at this point in time. Broadly, from a valuations perspective, from a flows perspective, how do you see things changing post the budget?
I think first thing, Shirin, is that there is this commitment which has been given, and I believe that it's a commitment which will actually be implemented in simplifying the tax code. So, leaving aside this 10 to 12.5%, there has been a total rationalization of classifying assets into blocks of financial and non-financial assets, short-term and long-term, and having a consistent rate for both resident and non-resident. Very, very welcome. In the context of litigation, there is an introduction of VSV scheme, a Vivad Se Vishwas scheme too, which I think should help move things forward. So I can see quite a bit of intent on implementation on a number of things. Similarly, there are changes on charity, and this whole commitment which has been given that the tax regime will be rehauled in the next 6 months, and hopefully, therefore, the next budget will see a number of changes for simplification is very, very welcome. So the way I see it is, number of changes. In fact, I had not anticipated so many changes. The memorandum explaining the provisions of changes is 116 pages long, which is quite a lot of tax work, but most of it in the right direction. Whenever there is a change, not everybody is going to like the change, but overall a very right direction.
Yes, right direction. But Mr. Kanabar, I just wanted to get you and maybe Mr. Shroff and others to comment on some of those tax-related changes, because one of the things that we've seen, real estate has been the big mover as far as the last few years are concerned, especially in a post-COVID period. And what we have now seen are the LTCG changes, and they're likely to be taxing for real estate because the indexation benefits have been taken away. So how do you see this impacting the real estate sector from here on? I'll start with you, Mr. Kanabar.
So two things. First, indeed, taking away of indexation is a major impact. But Shireen, what most people tend to forget is that there are two benefits available in the Income Tax Act. One is a resetting of the cost base to 2001, and indexation is post that. That resetting of the cost base is continuing. So if you sell a house which is 50 years old, you have to take the market value as of 2001. Now you got an indexation beyond 2001 to 2024, say, that is gone. But the cost base is gone, number one. Number two, the benefit of investing money from sale of a house into another residential house continues, subject, of course, to you not having more than two houses. So while I would say this is a step back, what you are seeing is reduction of rate of tax from 20 to 12.5, doing away with the indexation, continuing with this whole proposition that a house for a house continues, or any other asset to a house also continues, subject to certain limits.
That's right. Mr. Shroff, you want to comment on that? And also specifically, some of the other measures announced, you talked about the abolishment of the angel tax, which has been a big peeve for many years now. In fact, I can't remember how many years have gone by when industry has been asking for the abolishing of the angel tax. It's now finally been done across all asset classes. Also, the equalization levy, which was imposed a couple of years ago, that's been done away with as well. So, Mr. Shroff, your comments on that?
No, so both these are very welcome changes and probably meets the demand that has been there for a number of years. So, I mean, that's a strong thumbs up both for angel tax and equalization levy. Coming to your real estate point, I think the market will take some time to understand the changes and the actual practical implications. In the short term, it may be a bit of a dampener, but I don't think it's going to have a long-term effect on the real estate market.
Okay. Anish, back to you now. Would you say that between what the survey said and what the budget has delivered, there seems to be now a change in the government's thinking, or perhaps the government's approach to say that, look, over the last few years, we've done some record spending, and it has been record. And I mean, even today's number is nothing to scoff at 11.11 lakh crore rupees. It's a sizable amount that the government has put on capex. Would industry take away the message that perhaps that kind of record capex growth is, for now, there is a need to temper that expectation and that assumption?
Shireen, I believe the government's sending a message to the private sector saying, we've done our part, it's time for you to do yours. So that's clearly one message coming out of this. But if I were to look at the rest of the budget in context of this, the focus on infrastructure and some of the spend associated with that is very positive. So on balance, again, we feel that this is very much a growth-oriented budget in line with what has been done over the past few years and in line with the economic survey.
Anant, plenty there in terms of confidence-building measures, but I think the biggest one is the government signaling that it is not deviating from what has been its stated intent and its stated objective. It will continue down the path of reforms. Now, that ninth priority, next-generation reforms, and again, sketchy in detail, because at the end of the day, you also require the states to play ball and industry to come on board as well. So all stakeholders will need to play a part in ensuring that those next generation reforms go through. But, factor market reforms that the finance minister spoke of, do you feel confident that we are going to move down that path?
Yeah, no, I think it's going to be very important for the states to play ball. We have seen some continuity and good working between governments which are common, where you have the same party ruling the same government, but sometimes states do go their own way. And there is a difference in level of speed and capability between the central government and many states. So certainly I think that alignment is very much needed. In other next generation reforms, I think climate change is one very important area that was touched upon, areas like carbon markets and so on, even new age thinking such as the nuclear power plants, which was small nuclear power plants doing R&D for nuclear and providing that energy security. I think that's another very interesting and new initiative that can help us in the longer term. So I think these are areas where the center and state have to play ball. The challenge may arise in states which are non-governed by BJP leaders.
Well, collaborative federalism is the need of the hour more than competitive federalism at this point in time. Uday, I'll give you the final closing word here. I think India is probably the only large economy where the budget continues to have this much importance, significance and relevance, primarily because it is a document that unveils the government's thinking on economic policy and future reforms. So what, to your mind, would be the big headline from Budget 2024? In 6 months, we'll have another budget to contend with, but the big headline from Budget 2024.
So the big headline for the budget is very clearly, hello, can you hear me?
Yes, go ahead.
The big headline for the budget is very clearly the focus on rural areas, focus on building productivity and capacity in agriculture, continued focus on infrastructure, not just in urban areas, but also in rural areas. Very sharp focus on backward states of Bihar and Andhra Pradesh. And of course, the focus on employment and skilling. I think employment and skilling is really, really something that could do with all the focus. And I think in that sense, it's a very powerful statement. And one final one is the fact that the government has clearly said that the stock market exuberance story is not going to be unchecked.
Well, that's the message to the stock markets. I think they had come in prepared for some sort of action as far as futures and options are concerned. I don't think the market was fully prepared for a move on long-term capital gains, but that has come. And as I pointed out, there is no perfect time, and I guess the markets have rallied so significantly. India has been one of the best performing markets in the world that perhaps the government thought that this might be the best time to roll out what has been long anticipated and long pending. Well, gentlemen, appreciate you joining us here on CNBC TV18 with your take on the fine print of the union budget. It's a vote for continuity, a vote for macroeconomic stability that Finance Minister Nirmala Sitharaman has delivered in the floor of the House. From all of us here for now, goodbye and many thanks for watching. Welcome back. You're watching the CNBC TV18 budget coverage from our budget headquarters as we continue to decode the impact of the budget for the economy and for different sectors. Joining me now is the chairman of State Bank of India, India's largest bank, Mr. Dinesh Khara joins us. Mr. Khara, many thanks for joining us here on CNBC TV18. Before I talk to you about announcements that are likely to impact the banking sector specifically, let me ask you for your broad view on what the budget has hoped to address in terms of growth stimulating measures. How do you see things changing for the economy in light of the announcements?
Thank you very much for giving me this opportunity. And well, of course, when it comes to the major focus of the budget, what is being attempted is to have a sharper focus on the productivity and also the rural sector, SME sector. So all this is a reflection of the priorities which the government has, and also it is more for the inclusive growth which is being attempted here. And also, having said that, a very clear focus in terms of climate finance, with the energy security in focus, and also the Bharat nuclear reactor scheme which has been thought about. So I think it is all, if at all we really look at the essence of the budget, it's very clearly focused on the farmer, poor, woman, youth. And also the main themes are very clearly employment, skilling, MSME. So this is something which I believe is my understanding of the budget. And I'm quite confident that it is going to lead to inclusive growth of the economy.
What is the headline growth number that you're going with, sir, that SBI is going with? Yesterday, we saw the survey talk about 6.5% to 7%. What is the growth number that you would like to go with?
My sense is that it should be plus of 7. Plus of 7. I would be more towards 7.5. I would be more going towards 7.5. Yeah. Because, what is really planned out is the housing is something, another major focus, which is actually going to give a significant fillip to the core sector of the economy. And also the employment will also move up, which also means that there will be a decent opportunity for the retail book to grow. So I actually perceive this budget to be very, very promising in terms of supporting the growth initiatives of the economy.
Okay, that's encouraging to hear, Mr. Khara, but let's talk specifics now, sir, and let's understand the impact of the measures announced for the MSME sectors, because as the Finance Minister said, 8 steps have been announced to try and alleviate some of the pain and the pressure that SMEs face. Now, specifically with the measures that have been done to try and ensure that banks continue to lend to SMEs even when they get to the SMA1 status, the Finance Minister said that this has been done in consultation with the RBI. From a banker's perspective, how do you see this measure? Would there be any cause for concern?
Well, of course, in case of MSME, one has to really ensure that they are extended the required support, particularly from the receivable side, when the threats have been, the thresholds have been lowered for the threats. This will eventually address the issues relating to the receivable financing, and also many more entities have been included in the threats. The thresholds have been reduced from 500 crores to 250 crore for the threats, and also almost about 7,000 more companies will also be required to enroll themselves on the TRED platform. But what you mentioned in terms of the SMA, well, of course, there are a couple of things which the budget has envisaged. One, of course, is actually the guarantee scheme which they have thought about, and also during the stress period, of course, attempt is being made how to really address the stress and how to handhold these SMEs and also salvage them from the situation where they are. So this is something, but I think the detailed guidelines will be framed in due course. But the intent is very well captured as far as this SMA issue is concerned. See, what happens is very often there is anxiety on the part of the lender as soon as the account gets into SMA. And what is required is MSME need credit to continue their business. So there could be some borderlines which can be drawn out, and they can be extended the required credit. But yes, of course, detailed guidelines will be framed, and banks will be happy to support MSMEs at that stage.
Yes, we are also awaiting the fine print as far as that credit guarantee scheme is concerned. But, the finance minister also spoke about public sector banks will build an in-house facility for credit assessment of MSMEs, etc. And again, I just wanted to understand from you, Mr. Khara, in terms of operationalizing some of these announcements specific to MSMEs that have been made in the budget, how soon do you believe the banking sector, especially PSBs, will be ready to do so?
Well, as far as the new assessment model for MSME is concerned, as far as we are concerned, it is already in box, and we have already done some kind of a UAT also. So I think we should be in a position to roll out very soon. Similarly, the other scheme, which is relating to PM Surya Ghar Bijli, that also we have done the UATs, and we should be in a position to roll out. The other scheme which would be of interest would be the PM Awas, wherein a very large number of households are going to be benefited. So that scheme also we have done some kind of a UAT, and we are ready to roll out also. And in fact, for the PM Surya Ghar, already we have sourced the application. We have started sanctioning those loans as well.
Mr. Khara, hi, this is Ritu just stepping in. A quick word to go back to the MSME proposal on, allowing lending to SMA category SMEs with the government guarantee fund. What, to your mind, is the additional credit that will be released because of this one singular measure? Of course, we'll have to see the finer print, but largely, what is your sense? What is the additional unlocking of credit that will happen because of the single move?
I think when it comes to SMA or for any MSME, we actually need to understand the reasons for the account turning SMA. And accordingly, based upon the assessment, there could be, if at all, it is on account of receivable funding. So maybe if at all, we can extend the time period of or the cover period for the receivables, that can actually help. And similarly, if at all, because of that, they are facing some problem in procurement of the raw material, even that can also be helped. So essentially ensuring that their working capital cycle should not get constrained is something which should be the focus. And for that, of course, the guardrails will have to be put in place. And with the guardrails in place, perhaps SMEs can be pulled back into the performing assets. That will be the effort on the part of the banks also. But yes, of course, this is as of now, as I indicated, this is what I imagine. But once the guidelines are in place, we'll be in position to operationalize ASAP.
Yes, I would imagine those guardrails will be crucial to understand and to put in place, as you point out, Mr. Khara. But, you talked about how the PM Awas Yojana and the Surya Yojana will have an impetus as far as growth is concerned. You talked about what the impact could be on the retail book. Just give us a sense of, the kind of growth that you anticipate on the back of the many measures. I mean, what kind of growth should we expect now realistically as far as your retail book is concerned? And what about credit growth? How do you see that in light of some of the measures announced?
Well, when it comes to the employment, which is one of the major focus, that of course, will ensure that much more money is at the disposal of all those new employments which will be created. And that obviously gives us the opportunity to scale up the retail book as well. And as far as the overall credit growth is concerned, my sense is that if at all economy grows at about 7.5, we should be in a position to build up, get to see our loan book growth having somewhere around 14 to 16%. That is my estimation.
Loan book growth of 14 to 16%. Mr. Khara, on this, the employment-related measures that the government has announced, and we will have to wait to see the appetite from the private sector. But broadly, the message that the government seems to be sending out to the private sector is that, look, you now need to start doing the heavy lifting as well. The government has done what it could as far as reviving growth is concerned by way of capex. Private investment and the signs signs are encouraging. What's your own assessment now about the strength of private sector investment, and how much do you believe we could potentially see that the needle move on the back of some of the measures announced?
Well, I think when it comes to energy security, when it comes to the household focus, housing loan focus for the PMAY, and similarly the focus for the energy security, etc. These are the levers which will be essentially giving absolutely newer opportunities, and I expect the response from the private sector would be equally encouraging, and they would actually like to really come forward for more investments. Already some green shoots we had started seeing, and I think now it will actually be very, very strong private sector investment, which we expect to see in the days to come.
Mr. Khara, just a broader question, as far as some of the tax-related changes that have come in, and one of the views that's coming in from the general public as well as experts and investors is this doing away with the indexation benefits, whether it is real estate and specifically a concern there as far as real estate is concerned. How do you see that, and what could be the implications of the indexation benefits being done away with? What do you see as the short, medium, and long-term implications of this?
Well, as far as the housing and the indexation aspect in the housing was concerned, though earlier it was with the indexation, it was at 20%, and without that it is at now without indexation, the long-term capital gain will be at 12.5%. So I think this is something which has been done. So I think overall impact of that, to my mind, is that those, in any case, if at all people are investing the capital gains for having another house, or I think, as I understand, it should not be subject to the capital gains. But if at all people are investing money into the real estate sector for investment purposes, perhaps it will have implications. So that's my senses. But when it comes to our book, the mortgage book which we have, majority of the home loan borrowers for us are the first-time home loan borrowers, and it would be as high as about 80% plus. So it is not really much for investment purposes which we have supported. So I think for us, I don't expect that it will have any significant impact.
Mr. Khara, just to take forward that theme of, the capital gains tweaks that have been brought in, if you were to step back, any sort of direct or indirect impact that you see on deposits, going back to what the RBI governor said about, savings moving away from, good old just bank deposits into these capital markets. Overall, with all of the changes that have been brought in, do you think any, structural impact for you as a banker in your CASA? Do you see that?
It probably needs to, would be required to evaluate the data quite a lot. But nevertheless, on the face of it, when it comes to the interest rate on deposit is concerned, this is subject to marginal taxation, so marginal rate. So that is something, it stays as it is. And but when it comes to the stock market or maybe the mutual funds, etc., the long-term capital gain, it has been increased from 10 to 12.5. So perhaps, when it comes to the risk-return trade-off, maybe it will start, one will have to evaluate the post-tax impact. And maybe it's too early to say that how will it impact. But yes, of course, this will be the determinant which will be kept in mind while deciding the allocation in terms of deposit or the market instruments like the mutual fund or the stocks, etc., etc.
All right, Mr. Khara, we'll have to leave it at that. Thank you very much for your time here and for speaking to CNBC TV18. It was a pleasure. And thank you, Shireen, for taking us through that conversation. We have to slip into a very short break, but don't go anywhere. We're back in just a jiffy with more updates.
Creation in manufacturing. This scheme will incentivize additional employment in the manufacturing sector linked to the employment of first-time employees. An incentive will be provided at specified scale directly both to the employee and the employer with respect to the EPFO contribution in the first 4 years of employment. The scheme is expected to benefit 30 lakh youth entering employment and their employers. Scheme C, support to employers. All additional employment within a salary of 1 lakh rupee per month will be counted. The government will reimburse to employers up to 3,000 rupees per month for 2 years towards the EPFO contribution for each additional employee. The scheme is expected to incentivize additional employment of 50 lakh persons. Government will implement following 3 schemes for employment-linked incentive as part of the Prime Minister's package. These will be based on enrollment in the EPFO and focus on recognition of first-time employees and support to employees and employers. Scheme A, first-timers. This scheme will provide 1 month wage to all persons newly entering the workforce in all formal sectors. Direct benefit transfer of 1 month's salary in 3 installments to first-time employees as registered in the EPFO will be up to 15,000 rupees. The eligibility limit will be a salary of 1 lakh per month. The scheme is expected to benefit 210 lakh youths. Scheme B, job creation in manufacturing. This scheme will incentivize additional employment in the manufacturing sector linked to the employment of first-time employees. An incentive will be provided at specified scale directly both to the employee and the employer with respect to the EPFO contribution in the first 4 years of employment. The scheme is expected to benefit 30 lakh youth entering employment and their employers. Scheme C, support to employers. All additional employment within a salary of 1 lakh rupee per month will be counted. The government will reimburse to employers up to 3,000 rupees per month for 2 years towards the EPFO contribution for each additional employee.
Finance Minister Nirmala Sitharaman's record-setting 7th consecutive budget focuses on continuity and growth, uses the cushion from a higher dividend from RBI and public sector companies to enhance and introduce certain welfare schemes and incentivize employment generation. Allocation to capex, defence, subsidiaries remains the same, so does the allocation towards PM Kisan and Manrega. The government continues to aggressively walk the fiscal consolidation talk. Budget 2024 pegs fiscal deficit for FY25 at 4.9% of the GDP against the interim budget's 5.1%. Finance Minister targets the deficit below 4.5% in FY26. Minister Sitharaman proposes to hike short-term capital gains on certain financial assets to 20%, long-term capital gains tax hike to 12.5% on financial and non-financial assets. Budget also proposes to hike the capital gains exemption limit on certain listed financial assets from 1 lakh rupees to 1.25 lakh rupees per year. Real estate investments lose the benefit of indexation. The finance minister moves to deepen the tax base by taking advantage of rising retail investor participation in derivatives trading, proposes to hike securities transaction tax on futures contracts to 0.02% and on options contracts to 0.1%. The change is effective the 1st of October. Big relief for individual taxpayers under the new tax regime. The budget proposes hiking standard deduction to 75,000 rupees from the current 50,000 rupees, also tweaks tax slabs to lower the overall tax incidence. The FM says the changes will help a salaried employee save up to 17,500 rupees per year in taxes. At 14.13 lakh crore rupees, the government's gross market borrowing numbers are largely unchanged from those presented in the interim budget. The finance minister promises to try and keep the central government's debt on a declining path as a percentage of GDP. Divestment revenues forecast also unchanged at 50,000 crore rupees. A roller coaster ride on Dalal Street as Sensex and Nifty recover in late trade after a sharp drop. Mid-caps and bank stocks see sharper cuts. E-commerce companies get a breather with the budget proposals withdrawing the 2% equalization levy on consideration received for e-commerce supply of goods or services effective the 1st of August. Startups can also breathe easier. Finance Minister proposes abolishing the angel tax for all classes of investors. Finance Minister proposes hiking the allocation towards production-linked incentive scheme for automobile and automotive components by over 600% to 3,500 crore rupees, but the allocation for the FAME scheme is cut from 4,800 crores in FY24 to 2,600 crore rupees now. The government moves to strengthen the new pension scheme. The budget proposes hiking the deduction of employees' contribution to 14% of the employee's salary, also proposes a new plan for contribution by parents and guardians for minors, which will be converted into a regular NPS account when the child attains majority. Made in India mobile phones, electronics and gold, silver and platinum jewelry may get cheaper. The budget proposes lowering custom duties on a host of input products for these sectors. The budget announces a slew of measures for the coalition partners in Andhra Pradesh and Bihar. This includes 15,000 crore rupees assistance through multilateral agencies to build a new capital in Andhra Pradesh. Bihar will get 26,000 crore rupees to build highways and promises of additional support to build new airports, medical colleges and sports infrastructure. Employment generation gets a lot of attention in Budget 2024. The Finance Minister proposes allocating 2 lakh crore rupees towards a new Prime Minister's package for employment and skilling. The scheme envisages central support to first-time employees and their employers in the form of subsidies and assistance with the EPF for contributions over 5 years. Also targets 1 crore 12-month internships across India's top firms, with the government paying a monthly stipend of 5,000 rupees. Well, let me toss it over to Parikshit Luthra, who has the top leadership at industry body FICCI with him.
Finance Minister Nirmala Sitharaman has delivered the first budget of the NDA 3.0 government. The focus once again was on the poor, the farmers, the youth of the country and also the middle class. How has the Finance Minister fared when it comes to increasing the manufacturing footprint of the country, exports, trade facilitation? Joining us to talk about this all is a stellar industry panel. We've got veterans with us from the Federation of Indian Chambers of Commerce and Industry. Joining us is Dr. Sangeeta Reddy, Mentor FICCI Committee on Medical Value Travel and Women Empowerment. Also, the past president of FICCI and joint managing director of Polo Hospitals, Shubhrakant Panda, immediate past president of FICCI and managing director, Indian Metals and Ferro Alloys, Rajan Bharti Middle, past president FICCI and vice chairman of Bharti Enterprises, Sandeep Somani, chair FICCI Task Force on Ease of Doing Business and also managing director of the Somani Group, past president of FICCI as well. Thank you very much, ladies and gentlemen, for joining us. Mr. Reddy, if I can begin first with you. How do you think this budget does when it comes to unleashing the animal spirits of the economy? The economic survey had said that it's now important for the private sector to invest more. This is where we've been lagging. Also, in terms of job creation, it is only the private sector which can create those jobs for the future. Today, we've heard of 3 schemes for generating employment, incentives, something that the industry had been asking for, ELIs, that has been announced. how do you see the government's push towards manufacturing and making India a manufacturing hub for the world?
So I think overall, Parikshit, we're looking at a good budget. It's a budget that promises continuity. There's a surety. There's an ability to look at every critical segment, from agriculture to youth to employment generation, critical manufacturing, and each one of these have a complementary effect on each other. There is an underlying messaging of rationalization of the tax regime. There's a simplification. There's an enhancement of productivity. So I think it ticks many boxes. And therefore, as corporate India, we should all say, yes, we're happy we're on the road to success. We acknowledge being the fastest growing economy with great headrooms for growth. And this budget will enable that growth in many forms. There is, of course, the underlying aspects of what was announced earlier on research and innovation. We appreciate those points. There is the focus on women, which I must call out, and that's significant. So overall, I would say as an opening statement, this is a budget of continuity. It's comprehensive in its approach, and it does have the ability to encourage and make the middle class enthusiastic. Approximately up to 17,500 rupees going into their hands will fuel consumerism, which will then assist manufacturing. And of course, infra has the continued push.
Right.
So many ticks.
All right. When it comes to infrastructure, Mr. Somani, the announcement that was made in the interim budget, the government has been in line with that. There is no change in the infrastructure capex per se. There was a demand from the Federation of Indian Chambers of Commerce and Industry to increase that outlay. So is there some amount of disappointment on that front?
No, I don't think so. You know, the Honorable Finance Minister laid out a roadmap some years ago, and she's sticking to that roadmap. They have been spending a lot of infrastructure. In fact, the government has been front-ending capex over the last few years, if you know. And frankly, they are continuing to spend on infrastructure. There's a lot of thrust on rural infrastructure. There's also a lot of thrust on urban infrastructure. Of course, there are partnerships with the state, and the states also have to, put in a certain amount of capex to improve their respective infrastructures. I think if you look at the statement of the finance minister, it's very clear that the continued focus on infrastructure remains and is here to stay. So I think that's a positive move, and I think it's not a one-off move. It will continue to be the focus in the next few budgets too.
Right. Mr. Panda, if I were to ask you about the focus on critical minerals. So there are 25 critical minerals which will be exempted from duties altogether. This is to push manufacturing of niche technologies in the country. Does this give an impetus, so to say, to industries like yours?
So, Parikshit, when we look at the manufacturing sector, there are clearly niche areas, like you said, which are very dependent upon these critical minerals. And barring one or two, India, unfortunately, as of now, at least, doesn't, have those resources, which means that we are reliant on imports. So, from that point of view, I think completely exempting the import duty on these 25 critical minerals is a good step forward. But I think, what is also important to focus on is that the Honorable Finance Minister talked about a mission aimed at recycling these critical minerals, for secondary use, etc., as well as focusing on acquisitions abroad. In fact, FICCI had done a study on this last year. And clearly, when it comes to critical minerals, where a lot of our high-tech niche manufacturing is going to be reliant on these inputs, I think we need to do everything that we possibly can, and this is an important step towards ensuring that we sort of recycle the resources which are there for secondary use, do more exploration for any of these minerals which might be there in India, and of course look at acquiring assets abroad.
Right. Mr. Mittal, when it comes to telecom equipment, also mobile phones, the government has decided to increase the basic customs duty on specified telecom equipment from 10 to 15%. Now, this includes motherboards, PCBAs. This is to increase domestic manufacturing. When it comes to mobile phones, mobile phone chargers and certain components, the import duty has been slashed. How do you see these measures? We've been seeing some sort of impact on telecom stocks since morning. especially the increase in basic customs duty on certain telecom equipment. How do you see this?
I think we have to look this in two different ways. One is the telecom equipment, other is the mobile phones.
Right.
India is becoming now a second source of mobile phones, especially for domestic as well as exports. As you've seen, we've crossed the numbers which was not even expected, and I think it's in the right direction. The PLIs that have been set up for that, and we import a lot of electronics, as you're well aware. So I think it's a right move, especially in manufacturing, and which is actually, if we really kind of juxtapose it with the job creation, it's very important. India's growth story cannot be predicated only on services. So agriculture being one part, which is being talked about, manufacturing being the other. So electronic manufacturing, especially mobile phones, is being considered in that light. On the telecom equipment, we believe that telecom equipment also India can, in the future, become a source, global source for telecom equipment. And that's why it is being now pushed that the Indian manufacturers start doing the manufacturing internally. And we are seeing even the global giants are bringing the base for manufacturing in India, the Ericssons of the world, the Nokias of the world, and of course the Indian stack which is coming along. So I think it's been, I would say, a mixed bag, but kept in mind for a long term and a long future for
10 lakh rupees, 10%. 10 to 12 lakh rupees, 15%. 12 to 15 lakh rupees, 20%. And above 15 lakh rupees, 30%. As a result of these changes, a salaried employee in the new tax regime stands to save up to 17,500 rupees in income tax. Apart from these, I am also making some other changes as given in the annexure. As a result of these proposals, revenue of about 37,000 crore, that is 29,000 crore in direct taxes and 8,000 crore in indirect taxes will be foregone, while revenue of about 30,000 crore rupees will be additionally mobilized. Thus, the total revenue foregone is about 7,000 crores annually. Coming to personal income tax rates, I have two announcements to make for those opting for the new tax regime. First, the standard deduction for salaried employees is proposed to be increased from 50,000 to 75,000 rupees. Bihar has frequently suffered from floods, many of them originating outside the country. Plans to build flood control structures in Nepal are yet to progress. Our government, through the Accelerated Irrigation Benefit Program and other sources, will provide financial support for projects with estimated cost of 11,500 crore rupees, such as the Kosi-Michi intra-state link and 20 other ongoing and new schemes, including barrages, river pollution abatement, and irrigation projects. In addition, survey and investigation of Kosi-related flood mitigation and irrigation projects will be undertaken. Assam grapples with floods every year by the Brahmaputra River and its tributaries originating outside India. We will provide assistance to Assam for flood management and related projects. Himachal Pradesh suffered extensive losses due to floods last year. Our government will provide assistance to the state for reconstruction and rehabilitation through multilateral development assistance. Uttarakhand too.
It's capital gains on listed shares, on unlisted shares, on property, securities transaction tax, buyback taxation. There are many, many big changes that have been announced from a capital market standpoint. The good news, however, is in the form of some sweeteners in the personal income tax regime. So what does this budget mean for our savings, our investments and our wealth? Well, joining me in the studios are Swaroop Mohanty of Mirai Asset Investment Managers, Radhika Gupta of Edelweiss Asset Management and Feroz Aziz of Anand Rathi Wealth. And of course, we have to have our tax expert on this panel because tax is what this budget has been all about. Samir Gupta of EY India joining in for all of that perspective. Thank you all, lady and gentlemen, for joining in. I must say that, I was going back in time and remembering when we had the first capital gains tax increase, the 10% happened in 2018. What followed was a lot of mayhem, heartburn, uncertainty, tears. This seems to be a different market, Radhika, who would say that today was a day when capital gains tax was increased? Look at the way we've closed. But your first thoughts. And you're also smiling, by the way.
I am smiling. I think the market is one of my learnings over the last few years is that it's hard to predict events, and it's even harder to predict the market's reaction to events. And I think that's what today is. Look, I think 12.5% on long term is a bit of a surprise for everyone. I'm not going to take that away. But I think the market absorbs these things. I mean, when you look at the perspective, 0 became 10. Actually, I don't think it had an adverse impact on equities. In fact, from a mutual fund point of view, it gives you some impetus to hold for long. Otherwise, there's just switching when it's 0. So I don't think 10 becoming 12.5 in the kind of capital gains that people are actually seeing is a very big deal. I think there are also other positive surprises. Debt taxation has remained the same, which is not something that, all of us love. But a lot of other mutual fund instruments, and we can go to the nuances, whether it's gold, international, etc., have gone from marginal tax to 12.5%. And finally, I think the whole regime has been very simplified. This concept of capital assets, non-capital assets, which is debt, and harmonizing short-term, long-term on everything. I think the simplification is very good. And the market has moved past this quite quickly.
Swaroop, are you as sanguine?
Yeah, I'll take it on from Radhika, is that, initially, of course, the dampener was capital gains tax. People do not like change in taxation. And at a time when we are moving from fixed assets to financial assets, the consistency of tax rates is always very important in the long run. We have to increase or, kind of push for more inclusion. But when you look at what's happened, and that's what Radhika said, it's now flattened the taxation at 12.5. My only observation is it should now remain at this for the next 5-10 years. Once you flattened it, it's good, but increase in taxation never helps. But one small part was the fund of funds, which was an anomaly, got corrected this time. Unfortunately, the debt part, which was a requirement, I had personally called that out, it should happen. That didn't happen. At a time when you are getting included in the bond index, I would have expected the regime to push for more participation from retail. Anyway, we'll wait for that. But yeah, broadly, it is from a taxation perspective a little bit of a dampener, but the liquidity is such that it will absorb everything at this moment in the market.
Well, which is what we were discussing, right? You have election upsets, they get absorbed. You have tax hikes, they get absorbed. I mean, sometimes it makes you feel a little dizzy or a little giddy, but then that's the market that we're in. I'm going to come to you, Feroz, in just a minute, once we get the tax expert to weigh in on all that we've heard today. Samir, so tell us, we were discussing this earlier as well, right? But did you expect this? Short-term, long-term, property, STT, buybacks? I mean, almost nothing was spared.
No, absolutely. And I think we've discussed this a lot, Surbhi, as the run-up over here, right? Just yesterday also we were discussing this. And I think that, look, let's look at the bigger picture. We did discuss that at one level, the finance minister did want to go for a refresh or a overhaul of the entire tax code. And in fact, she did speak about that. I think then it comes to, the building blocks and as to whether capital gains regime overall would happen now or not. That it was to happen, I think, was a given. But I think it's just that the timing was accelerated into this budget itself, which I think probably is what has surprised everyone. I think we all agree that from a simplification and a rationalization point of view, this is something whose time had come. It's never a good thing to increase tax rates. But I guess, just as we had in 2018 and the market took it in the stride, I'm hoping that this time as well, the same happens. The only thing I would also say, therefore, is when the overhaul happens for the entire Direct Tax Act 1961, will they again look to touch capital gains? I think that is something which, I hopefully They have done everything that they needed to. So hopefully there is no unfinished business, barring, as was rightly said, maybe to some extent on debt mutual funds. But yes, not expected in this shape and size for sure.
Okay, I have a couple of questions that we need clarification on. One is buybacks and the second is property. Let me start with the latter first, Samir. It's very clear that, on property, long term remains 2 years, but the rate of tax has now come down from 20% to 12.5%, but indexation goes away. Can you clarify for our viewers whether, if there's an old house that you owned sort of 30 years back, will there be no reset? What happens? Is this essentially a blow? Or as some of the secretaries were clarifying in the press conference, that it should be net neutral. Do you see it that way?
See, I think the indexation going away is a big piece. It all comes down to, your cost price, the vintage with which you held the asset, to see whether you are better off with indexation and 20%, or are you better off with, original cost and 12.5%. It all comes down to the maths. But from whatever we saw in the fine print, it is pretty much gone. The indexation is not there. And therefore, you will have to pretty much do a simple calculation. And simplification was the objective of this rationalization, right? So it is a clear-cut case where, you would look at the original cost and then work out the gain and then work out at 12.5% if you held the property for more than 2 years. I think that is how it will happen.
But fair to say that the longer you've held that, real estate property, the greater the chances that maybe you do have to look at a blow. Would that, I know it's a simplistic assumption right now, but is it the right direction?
Yeah, you would, absolutely. If you held the property for very long, then obviously, you would have got a much higher cost base, correct? So that would be a blow to you. That's
okay.
Right.
Okay, so very quickly coming to buybacks, and Samir here as well, that arbitrage that people had between, dividends which were taxed at your slab rate and a buyback which was being taxed at 20% at the company level. Now that's been done away. Just explain the mechanics to us. There's been a fair amount of back and forth on this as well as to how this will work, the new format of buybacks.
Yeah, so I think you need to just step back into time again, Surbhi. The dispute has always been in the case of buybacks as to whether what the company is returning is to be given the characterization of dividend or it is to be given the characterization of capital gains. Very long back, it was when none of this existed, it was treated as capital gain whenever the buyback happened. Then, of course, we moved to a regime where, we went into dividend distribution tax regime. As part of that, when it came to buyback, they basically said that when the company distributes income, as they called it, there will be a BBT of 20%, correct? Now that 20%, as a rate was still, more favorable than the full rates at which dividend could be taxed, which could be, 30% upwards. So to that extent, even as of the time, which is even yesterday, when you had BBT in play, it was favorable than the dividend full taxation. Now what they are proposing to do, as they have said, is that the BBT will be scrapped and you will go to a situation where, from a shareholder point of view, everything that the company pays you, correct, will be the entire gross value of what is paid to you will be treated in your hands as a shareholder as dividend income. And therefore, if you are in the high income tax bracket, then you go to the highest rate. And whatever was your cost of acquisition, because you did own these shares and you did pay a price, and since you are being now taxed as dividends on a gross basis, the cost of acquisition that you had incurred on buying those shares will be available to you as a capital loss to be set off against any other gains that you have.
Okay.
Now, if you don't have gains, then obviously, you're in a bit of a stuck situation. But that's the way the law is now been written.
No, got it. And I think that's an important point to remember, that the dividend is dividend income taxed at your slab rate. The price at which you bought the shares, that is your, loss, capital loss, to be set off against capital gains. Got that point. We'll come back to you on more tax matters. But Radhika, you mentioned gold, and we saw that gold was the brightest sparkle in the market today as well. So just explain to us, so one is customs duties come down, and that's one favorable piece. But in terms of just the treatment, in terms of capital gains taxation, you mentioned there could be some changes for gold ETFs or funds?
Yeah, so there are broadly 3 classifications of funds, right? And if you look at fund taxation, there were things that had long-term, short-term, the old 15 and 10 regime. There were things that were marginal, which was the old debt regime. And then there were things which were in the old debt taxation, which is indexation regime.
Correct,
so all this was floating around.
Yeah.
Essentially, in my understanding, you have three regimes. One is debt mutual funds, which are not capital assets. So long-term or short-term, they are marginal. So that's very clear. There is no change. The second is equity-oriented mutual funds, which are now 20% short-term. So that's an upping from 15
to 20.
And then 10 becomes 12 and a half.
Yeah.
Now you have this third other category of mutual funds. What does this include? This includes gold ETF and index funds. It includes fund of funds, which were actually, so if you had a fund of fund that was just buying two underlying mutual funds, a large cap fund and a mid cap fund, it was actually taxed at marginal rates as of last year.
As per debt. I mean, almost as if it was debt. Yeah.
And it was kind of inadvertent. When the whole debt taxation thing happened, it was, you know, a strange casualty.
Yeah.
So that, gold and even international funds now come under this third category where they are marginal below 2 years and above 2 years, they're 12 and a half.
Okay.
So above long term, if I hold an international fund, like I have a US tech fund, if I hold that for more than 2 years, then I'm paying 12.5% instead of marginal, which is
huge.
Which is huge. It's actually very cool. I don't think enough people are talking about it.
So that could be a good news. So, I mean, that would be the fund of funds. Swaroop, is that your interpretation that even for gold funds, or let's say multi-asset funds, which are not 65% equity, how do they get treated now?
That anomaly has been corrected.
That's all
correct. Which is
a
big
it's a big ask from the mutual fund industry.
No wonder the smiles. Now I understand.
There you go.
No, but it's not. See, it was an anomaly. Right? It was something which was probably missed out. And in the discussions, from what little I know, it was an anomaly which was waiting to be corrected. Right?
Okay.
So it is not something which was asked out of the ordinary or anything. And that correction was probably huge for many, especially us. We are big players in the fund of fund category. It's been a welcome boost for us.
So this other category, Radhika, which could be fund of funds, multi-asset, a lot of other funds. You're saying across the board, long-term capital gains would be now 12.5%? Because there was a requirement, right, of 65% equity. Only then do you get equity taxation.
So either you are an equity fund, in which case you are in the equity tax camp of 20 or 12.
Correct.
Or you are a debt fund, in which case you are not in any capital gains camp. You are not even at a capital asset. If you are neither one of these, then you are in this third camp that we are talking about. And the people in that camp are FOFs, international funds, we are big players there, gold ETFs, anything else, any other, like we have a multi-asset fund that used to get indexation benefit. All of these things that are not 65% equity or 65% debt are essentially in the middle camp.
And now they are all taxed at 12.5%.
Above 2 years.
Above 2 years. The holding period is 2 years. That's a big one and a lot of simplification.
Yeah, so it's simple. I mean, this indexation thing goes away. It's actually simple.
Okay. Swaroop, now let me come to you. For the end investor, I mean, this is a little confusing, a little overwhelming as well. What do you make of it? Because while all of this has happened, another major issue that now unlisted shares and listed shares are being taxed at parity. You know, for unlisted, it's 2 years is the holding period. For listed, 1 year is the holding period. But capital gains tax is 12.5% on both.
Correct. Of course it is. I think before we get to that topic also, on real estate, there's one fine print which I think most of the tax guys should actually read out, is there used to be a fair market valuation concept of 1st April 2001. If that still remains, because taking away indexation so retrospectively doesn't make sense, because the indexation year was changed, I think about 6 years back, from 1981 to 2001. So you were allowed to create a fair market value of your property and then pay tax with indexation.
So reset your old property value to 2001. And then calculate
do the
indexation.
Now, if you have removed the indexation, are you saying you're doing it so retrospectively that it's 50 years? You can take away the indexation benefit of 24 years of this century. If that's the case, then most of the ancestral property is safe in terms of taxation.
Let me quickly ask Samir. Samir, I'm sure this would have sort of come to you as well. And I think there's a lot of chatter on whether the old reset happens or not. Samir, if you could hear me on property, whether the old reset still applies,
so
it's 2001.
The 2001 substitution is available even now.
Okay. That would be a huge relief. I think that caused a fair amount of, heartburn in the market today as well. But, just to go back now and how we need to look at our overall portfolio, considering there's a lot of tax change, Feroz. So what are your hygiene steps? What would you advise people to do immediately?
See, firstly, equity investors should be happy because savings go into one of these assets. Okay, if only equity taxation was tampered with, I would be very clear that the market reaction would be very negative. because you can't use up the money just because taxations have changed, right? You're going to be either your real estate taxation has gone worse off, your several other taxations, indexation is gone. Section 48 is irrelevant today, right? Where it was only exempt for bonds and debentures. Now, nowhere there is indexation. So relatively, you're better off with just a 2.5%. If anybody would have voted for an increase in long-term capital gains, nobody would have guessed such a small number. And this could have been done in isolation, keeping all assets equal. But that has not been done. The detriment to the rest of them is substantive. And the advantage to a mutual fund platform and equity is, of course, relatively there is an advantage. In an absolute term, there is a loss. That's point one. Point two, I personally think if you look at what portfolio changes you will have to make, I think sovereign gold bonds attractiveness comes down dramatically because the relative differential taxation from a gold fund to sovereign gold bond now becomes 12.5% because sovereign gold bonds were taxed is the only instrument which is still left. ULIPs have also come into the tax net, right? So that's the point too. So I think there is not too much asset allocation change you will have to do. Your attractiveness of sovereign gold bond has come down. But I personally think that the biggest risk was the broader market selling off. But the broader market should hold up with a taxation change like this because the biggest risk was the differential performance of the broader market, small and mid cap over the last year and a quarter with Nifty of about 35-40%. If there was a worse off news, then this additional alpha which the broader market got would have compressed significantly, if not the headline.
So let's see if we've indeed digested the bulk of it and whether we can go back to business as usual. Samir, if you can hear me, another aspect which kind of gets related to our investments is the angel tax being abolished. Now, the first headline is like, okay, it's great news for startups. But the reason I'm bringing this up is that angel tax has been abolished, which means that these guys can perhaps go back and raise easier capital. So I don't know, you think that will have any bearing on the IPO pipeline, plus the fact that now unlisted shares are getting the same tax treatment as listed shares. So does this mean that the private markets become more vibrant? Retail will always chase return. I'm just wondering whether retail will now quickly start going and trying to, get unlisted shares, pre-IPO shares, because the tax treatment is the same.
Yeah, no, look, I do think that it will give a big fill up to the startup economy because, like you and me again discussed this, Surbi, this was a big issue. Whenever, there were premiums being given to companies beyond what the valuation methods were prescribing. And essentially, it was a tax on capital. So I do think that it's a very welcome step when we are taking away this entire angel tax provision. And I do think that coupled with the 12.5% reduced tax rate, which applies for resident investors now for private shares, which is unlisted shares. I think that will give a big fillip to the private market and to the startup economy. I think it's a big step.
Okay, something to keep in mind as well. Overall, of course, there's a reduction in the personal income tax slabs, but only in the new regime. Standard deduction goes up, but only in the new regime. Overall, what thoughts on the budget, overall wealth and personal finance aspects, Radhika?
I think it is broadly in line with expectations. Look, it was coming on a backdrop where you needed to do something about consumption beyond the top 10% of India. And how do you address consumption? You address consumption by giving people more jobs, and it's a jobs budget and it's a tax budget. And you address money by putting more money in people's hands, and effectively that is what you have done.
Well, you know what, speaking of the budget and putting more money in the hands of the people, we actually have Shireen now who is with Mr. Hardeep Singh Puri. So let's go across and get some thoughts from him as well. Shireen, over to you.
Thanks very much. Yes, the reactions are coming in here to the union budget. Joining us now is Mr. Hardeep Singh Puri, the Minister for Oil and Gas. Mr. Puri, appreciate you joining us here on CNBC TV18. Before I talk to you specifically about the oil and gas sector, sir, I wanted to get your take on what you believe the budget has been able to deliver on as far as the growth agenda is concerned, but also more importantly in being able to drive the investment thrust, which has been part of the government's agenda and objective over the last few years.
Thank you very much. As a point to start with, I think you've touched a very important aspect which is not sufficiently appreciated. The global situation today, or rather the global economy, certainly many parts of it are facing uncertainty. This uncertainty is partly due to geopolitical tensions, which also affect the growth prospects. Many countries in the world, including in Europe, are either flirting with recession or are in recession. And that's the story in many other parts of the world as well. So if you are interested in investment being drawn to India, you have to show that your economy is able to navigate this and is very firm on a robust growth path. Now, 10 years after the Honorable Prime Minister assumed responsibility, this context setting becomes necessary. We move from a position in the fragile 5 to the 10th largest, to the 5th largest economy, and the IMF is now talking about India possibly as the 3rd largest economy by 2027. So the budget has to be fiscally responsible, it has to do fiscal consolidation, and it must be the starting point in the long ladder towards Viksit Bharat. Now you can have a long argument whether by 2040 you will be a high middle income country or a developed country. That's a separate discussion. But the road in that, the direction, requires this kind of foundational paving. So if you look at this economy, when we started moving from women-centered development to women-led development, this budget provides 3 lakh crores for that. We are talking about the rural sector. Rural development has 2.66 lakh crores provided. We are talking about unleashing the productive forces as part of our demographic dividend. There are 4.1 crore jobs to be created over 5 years. 1 crore people to get internships in the 500 of the country's best thing. Mudra loan slab goes up from 10 lakhs to 20 lakhs. Yes, income tax, some relief, not maybe as much as advocates of middle class this thing would have required, but then middle class gets stuff elsewhere also. Pradhan Mantri Awas Yojana, from 4 crores to 7 crore homes, 1 crore plus in the urban sector, another crore in the urban sector. But more than that, if you bring down the capital gains tax from 20% to 12% or thereabout, yes, there is some benefit. All right, if you come to the indexing part of it, and I believe there is some comment on that. But you look, 1 minute, you are also a gainer when the tax comes down from 20% to 12%. And if you've got a 1 year period in which to reinvest that 12%, which would be caught up with the indexing, etc. So I think all in all, it's a very feel-good, positive, stable budget. And I think the reactions which are coming in, I know my friends in the opposition and I'm trying to pick on 1 or 2 things here, but if it's all that they can come up by way of criticism, then I think it's a very good budget.
Mr. Puri, let's talk about specifics pertaining to the oil and gas sector. And I would like you to comment on the announcements that have come in for housing and urban development. If you could put on your former portfolio hat as well. But on OMC specifically, sir, there was a capital outlay of 15,368 crore rupees, but that's been dropped now from the full budget. The interim budget had allocated 15,000 crores. That's been dropped from the full budget. Why is that the case, sir?
No, I don't know what I have not looked at these figures and I don't know whether that 15,000 crores is there or not. But you know, that if I remember correctly, we had spent something like 28,000 crores on extra expenditure which the OMCs had done, and we had compensated them by 21,000 crores. Then there was a provisioning for about 15,000 crores on the oil and gas to be paid, but I think that will come in the form of equity or some other form. So I think there is nobody's complaining on that. But other things which have been done which will boost the ENP is, you know, if a ship came in for prospecting and it stayed for 6 months and it had to go during the monsoon back, then it will be taxed again to come. So now there is a recognition that these things can stay on for 3 years or 5 years. So it's very positive in that sense.
Okay, Mr. Puri, as far as the petrol subsidy is concerned, at about under 12,000 crores, sir, given you know what you are seeing geopolitically at this point in time, as well as the supply-demand dynamics, you believe that that is ample as far as the subsidy possibility and need is concerned?
No, I think what you're talking about, 12,000 crores, I'm not correct. This must be on the gas part of it. That was a subsidy. Even in the past, we didn't spend it. If I remember correctly, I don't have the figures of me, but by and large, it was there. today your price at the bunk on petrol and diesel is being maintained because the corporate, good corporate citizens, the OMCs, have not raised it. Now, there was a time when there was an under-recovery on both petrol and diesel because the global price was high. Then the global price came down, and then there was no recovery on diesel and no under-recovery on both petrol and diesel. I think the situation is stable, but we will have to watch the situation, Shireen, very carefully, because geopolitical tensions could drive the price up from around the mid-80s now to higher, or it could drop to 70. I mean, one of the OPEC plus oil ministers, my colleague was telling me that come October and they're planning to unwind the production cuts. So we'll have to watch it very carefully. But on the petroleum and natural gas side, it's a stable picture. Things are looking good. I'm only keeping my fingers, toes and everything crossed that the global price due to tension should not shoot up. Otherwise, we are okay.
Yes. Stable picture as far as prices are concerned for oil and gas. Mr. Puri, when you last spoke to us at the India Business Leader Awards, you had made it very clear that companies like BPCL were no longer up for privatization. As far as asset monetization is concerned, sir, will your sector be one of the prime candidates for asset monetization? Forget privatization.
No, but it stands to reason. Now, for instance, they've all collectively made a profit after tax of something like 1,59,000 crores. Their assets are increasing in value. Now, for instance, BPCL, the point that you are making is at one stage, there was a talk of selling BPCL, and they were talking about a particular figure about 30,000 crores. And today they made that kind of profit in a year. Now, I said that, we had a happy situation. But if the values go on and government, which is 50% owner, if it wants to sell 2 or 3% of one of these companies which is doing, that's an entirely different thing. But I don't think that a company which is doing very well, that needs to be privatized because it is doing well. And if everybody wants to buy it, why do we want to sell it? So I think asset monetization is on a different plane. And as the volumes go, I looked at the ONGC value the other day. I was very impressed. But Shireen, I want to share something with you. I think the best is still to come. I think both the PE and the assets values, etc., will go up much further in the times to come.
The best is yet to come. That's a great note to end this conversation on, Mr. Puri. We look forward to having a more comprehensive chat with you. Appreciate you joining us here, sir, on CNBC TV18 on the big day, the budget day. Thanks very much for your time. That's the Oil and Gas Minister, Mr. Hardeep Puri. They're commenting on the impact of the union budget. We're not done. We're just getting started. It is the team from North Block that is joining us here at the CNBC TV18 CII Budget Headquarters. We've got the Finance Secretary, Mr. Somanathan, and the DPAM Secretary joining us now right after this short break. Stay with us. We're back in a moment with the team from North Block. Welcome back. You're watching the CNBC TV18 budget coverage. We are here from the CNBC TV18 budget headquarters. We're now joined by the team from North Block, the budget makers who have put the budget together. Joining us in the studio is the Finance Secretary, Mr. TV Somanathan, as well as the DPAM Secretary. Many thanks, Mr. Pandey, for joining us. Mr. Somanathan, welcome to the program. Before I get to talk to you about the specifics, let me ask you about what industry seems to be picking up as the underlying message that the government is trying to send out. On the back of what the economic survey said, as well as what the budget is presented, sticking to the numbers of the interim budget, the message seems to be, we've done the heavy lifting as far as capex is concerned. We aided the recovery. We amplified the recovery. The baton is now yours to take forward. In that context, would it be fair to assume that there will be a recalibration as far as the government's capex spends are concerned?
Not necessarily. I think we have kept the capital expenditure provision at the same level as the interim budget, which is considerably above the actual expenditure in the last year. In fact, I think the step up is 17% compared to the actual expenditure of 9,48,000 crores. So there is a substantial step up in capital expenditure, but you're right, it is also a fact that the government alone cannot sustain capital expenditure in the economy. So that's true.
I get the fact that we have to look at these numbers also in the context of the fact that the interim budget was presented and we've got another 6 months before another
budget for a new year.
No, it is not a new budget for a new year.
About.
Absolutely. But so would it be fair then to assume that this kind of 17% number that we've done as far as capex is concerned, would this then now be the run rate on the back of the record numbers that we've done in the last 3 years?
Rather than look at a run rate, if you see the speech, there is a reference to the fact that we're currently spending about 3.4% of GDP on capital expenditure, and that broadly is something that the government wants to sustain. There is a reference to that in the speech. So that gives you the indication that as a share of GDP, capital expenditure, the endeavor would be to keep it at its present level.
Keep it at its present level. Let's now talk about the big tax changes, Mr. Somanathan, and that has to do with the LTCG changes that have come in, with the buyback tax changes that have come in as well as the short-term capital gains. Now, one of the big concerns that's being raised by investors, by citizens is, why have you done away with the indexation benefits? By doing away with the indexation benefits, you've dealt a body blow. I know you've explained the math that in effect, the rate will actually be more beneficial, even with the indexation benefits being done away with. But that's not how people are reading it.
They're probably reading it wrongly, I'm afraid I must say that, because it's not a body blow when you reduce a tax rate from 20 to 12.5. I think it requires quite a stretch to call it a body blow, because the tax rate currently is 20% with indexation, and the proposal is 12.5% without indexation.
Correct.
Now you're asking why no indexation? See, it's difficult to both demand simplification, rationalization, but please retain all the complications which I like. I mean, when you remove complications, you remove all complications. You don't remove the disliked complications and retain the liked complications. Indexation is a complication because we don't apply it to other assets. When you earn interest on a fixed deposit, do we tax you only on the real return? Is there no inflation in other assets? Is inflation confined only to property and certain assets? No, it's not. So what we have tried to do is that inflation in India is fairly predictable in the long run. We have checked that the average rate of growth of the cost inflation index, which is used for capital gains, is about 4.6%. So it's predictable. We know that on average your assets, for tax purposes, see, individual assets may go at different rates, but we use a steady index for tax calculations, which grows at 4.6%. Now let me give you a numerical example. I don't think anyone would make the case that property will appreciate less than a fixed deposit. That's not why people buy property. They buy property because it appreciates faster. And India is a land-scarce country. Property is bound to appreciate faster than most other assets. So let's say you expect property to appreciate at, let's say, 15% per annum. Take off 4% for inflation. Currently, with a 15% gain, you're taxed on 11%. Because every year you get a 4% knockoff for indexation. On 11% of the growth, you're paying 20% of that. So 2.2 is the tax that you pay. In the new system, you will pay 12.5% of 15%, which comes to 1.87. So it's lower. It's lower at almost any reasonable rate of growth for real estate, and we have calculated this. We have calibrated to be, in fact, for us it will be negative, because in most cases, the tax which would be computed on an indexation basis would have been higher than the tax on the non-indexed but much lower rate that we have imposed. So we've tried to keep it at a level where almost nobody will lose. A lot of people will gain because the indexation benefit will be less than the benefit that they would get. And one more thing I want to add. We will continue to start valuing property only from 2001. So it's not as if that benefit is taken away.
That benefit is not taken away?
That is not taken away. The value of the property will be the value as of 2001 or of the date that it was acquired.
Okay, that's an important clarification that you're making. But I want to stay with this, the tax change announcements that have come in. And, you know, there's been a lot of anticipation. In fact, even in the interim budget, the expectation was that maybe this would be the budget. The previous budget, the expectation was that maybe this will be the budget that you will finally announce as roadmap.
I'm glad to fulfill the expectation
So,
now.
I know. So the timing, I know that there is no perfect timing to increase taxes. But why did the government feel that this was the right time for you to be able to move towards what you call rationalization, simplification?
This is the time when we are looking at a Viksit Bharat in the next 25 years. In a country where we expect capital gains to be one of the fastest growing sources of income, and if you want a society without rising income inequality, and if you want a society where you have an elastic tax revenue, you cannot continue to ignore the tax potential of capital gains.
So revenue mobilization
It is one of the
considerations?
motives, yes, simplification and revenue mobilization. But simplification is the primary objective. If you look at it, we now have a very simple structure for capital gains. Everything that is long-term is 12.5%. Everything. Everything that is short-term is divided into two parts. Certain assets are at 20% and most of them are at applicable rates.
So
it's very simple. And everything that's listed is 1 year. Everything that's unlisted is 2 years, whether it's gold, property, unlisted equity, unlisted bonds, anything. So it's a very simple structure. You can actually draw a simple chart and decide your tax rate. But simplicity never comes simply. Simplicity is not simple. Simplicity is complicated.
Simplicity is complicated. But
to reach simplicity is complicated.
I would imagine that a lot of work has happened at the back end to that. But how much of this, and I want to build on the revenue mobilization argument because I heard the number 15,000 crores on account of the LTCG changes. What do you expect that number to be given the way that we are seeing, you know, the markets
Currently,
move?
our revenues from LTCG are very significant. Let me tell you that we are already getting significant revenues from LTCG. I'll mention two figures here. 88% of the value of capital gains earned in India, according to our study, comes from people whose returned income is more than 15 lakh rupees. And 62% comes from those who are above 1 crore of returned income. So this is not a tax which is falling predominantly on not at all.
Class,
and this is the class of income which Thomas Piketty and others have been writing about all the time. Now, at some point...
It then begs the question, are you looking at a higher rate? Because that's the worry, that you've done 12.5. This is perhaps an odd rate.
If we were looking at a higher rate, we would have done it.
But maybe you're testing waters with 12.5 and maybe
we don't believe in testing waters.
So is it going to be 12.5 now for the near term? I mean, for the next few years?
There is no intention to revise it from here. I cannot speak for all the future finance ministers and finance secretaries, but I can say as of now, we have no intention of revising this any further.
So 12.5 is...
Of course, no one can predict the future.
No, absolutely.
Somebody else may cut it too. I can't predict that. But what I am saying is we need equity in taxation. We can't say that only equity markets take risks and a person doing an MSME business is not taking risk and he should pay 39%. And because I'm taking stock market risk, I should not even pay 12.5%. There is a case for a lower rate on capital gains tax. It is much, much lower than the marginal rate of tax on other sources of income. And it's creating distortion in the savings markets also. But no, this is not an intermediate station. This is the destination.
This is the destination, and that again is an important clarification because that was one of the concerns that could 12.5 become 15%.
We are definitely looking for simplification. Any simplification, if it is to be not revenue negative, cannot happen at the lowest of the rates. So we've brought down the rate from 20% in gold, 20% in property, 20% in unlisted equity. All of them de facto are reductions. Not for everybody necessarily. But for most people, the new structure of 12.5%, other than in listed equities, is a lower rate effectively. This is our calculation. That's why we anticipate, that's why we've calculated this rate. We have not put it at a level where it would affect other classes.
Okay, and that is the rationale behind 12.5%.
Yes.
But you talked about distortions, and one of the reasons why you brought in the 12.5% is also to avoid the kind of distortions that will. How concerned are you? We've heard now the SEBI chief, we've heard the RBI governor, we've heard the chief economic advisor raise the concern about excessive speculation, especially on the F&O side. You brought in the STT, higher STT on that
there
front.
is a definite concern about. We are not concerned about investment. Investment in stock markets is welcome. But we are concerned about speculation. If it becomes, if it becomes more, the tail wagging the dog. And SEBI has expressed its concerns, and the change in the STT is a step in that direction. It may not be enough to handle what needs to be handled. That's a matter for regulators to look at. But we are certainly acting in that direction. Yes.
So again, I just want to pick up on what you said. You said that the higher STT on F&O is a step. So do you believe that more measures are required, which will now be taken by the regulators?
We would always prefer to raise revenues on something which is a win-win. So here we get revenue and we hopefully deter some speculation. So it's a win-win. That's why the STT is gone up.
Okay, I'm going to come back to you, but let me get the DPAM Secretary into the conversation as well. Sir, miscellaneous receipts at about 50,000 crores, pretty much the same number that we saw in the interim budget as well. Now, what happens to things like privatization? What happens to things like strategic disinvestment? Are we looking at moving ahead, moving forward with this, or is it, to be understood that asset monetization is going to be the preferred route?
I think as FM also announced in to a question she replied in the press conference, there are certain decisions which have been taken by the cabinet in terms of moving towards strategic disinvestment. But she also mentioned about the timing. I think one of the timing and other issues are of important concern. Now, what we have been looking at is what is our time frame for doing capital management. We have moved from pure disinvestment to holistic capital management, and it has got a certain number of pillars. The first pillar is look at your enterprises and concentrate on performance. Many of them are listed. If you overall, we have 81 listed CPSEs, banks, and insurance companies. Their market cap was of the order of about 12 to 13 lakh crore 3 years back. It commands about 73 lakh crore now. And one of the factors has been the fundamentally, number one, looking at performance, looking at the management of capital in the manner in which it is normally done in listed companies, aligning the management incentive to the, to the performance, their bonuses, their performance bonuses. Capex, there was a mention about 11.11 lakh crore, which is a government capex.
Correct.
You have to add actually 3.9 lakh crore of capital assets, which is basically, designated as grant, but actually is a capital assets because it's a part of the schemes given to the states. On top of it, there is about 3 lakh crore, which is also invested in capex by the CPSEs. So you have, the capex, which brings in growth and the capital thing. So overall, and then we have a fourth pillar is consistent dividend policy. And the fifth is calibrated disinvestment strategy. Now, when we say disinvestment strategy, it is a different, continuum. It's not merely privatization. We call also listing, then also market dilution while the government is in control. So we are looking at a time horizon which is a much longer term, and in which, you can also, part with certain equity, you can also collect dividends, you can also improve performance, but on top of it is a value creation. If you don't value create, because I think the CPSEs and other things, they also do participate in the economy, which is growing. And they must also grow in tandem with the economy.
No, fair enough. A quick question on IDBI Bank, because that, of course, has been waiting for several years now. We are given to understand that the RBI has come back now with the clearance on fit and proper. Is the next stage set as far as IDBI Bank is concerned?
I think RBI is in an advanced stage of doing it, and I think we will move forward.
They have not actually come back.
They have not come back. Okay, so it's still...
I mean, they are almost there, but then they would let us know, and we will move to due diligence stage and move forward.
So can we expect that to be done in this financial year?
Hope so.
You hope so. So perhaps there is hope for IDBI Bank. Let me now address some of the other announcements. And I want to address the announcements related to the employment schemes that the government has announced.
Yes.
How hopeful are you of take from the private sector, participation from the private sector on the back of the incentives? Now, no one's going to hire primarily because the government has put incentives on the table. No. How confident do you feel about these schemes taking off, and how soon do we see them being operationalized?
So, look, whenever we get requests for tax concessions like investment allowance or tax concessions for R&D, what we are told by the corporate sector is that we respond to incentives. We'll spend more on R&D if you give us incentives. We will spend more on capital equipment if you give us investment allowance. So, and this is normal, and it's nothing wrong. I mean, what they're saying is true, because economic agents respond to incentives. Will somebody set up a plant just because there's a depreciation allowance? No. But will it encourage people to set up more plant if there is a depreciation allowance? Yes. Similarly, people may not hire because there is an incentive, but there are two things. One, if you're planning to hire, you may expedite hiring to take advantage of an incentive, number one. Number two, even in capital incentive sectors, and there's a lot of economic evidence on this, the exact extent of mechanization or automation is not fixed. So somebody may be 60% mechanized, somebody may be 100% mechanized with robotics. That marginal decision of labor versus capital is often influenced by incentives. And incentives are something that industry legitimately looks for as a signal to what is the direction of government's policy. And if it aligns with what they want to do, then they respond.
No,
there is no compulsion.
I understand there's some compulsion, but I'm asking you this in the context of what the survey highlighted. It says that while corporate profitability has quadrupled in the last 3 years, the pace of hiring or compensation hasn't kept pace with that. Given where capacity utilization is today, do you believe that we are likely to see, even on the back of the incentives, a takeoff of these?
I definitely think that there will be a takeoff. I'm almost certain there will be, because again, a lot of the evidence shows that there are a considerable amount of labor shortages in this economy. We've seen lots of reports saying that people are short of this skill, that skill. So there is a mismatch between people wanting jobs, industry wanting skilled people, and the availability of skilled people. Now there is a role for the government in bridging that gap. Can the government do that simply by itself? It actually cannot, because the government is not in a position to provide some of the skilling that the employee needs in order to reach the employer who wants him to come. Nor is it the job of the company to do general skilling as an externality for others. So what we've attempted here is, one, we have two schemes which are focused on first-timers. Now, as anybody who has been in the job market knows, if I don't have previous experience in my CV, it's more difficult to get a job because I don't have previous experience. We want to incentivize companies to take those people if they can, because we're providing a subsidy. The company can calibrate its pay package because they know the employee is going to get this subsidy, which helps cover that initial learning curve where a first-time employee is not as productive as somebody who's being rehired from somewhere else. So it's a fillip, an encouragement, an incentive to take people who are not previously employed. So, and fiscal incentives, at least everything that I have learned in my career from industries, they respond to incentives. They say this all the time. R&D, give us a tax concession, we'll do more. So employment also, I believe they will. That's one. Second, the other two schemes have very substantial incentives. The B and C. B covers 72% of a person's salary, annual salary, is the extent of the subsidy. So there, if you hire at least 50 people or 25% of your existing strength, we will cover 72% of one person year's salary. Now, why is the incentive so big? Because we expect then that industry will use this subsidization to perhaps do some of the skilling of this person that the ecosystem is not yet providing. So this is a win-win. The person gets skilled, joins a company, but that adds to the skilled pool. And similarly, the last scheme, which is the internships. Now, the internships are going to be funded primarily by the government. The government provides the money for the intern. The company is not expected to absorb this intern. That's not the intention. But just imagine how many opportunities can be opened to people who don't have access to this and who are spending their time only writing maybe government exams or are not even aware of the opportunities in the private sector. If you can orient at least some of them, and not necessarily only those who are writing exams. Nothing wrong with writing government exams. What I'm saying is there is a whole range of careers. There's a lack of exposure to these careers, and we want them to get exposed, do some skilling through good companies which will do a good job of skilling, produce skilled people whom some other company may employ. It doesn't have to be these. And these companies can do it because they have considerable CSR expenditure. We have done an analysis. 50% of India's CSR expenditure comes from the top 100 companies. So if they can devote some time and effort to this without affecting their bottom line, without charging it to their profit and loss account, it would be a win-win both for industry, for government, for the people and for the country.
You know, and I think unequivocally, the message coming in from people who watch the budget is that it is a vote for continuity, but more importantly, it's a vote for stability as far as macroeconomic policy is concerned. 4.9% on fiscal deficit, and you know, that was the hope, but the budget has delivered on that, and you've said that you will get to 4.5% as well. What are the risks that you see to the fiscal consolidation glide map that you've laid out?
Between now and next financial year, of course, the risks are I do not see very serious risks between now and the next financial, unless there is some external exogenous convulsion, which can happen. I mean, you have an election going on in an important country, you have wars going on in two places. Those are things which one can't predict. But based on what we know up till now, and if there are no major commodity price shocks or no major macroeconomic disruptions in big economies like the United States, I think we are on course to achieve the intended consolidation.
You know, the changes that you've made as far as the salaried class are concerned, with the changes in the new pension, tax regime, and the hope is that you will see more people pivoting now. Do you get that feeling? Do you believe that you've done enough? Huge
pivot has already happened. Up to now, 70% of the salaried returns that are coming in for the current year are in the new regime. So the pivot has happened. Now it's the new regime is now not merely the legal default, it is also the most popular option. So we have, that change has happened.
And the income tax review that the finance minister spoke of, and she said that 6 months is the window that has been given. That's a pretty big...
It is a bold and ambitious task.
An ambitious task. So would it be fair to assume that perhaps we could see this being taken forward in the next budget?
It's a possibility.
And on the scheme, on the pension changes that you're working on, I know that the balance of being fiscally prudent, but also giving into some of the concerns that have been raised, how soon do you believe you'll be able to arrive at a viable solution, sir?
I am unfortunately not able to give you a timeline, but it's at an advanced stage.
At an advanced stage.
Yes.
How confident do you feel about being able to get to this 50,000 crore rupee number, Mr. Pandey?
Well, this is a number, as you say, is a miscellaneous capital receipts, includes, different types of capital receipts which can come either through disinvestments or asset monetization, and we hope to achieve.
And anything else besides IDBI Bank, which is which has been on the burner, so to speak, and is likely to see a culmination?
No, I think we will just go along with that, the ongoing transaction, and see to it that they are culminated.
Gentlemen, I have much more to ask you, but unfortunately we're out of time. But we will see the two of you at the CNBC TV18 budget verdict. Appreciate you joining us here today at our CNBC TV18 budget headquarters, Mr. Somanathan and Mr. Pandey. Thanks very much. We're not done with the budget makers just yet. We are going to take a quick break, but the team from North Block will continue to decode the budget fine print right here with us. We're back in a moment.
Coming to personal income tax rates, I have two announcements to make for those opting for the new tax regime. First, the standard deduction for salaried employees is proposed to be increased from 50,000 to 75,000 rupees. Similarly, deduction on family pension for pensioners is proposed to be enhanced from 15,000 to 25,000 rupees. This will provide relief to about 4 crore salaried individuals and pensioners. Second, in the new tax regime, the tax rate structure is proposed to be revised as follows: 0 to 3 lakh rupees, nil; 3 to 7 lakh rupees, 5%; 7 to 10 lakh rupees, 10%; 10 to 12 lakh rupees, 15%; 12 to 15 lakh rupees, 20%; and above 15 lakh rupees, 30%. As a result of these changes, a salaried employee in the new tax regime stands to save up to 17,500 rupees in income tax. Apart from these, I am also making some other changes as given in the annexure. As a result of these proposals, revenue of about 37,000 crore, that is 29,000 crore in direct taxes and 8,000 crore in indirect taxes will be foregone, while revenue of about 30,000 crore rupees will be additionally mobilized. Thus, the total revenue foregone is about 7,000 crores annually. Coming to personal income tax rates, I have two announcements to make for those opting for the new tax regime. First, the standard deduction for salaried employees is proposed to be increased from 50,000 to 75,000 rupees. Similarly, deduction on family pension for pensioners is proposed to be enhanced from 15,000 to 25,000 rupees. This will provide relief to about 4 crore salaried individuals and pensioners. Second, in the new tax regime, the tax rate structure is proposed to be revised as follows: 0 to 3 lakh rupees, nil; 3 to 7 lakh rupees, 5%; 7 to 10 lakh rupees, 10%; 10 to 12 lakh rupees, 15%; 12 to 15 lakh rupees, 20%; and above 15 lakh rupees, 30%. As a result of these changes, a salaried employee in the new tax regime stands to...
You're watching the CNBC TV18 coverage of the budget 2024, and we are decoding the fine print with the budget makers themselves. Joining us now is the Economic Affairs Secretary, Mr. Ajay Seth, also the DFS Secretary, Mr. Joshi. Thank you very much, gentlemen, for joining us here on the program. Let me start with you, Mr. Seth. As far as the economy is concerned, with the growth assumptions that have been made at this point in time, lower than what other external agencies, including the multilateral agencies, are expecting, how confident do you feel in being able to get to the upper end of the growth target, in fact, better it?
See, the budget assumes a nominal growth of about 10.5%. What the agencies, different agencies have, external agencies have estimated is of the order of about 7%. RBI has estimated about 7.2%. Economic survey assumes 6.5 to 7%, but that as the constant prices. Here what we are talking about a nominal growth rate. Now we feel that we have been a bit conservative, but not excessively conservative, and 10.5 is a reasonable number.
A reasonable number. Some of the measures that the government has taken in the budget now to stimulate growth further, both on the investment side as well as the consumption side. To your mind, I mean, we've got reactions coming in from industry who see it differently, but to your mind, which are the measures announced by the budget where you believe we are likely to see action within this financial year, the impact of that being seen within this financial year itself?
So there are few measures which should start having the impact immediately. For example, any new entrant to the job market through EPFO, the formal job market, there is a support. Now, that from the day scheme gets formalized and gets announced, it will start happening from that side itself. So I see the first impact coming it on the employment itself. The second order which is coming up, like there is an income tax relief.
Yes.
Now, that is income tax relief in that people will have a little more money in their hands. But what do they do?
Could more have been done? And I will ask the CBDT that question as well. But the expectation is that perhaps a little bit more could have been done. Was it the revenue implications that held back the government?
No, I'm not getting into the what could have been done. I'm here to say that what went into deciding the budget and what the contours of the budget are. Your question being that where do we see that growth stimulus. What we are growing at 6.5 to 7%, what the budget tries to do is to take the potential of the economy to a higher level. There are a number of reforms measures are there. With that, those reform doesn't happen overnight. So the idea is take the potential from 7 to 7.5 and then beyond that. So this is what the focus of the budget is. More on employment, which is more immediate.
Yes.
Skilling for the youth, which is more medium to long term. Then increasing the potential of the economy.
I'll talk about those next generation reforms that the finance minister spoke about, but let's also address, Mr. Joshi, the announcements that came in pertaining to the MSME sector, 8 measures specifically for the MSME sector that the finance minister highlighted. Now, when do you hope that these measures will be operationalized, and what kind of guardrails do you believe will need to be put in place to ensure not just effectiveness, but also from the banking perspective, there is no concern, especially when we talk about SMA accounts?
So, about the timelines, we have already started working on this credit guarantee scheme announced by Honorable FM in this budget. And the new assessment models for MSME credit will be developed, which will be based mainly on the digital footprints of the borrower rather than just concentrating on their balance sheet and income tax returns. We will also see their things like payment of their bills, payment of the salaries, etc. So all these things will take, some time, but not long term. Maybe in next 3 months, all these things will be materialized. And regarding increase in mudra,
from 10 to 20 lakhs.
10 to 20 lakh can be done immediately. So all of these are very, very short term. Maybe I am seeing the time horizon of 1 month to 3 months.
Okay, so within a quarter you believe that this should be operationalized. But conversations would have obviously happened with the RBI to put this scheme and the framework of this scheme forward. The checks and balances that you believe are needed, and also this is for unsecured and secured loans or only secured loans?
So these are for all type of loans, because the MSMEs currently face problems as soon as their accounts are declared as SMA categories. In order to give them comfort to the lenders also, one kind of a fund, guarantee fund, something on the lines of ECGLS maybe will be created.
Okay.
And that will help us in giving
so this is for the plant and machinery loans, etc., which is a self-financing scheme, I'm given to understand. So the government is not going to be subsidizing this.
That is for the manufacturing sector.
Right.
But the thing which I called about SMA and NPA loan accounts, that will be support will be given by the
government, which will be a credit guarantee scheme that will be put in place. Let's talk about the next generation reforms, which was priority number 9 that the finance minister articulated. And a lot of that focuses on the center and the states working together, whether it is land and other factor market reforms that you speak of. These are all going to be work in progress, and of course no timelines were set. But what can we realistically expect in terms of next steps to move forward on some of these aspects?
Pick it up, given a limited time, so land-related reforms, both on the rural lands and the urban land. Just take that example of next 3 years, getting the farmer registry and the land registry is getting combined. It's a 3-year time horizon. Similar manner on the land-related actions, be it for the rural and the urban, getting it done in next 2 to 3 years, incentivizing states, working with the states. Some states have done fairly large. For example, if we talk about some states have done their cadastral maps digitized, GIS referenced, and done as per current ownership. Some are at the stage of 30-40%. So making everybody move to that direction. So the idea is that make the land market more efficient, make the land availability more efficient, make the land usage
more efficient,
more economical, because land is a limited country. We are a large country with a large population, so per capita availability of the land is a very, very limited one. So that is something wherein better utilization of land in rural area and in urban areas, that is what the focus is.
Sir, let me ask you about a concern that's been raised by the regulator and was kind of alluded to as well by the economic survey. And this has to do for the fight for deposits and the fight that the banks have to now undertake. And the RBI governor basically saying that, look, you need to devise your strategies in a new way to be able to go after deposits. How are you at North Block reading this at this point in time? Are you concerned as well?
With regard to the CASA, there is certainly a downward trend in terms of CASA in the banking sector, but still, is something which is like we must be addressing and thinking about. But I think CASA is, if I remember correctly, is more than 40%. Which is sufficient actually if you look at the other countries' experiences. But yes, there is a concern.
There is a concern. Would you like to elaborate on that as well, about the concern that seems to be emanating from the regulators, especially on this participation, not just in the equity markets in general, but particularly on the F&O side?
Yeah. I see it as a concern that if the credit is growing at a much larger pace than the deposit, that requires a rebalancing. And yes, as an economy, we require more credit, we require more investment. So that's a concern. Getting the credit growth rate and deposit growth rate, which are more balanced, that's a concern. But you use the word fight. That's not the way I see it. It is a competition. It's a market-based competition. So the people.
So you're saying banks will need to do more to compete.
Competition. They have to compete with other service providers who are looking for savings. So they have to be paid. Any competition it can be fought either or not fought. A competition has to be won either on pricing or on better services or on combination of both. So it is for different asset classes. So more competition is always welcome.
More competition is certainly the order of the day. Mr. Seth, I also wanted to talk to you about what the Finance Minister mentioned in her speech with regards to drawing in more foreign direct investment. She didn't specify what measures the government is planning to take. Could you elaborate for us what the thinking is at this point in time in terms of any specific pain points that need to be addressed to draw in more FDI? And specifically, I know she clarified that the government is not distancing itself from the survey's view on attracting FDI from China, but do you believe that that is a pragmatic approach to have at this point in time?
I'll first attempt to the first part which you have said, that an announcement which was done, that the simplification of rules and regulations. I'll give you just two examples. Please. There are several on the table which are being discussed. One, that there are cases wherein a company from India goes abroad, does the business well, has set it up, has become bigger than the Indian entity itself, wants to come back and invest into India. Now, that is an investment, we should be welcoming it. But the present set of regulations are not very smooth about that money coming in. And this is our legitimate surpluses earned overseas to be brought in as an FDI into the country. So that is one piece. The second piece which comes in is that at the moment, as we know, that FPI limit is 10%. What if somebody were to cross 10, and that entity is told, hey, you have to disinvest, and some days are given. What if somebody were to say that, no, I want to get into an FDI, give me a regime. With whatever approval processes are there. That is another piece. Our rules do not provide for it.
So are you working on that?
Yeah, that's correct.
So liberalizing the FPI regime?
Not FPI, meaning that the moment it crosses 10%, then the investor has an option either to roll it back or say that reaching up to 9.5, saying that I want to cross 10%, then it has to go through the approval process. We have to put that mechanism in place, an efficient process in place. And so that is the second aspect. Coming to the other question of that FDI, what the economic survey has thrown up a question, that where do we see investment versus the trade account? And that is an economic survey. It has expressed a view. The idea is to generate a debate and arrive at a decision at this point of time. So it's not that the government has taken any decision. This is it has generated a debate. And then we have to look at those matters.
Well, speaking of a debate and a discussion, I think, unequivocally, 2 thumbs up coming in from the VC community, from the startup ecosystem, because that vexed angel tax issue has been addressed. It's been abolished. This has been a long-standing demand. One of the other concerns, and of course, parity now, even as far as capital gains is concerned, at 12.5%. So that's the other piece of good news. But one of the other concerns, since you talked about, bringing in surplus capital back into India, is this business of reverse flipping of companies looking to move back to India, to list in India, and the tax implications on account of that. Is there any thinking on that front at this point in time to try and address that?
See, that demand has been there, rather that expectations have been there, and that is under consideration. What is the best way of addressing those concerns to get those companies come back to the India because they see certain advantages coming up? That is a work in the making. As and when the decision gets taken, it will get announced.
So credit growth, on the back of the many measures that have been announced, the growth stimulating measures that have been announced, what do you expect credit growth to look like, in the second half of the year?
So credit growth currently is around 15%. I think in the second half also it will remain in the same region. The deposit growth rate is around 12%. So that is the gap probably Secretary DA was talking about. I presume for the next half it will remain the same.
Let me get both of you to comment on the interest rate trajectory, both globally as well as domestically. And Mr. Seth, let me start by asking you, the expectation now is that we are seeing a more controlled inflation environment, both globally and of course in India, we've said that inflation is well under control. Domestic rates as well as global rates, what's the expectation?
See, today we are discussing the fiscal policy statement, the budget. Yes. Today is not the forum, and certainly not from Department of Economic Affairs. We discuss monetary policy. That is the remit of the RBI.
Can I extend this to what the survey has suggested, that food inflation should be kept out as far as the inflation framework is concerned? Is that up for debate in any form or fashion?
See, that debate is not just in India, even overseas, and there have been a conversation even in the International Monetary Fund as well, that inflation targeting globally, what should be the benchmark? So that is a more academic work, more research work is there, and economic survey also does talk about some of that work.
So as far as banks are concerned, sir, I know you'll probably give me the same answer on interest rates, so I'll pass that question. But bank privatization, any effort, any move towards that?
Bank privatization, IDBI is already under consideration, and the others are the previous budget announcements. This budget doesn't talk about any bank privatization.
No, it doesn't. But are we still? Is that window still open, or?
I think I'll stop here only.
Stop here. You're closing that window on me, Mr. Joshi and Mr. Seth. Always a pleasure. Appreciate you joining us here today, and we look forward to more conversations with you on the CNBC TV18 budget verdict. Appreciate your time. The budget makers here on CNBC TV18 live and exclusive, decoding the budget fine print, its impact and its implications for the economy. More coming up. We're back with the CBDT and CBIC chiefs. Don't go anywhere. Back in a moment.
Thank you.
Act. Our government has made concerted efforts to fulfill the commitments in Andhra Pradesh Reorganization Act. Recognizing the state's need for the capital, recognizing the state's need for a capital, we will facilitate special financial support through multilateral development agencies. In the current financial year, 15,000 crore rupees will be arranged with additional amounts in future years. Our government is fully committed to financing and early completion of the Polavaram irrigation project, which is the lifeline for Andhra Pradesh and its farmers. This will facilitate our country's food security as well. Under the Act, Andhra Pradesh Reorganization Act, for promoting industrial development, funds will be provided for essential infrastructure such as water, power, railways, and roads in Kopparthi node on the Visakhapatnam-Chennai Industrial Corridor and Varavakal node on the Hyderabad-Bangalore Industrial Corridor. Andhra Pradesh Reorganization Act. Our government has made concerted efforts to fulfill the commitments in Andhra Pradesh Reorganization Act. Recognizing the state's need for the capital, recognizing the state's need for a capital, we will facilitate special financial support through multilateral development agencies. In the current financial year, 15,000 crore rupees will be arranged with additional amounts in future years. Our government is fully committed to financing and early completion of the Polavaram irrigation project, which is the lifeline for Andhra Pradesh and its farmers. This will facilitate our country's food security as well. Under the Act, Andhra Pradesh Reorganization Act, for promoting industrial development, funds will be provided for essential infrastructure such as water, power, railways, and roads in Kopparthi node on the Visakhapatnam-Chennai Industrial Corridor and Varavakal node on the Hyderabad-Bangalore Industrial Corridor. Andhra Pradesh Reorganization Act. Our government has made concerted efforts to fulfill the commitments in Andhra Pradesh Reorganization Act.
Were increasing, and it reached to the level of $120 per barrel, and that was leading to worsening of CAD, and because of that measure the imports of gold came down. But again from the next year the volumes started increasing and gold started coming in form other than bullion. So that is one of the reasons, and other than that, the most important reason is that gold is the raw material for gems and jewelry sector, which is very important sector, which provides lot of employment. Something like 50 lakh people are working in that sector, and it is very important sector for exports also. Almost 8% of India's export is from this sector. So that was also one of the reasons to make the legal gold made available to that sector. So it was thought that duty rate can be cut down, because and to curb that the gold which was coming through other than legal means and by subterfuge. So So it will impact that also.
Okay, so that explains the sharp cut as far as the customs duty is concerned. One, because of this being a job-creating sector as well as the sector with export potential. But I also want to understand from you, sir, in the context of what we've seen the government do in hiking long-term capital gains, on hiking F&O, the STT on F&O trade, on hiking short-term capital gains as well. So people are saying that, look, you're hiking capital gains there, the tax there, but you're bringing down a significant portion of the duty as far as gold is concerned. How do you explain the two?
You see, so far as hiking of the capital gains is concerned, let us see the pattern and the profile of the people who are actually would be mostly hit. That is basically high-end, high net worth individuals, because what we found was that a significant percentage of the people who would be actually, for whom this tax rate would adversely maybe impact is high net worth, right? But so far as the common man is concerned, the middle class is concerned, for them this regime, the new regime that is being proposed, is actually beneficial. The common perception at present is that, okay, we have reduced or done away with the indexation. But then we have also reduced the rate. From 20% it is 12.5%, right? And if you compare the value of the assets that have gone up in the past about 8-10 years, one would find that actually the capital gains that would come or the tax that would be there would be much less than what would be was there in the indexation regime.
Okay.
So for example, in the last 10 years, if an asset has actually, the value has grown up, say, by 3 times, right? The new regime would be actually beneficial.
Okay.
So that way, I think people would actually, once they start analyzing, they would definitely
that was the case that Mr. Somanathan was also making here, that it would be beneficial for most people and across most asset classes. But, you know, I want to understand from you a couple of announcements that came in from the budget and this review of the Income Tax Act, a 6-month period being given by the Finance Minister. Is a fairly daunting and audacious task. Explain to us what will be the thrust of this review beyond simplification.
So one is, of course, simplification, and the other is how do we actually make it simple for the taxpayer, the common taxpayer, to comply with the regulations. Can we make it, so for example, over a period of time what has happened is the amendments have taken place as and when situations arose, and that has made the act bulky. So can we make the language of the act also easy for people to comprehend that language? So that is also one thing. How do we present the provisions so that it becomes easy for a common person to understand and to follow the regulations?
Okay, let's talk about the customs duty changes, and many customs duties changes. Of course, the inversions have been tried to be corrected this time around as well. On balance, the impact of the duty corrections as well as the changes announced?
Yeah, I would like to mention that you will see a definite direction in the way the budget proposals have been formulated. And these proposals have been formulated to give impetus to domestic manufacturing, the strengthening and diversity of supply chains, and encouraging the exports to make them more competitive in the international market. In addition to that, there was some onslaught on hugely cheap imports. So there also the corrections have been made. Likewise, there were certain items where there was inversion in duty structures. So that has also been corrected. To elaborate further on that, I would like to mention that duty has been made nil on 25 critical minerals. These minerals are not mined in India. And it was very important to bring the rate of duty nil on these minerals so that these can be processed and can be used in the downstream industries, which are very important for India, like renewable energy, electronics, defense and space sectors. So by bringing down the duty to nil on this critical animal, so that kind of manufacturing impetus has been provided to the domestic industry. Likewise, to promote the exports, the inputs which are used for those produce have been brought down to nil. So I will give you one example of that. There is a lot of shrimp export from India. And for that, the shrimp feed, there the rate of duty has been reduced from 15% to 5%.
Yes.
And the inputs which are used in manufacturing of that shrimp feed, there the duty has been brought down to nil. So this is all to promote the exports of shrimp from India.
Yes, and found a mention also in the budget speech, by the way. So that was interesting to see.
Yeah, likewise to correct the inversion on import duty, MDI is one of the important raw material, which is again not manufactured in India.
Yeah.
And it is used in making the spandex yarn. On spandex yarn, the rate of duty was 5%, whereas on MDI it was 7.5%. So there also the rate of duty has been brought down to correct that inversion. So similarly, there were certain items like ammonium nitrate and then this flax banners. There the very cheap imports were coming, maybe because the industry in the country was having some advantage because the input were produced in those countries, like natural gas was produced in some countries and it was being imported from those countries, and therefore the industry which is manufacturing ammonium nitrate in India was facing lot of issues.
So do you believe that most of the cost correction has been done with respect to at least correcting the inversions?
So we have tried to do the correction as far as possible, but there were certain issues because if the inversion is coming because of rate of duty being nil under some free trade agreement.
Okay.
So there it is difficult to do the correction.
Fair enough. Fair enough. I want to address, the big positive that's come in, which is the abolition of the angel tax. This has been on the tax wish list of the startup VC community for very long. Finally, it's been done away with, as well as parity coming in on capital gains for unlisted shares. So that's another piece of good news. The impact of this now, do you believe that the funding winter that we've gone through will finally lead to spring?
Yeah, so basically this is an attempt to open up, you see, the sector and to bring in more investment, because otherwise what was being perceived was that, well, because of this, you see, provision in the Act, there was some hesitation in this investment coming. So we hope that with you see, this initiative of the government, we will get more investment and more business from outside.
Well, that certainly is the hope. Let's talk about GST, sir, and what the road ahead looks like as far as the GST is concerned. Obviously, not something that the budget will take up. This is a matter for the GST Council to take up. But the expectation that we are going to see more items being brought under the GST regime, especially the items that are under the VAT regime of state governments at this point in time. Has any formal proposal moved on natural gas, etc. at this point?
Not so far.
Not so far. Do you expect it to move anytime soon?
We are open to it, provided the states, they are also interested in bringing certain items on which either the excise duty is levied or VAT is levied. So if GST is to be expanded on that, because these items fetch, like petroleum, there are 5 items on petroleum: crude, petrol, diesel, natural gas, and ATF. So out of that, petrol and diesel, that fetches a lot of revenue, central excise duty to the central government. Likewise, it fetches a lot of revenue to the state governments.
So nobody wants to give up control.
So it's not giving up the control. It is basically the revenue which is coming from these stream.
Yeah.
So how to compensate for that? So that is an issue, but we are not averse to the idea of bringing, if not all, but maybe some
items
under GST.
May I ask you whether this is accurate or not, that we're not going to be seeing GST numbers being reported every month?
Earlier we used to maybe giving the press release, but if somebody wants the numbers, those numbers are in the public domain.
No, I'm just asking because we've gotten so used to reporting GST numbers month after month. So what's now the GST run rate expectation from here? We've been doing 1.7, 1.7 plus. What's the expectation from here, sir?
The GST, as far as our budgetary estimates for GST collection is concerned, it is 11%. And the GST, in fact, I would like to mention that last year, the GDP growth, the nominal GDP growth was 9.6%, whereas the GST, gross GST collection have gone up by 11.7%. If you look into these two figures, the tax buoyancy was something like 1.21, which was very good. And that gives us lot of satisfaction that the compliance levels are going up.
Yeah.
And as the GST is having inherent systemic efficiencies. So all that is leading to very good tax buoyancy. But I would like to mention that GST collections are again intricately linked with gross GDP.
Absolutely. They're linked to the way that the economy performs.
Yeah, the way the economy performs, it is intricately linked to nominal GDP.
But case for rationalization, and do you believe that we're any closer to moving towards rate rationalization on GST?
On rates on GST, there is already a GOM, that is a group of ministers which has been constituted, and because of certain changes that has been reconstituted in the last GST Council meeting, that has been approved. That committee, that group of ministers will be looking into the rates, and I think the report will come soon.
One final question on GST, and this has to do specifically as far as this online gaming business is concerned, which is, I know, a matter in the Supreme Court. But it's given the government a significant amount of revenue as well. But, with all of the clarifications being sought and, the litigation that's currently underway, what is the thinking now on how to address this?
As far as online gaming is concerned, we are finding no difficulty, because after the certain amendments which were carried out with prospective effect have been implemented, the revenue, GST revenue which is coming from online gaming sector has gone up manifold.
Yes.
So as such, no issue has been reported to us that there is any kind of problem happening in that particular sector.
Okay. Let me ask you, as far as direct taxes are concerned, of course, that's provided the cushion for the government along with the RBI dividend bonanza. But what's the expectation now, both on the back of compliance measures as well as the strength of the economy, on how much better you are likely to do?
So, we have this thing about last year we collected about 19.58 lakh crores. And this year we expect that we would collect somewhere around 22 lakh crores. So that way there's an up of about 20% that way. So 12 point something, 12%. So that is what we are looking at. And of course, because of this budget, you see, provisions that we have. So there's some plus and there's some minus.
That's
it's all quits that way. But since the economy is growing and the compliance is, of course, becoming better day by day, we are getting more data, and on voluntary front also the taxpayers are responding. So therefore we expect that we would so for example, as on today, the percentage increase in the revenue is about 20-21%, which is a very encouraging number. So we expect that going forward at the end of the year, we would close on a very positive note.
Well, we will also close on a very positive note. Thank you very much to the CBDT Chief and the CBIC Chief for joining us here. We look forward to continuing this conversation at the CNBC TV18 Budget Verdict, where we will see the two of you tomorrow. Appreciate you joining us here this evening, but we've got a lot more questions for you, but unfortunately out of time. We are going to take a break here and return with more budget makers here from the CNBC TV18 Budget Headquarters. We're back in a moment with more.
Recognizing the state's need for the capital, recognizing the state's need for a capital, we will facilitate special financial support through multilateral development agencies. In the current financial year, 15,000 crore rupees will be arranged with additional amounts in future years. Our government is fully committed to financing and early completion of the Polavaram irrigation project, which is the lifeline for Andhra Pradesh and its farmers. This will facilitate our country's food security as well. Under the Act, Andhra Pradesh Reorganization Act, for promoting industrial development, funds will be provided for essential infrastructure such as water, power, railways and roads in Kopparthi node on the Visakhapatnam-Chennai Industrial Corridor and Varavakal node on the Hyderabad-Bangalore Industrial Corridor. Coming to personal income tax rates, I have two announcements to make for those opting for the new tax regime. First, the standard deduction for salaried employees is proposed to be increased from 50,000 to 75,000 rupees. Similarly, deduction on family pension for pensioners is proposed to be enhanced from 15,000 to 25,000 rupees. This will provide relief to about 4 crore salaried individuals and pensioners. Second, in the new tax regime, the tax rate structure is proposed to be revised as follows: 0 to 3 lakh rupees, nil; 3 to 7 lakh rupees, 5%; 7 to 10 lakh rupees, 10%; 10 to 12 lakh rupees, 15%; 12 to 15 lakh rupees, 20%; and above 15 lakh rupees, 30%. As a result of these changes, a salaried employee in the new tax regime stands to save up to 17,500 rupees in income tax.
Welcome back. You're watching the Budget Makers here from the CNBC TV18 headquarters. Joining me now is the Chief Economic Advisor and the Revenue Secretary. Gentlemen, appreciate you joining us here. I know it's been a long last couple of days, so let me start by asking you, Revenue Secretary. I think the big announcement that got everyone a little bit by surprise. I think people were expecting, with all the warnings from the SEBI chief, the RBI governor and Mr. Nageshwaran, that something's coming on F&O. What people were not expecting was the changes as far as capital gains is concerned and short-term capital gains, as well as the indexation benefits that have been done away with. You're saying that you don't see these as big changes, you see these as marginal changes, as rationalization, and you believe that that's what the market has now digested as well.
Exactly. So you have said it all. There has been long, commentary, a demand that we should be simplifying capital gains, especially, and generally, our tax laws. And the FM, in her speech, did make a mention of that. It's actually a continuing agenda for us, to simplify our tax laws, to simplify our tax rates. You've seen that. You have seen this, over and over and over again, starting with, GST. The customs rates, number of custom rates, were brought down. And now, you see it in capital gains, you see it in the regime for charities, you see it, in tedious rate structure, that we have tried to simplify. So this is more, a simplification as everyone really wanted. This actually makes it easier for everyone, to pay their taxes. It improves compliances. And at the same time, it also, because litigation reduces, demand actually embroiled in disputes reduces. So you get real revenues of the day rather than, demands stuck up, in courts.
Not the interim budget, but the last budget. And again, there was expectation and anticipation that the government would move towards rationalization, simplification as far as the long-term capital gains regime was concerned. That was not to be, because when we spoke then, you said that there was no, there was discussion, but there was no consensus on the approach to take or the rates or the tenure to settle at. So what changed this time around? How did you arrive at consensus, or did you decide to go ahead anyway, irrespective of consensus being evolved?
No, obviously there has to be consensus, within the government, and the finance minister, under the leadership of the prime minister and the cabinet, they take these decisions. Obviously there was consensus in this. Things can take time. But the direction, has always been to simplify things. They can take time, they may happen yesterday. The timing is also, important. And so
the timing question, were you emboldened by the fact that we've seen this record rally as far as the Indian stock markets are concerned? Did that embolden you to take this decision at this point?
Yes, that certainly, weighed in. Obviously, if the markets would not have been doing as well, then that would have weighed in and may have deterred us. But the markets are doing phenomenally well, and so this is really a very, very small hike.
So you don't believe this is going to spoil the party, so to speak?
No, not really. No. Because this is, markets have been growing at a phenomenal rate, more than 10% per year over the last 5-7 years. So if it is 10%, then what this does is take away, 2.5%, which means 9.75%. So it really does not impact, the markets. And that is what, the markets had to say today if we go by the
reaction and the recovery that we saw. Well, one of the things that please go ahead.
Before you ask me that question, I want to come in on what Sanjay said on this question. I think to say that increase in the short-term capital gains tax and the long-term capital gains tax, etc., will be bad for the market is somewhat myopic. But if you look at how this market has rallied so much in the last so many years, it started with the corporate tax cut in 2019, and more importantly, as we have been repeatedly saying, it is the pursuit of sensible fiscal and monetary policies over the last several years that created macroeconomic stability in which the corporate sector could thrive and rebuild balance sheets, government recapitalize banks, and to recapitalize banks you need money as well in the fiscal. So I think the capital market investors also need to take a holistic view. This kind of careful, calibrated and prudent approach to fiscal policy in general is what has paved the conditions for the market to have this kind of a rally. And it is all part of that policy mix that within which you must view these capital gains tax rationalization.
No, fair point that you make, CA. But, I think something that one was expecting on the back of what we heard, as I pointed out, from the SEBI chief, the RBI governor, and then yesterday, you in the economic survey, was some action as far as the F&O market was concerned. How worried are you on this kind of speculation that you believe we are seeing on the F&O side? And do you believe that, with this STT hike, that's enough, or do you believe more needs to be done?
No, two questions here. One is, how worried are you? It is not that one needs to be worried so much to take an action. If you're really worried too much, probably it's already too late. And it's important to take some of these actions before they become systemic concerns. And yesterday, I categorically mentioned that we don't see it as a systemic risk at all. But it's important that we don't let it become a systemic risk. So in that sense, it's an important preemptive action. Now, whether a short-term transaction tax alone would deter speculation in the market, we don't think so. But it does send an important signal that we do view this as an act that is detrimental to the interest of the investor himself or herself. That is the key message. And that is what SEBI's working paper has been saying. 9 out of 10 trades lose money. And there are much better ways of augmenting your savings and retirement income through more direct investment into stock markets rather than through speculation.
Yeah, and I think, Mr. Somanathan, who was here earlier, also said that perhaps the next set of measures, if at all, will be taken by the regulators when we talk about this. But let's understand some of the other decisions that were taken. There were many corrections on the customs duty front that the government made, correcting the inversions and so on and so forth. Do you believe that on the GST now, and I think that's the next set of reforms that one is waiting for. There's not a matter that the budget could take forward. It is a matter of the GST Council. Are we ready to set the ball rolling on rate rationalization? Are we even considering the possibility of reducing the slabs as far as the GST rates are concerned?
As mentioned, this budget talks about simplification on all the three taxes. Income tax code, we are talking about comprehensively reviewing it within this 6-month period. Similarly, the number of custom duty rates, they were reduced last year. Again, there is a mention to do it, again within 6 months. Further, reduce and rationalize the number of tax rates to reduce classification disputes, etc., make it simpler. And similarly, there was a categorical statement of the Honorable Finance Minister in the budget speech with regard to the GST. GST, you are aware, it is not, something which is only in the domain of the central government.
It can't be unilaterally done by the central government.
It can't be done unilaterally, but a statement has been made categorically stating that we would like to rationalize those rates and reduce, the number of slabs that are there, and at the same time...
The GOM is looking at that aspect as and when the GM looks at it, but is the fitment committee now ready with ideas, suggestions, a roadmap on what potentially we could be talking about?
Now that the speech, that the finance minister has announced it, obviously, it will be our endeavor to look into all these things and try to arrive at a consensus, because these decisions are not taken only, by the fitment committee. There is the fitment committee, there is the GOM, and ultimately, there is the council. So obviously work will be done insofar as the central government is concerned to try and bring about a reduction in a rationalization, in these rate structures of GST, and even reduce, the number of
3? Are we talking about 3 as a possibility?
See, the point is that we need to understand that, someone may say, that we need to have only one. Some countries may have, only one rate.
Which we understand is not practical.
But we understand, that is not something, which is going to be possible, or 1 or 2 rates, that may be, ideal. But is this society actually, ready for it?
Fair point.
Because we also need to keep in mind that there are people in the lower sections of society where, we would like to give relief to them. And so that's why we would like to have it progressive. And to have progressivity in it, we need to have lower rates for those items which are actually consumed, by the common and the lower income classes, and higher rates for those who are in the higher income groups. So we cannot, so it has to be in a phased manner.
Right.
It has to be over a period of time. Yes, certainly we need to reduce the number of rates. Today there are 5. We need to go, step by step.
Step by step and calibrated fashion. But one quick clarification before I talk to the CA about 2 of the specific announcements that came in on employment skills as well as MSMEs. On the STT, the rate change is effective October.
That's true. Because we need to give time to those, who collect the tax, the exchanges, to make changes, in their systems. So that's why, this time has been given.
Okay, so...
Whereas, capital gains, etc., those are on an yearly basis. They are not, collected while the taxes actually, while, the gains accrue. They are actually paid, later. So that's why, they have been made effective immediately.
Okay, so October as far as STT is concerned, and that is on account of the exchanges having to transition.
Yes.
Let's talk about the big announcements that came in on jobs and skilling. This is kind of the thrust of the economic survey as well, that the private sector needs to step up, work with the government, that tripartite compact that you spoke of. How confident do you feel that these schemes are, A, going to take off in the near term, B, that they will be able to achieve the objectives that they set up?
Of course, whenever we make policies, we always start with the confidence that they will have the expected impact. And if you look at the policy, the suite of 3 policies focused on employment cover all possible options, multiple sectors, multiple timelines, first-timers, additional job creation, contribution for 4 years in one case, and another case, 1 month of salary for the paid in 3 installments, etc. So I think there is a suite of offering here, and together, collectively, we believe that they will make a significant dent, because they also come as a package along with the skilling and the internship initiatives, etc. So I think this is a very serious statement on the part of the government in terms of addressing this. And we also mentioned, for example, yesterday in the survey, that we expect the new jobs that need to be created in a year is around 8 million.
Yes.
And if the kind of numbers that we talk about in these 3 schemes, about 400 million and so on, then we are talking about providing the runway for almost 5 years of job creation here. So we are very confident that the intent and the statement and the money that the government is willing to put on the table, and also doing it in collaboration with the private sector, I think give this a very high probability of success.
So it works out to about 10,000 crores from the Labour Ministry and about 5,000 crores.
That is the allocation for this year. That's
this year, that's right. For this year, I was talking about specifically, and about 2,000 crores from the Corporate Affairs Ministry is my understanding.
That's for the internship program.
That's correct. On the MSME, because I know that that's something that you worked on, and the survey spoke about that as well. How soon do you believe that this is going to be operationalized? But more importantly, what are the checks and balances that you believe will need to be put in place that it doesn't become a problem for the banks?
No, I think first of all, this is a self-financing program, if you're referring to the credit guarantee program. And the proposal came from the MSMEs themselves. They're willing to pay a one-time guarantee fee at the beginning, and also an annual guarantee fee on the declining balances. Yes, it is a pooling of credit risk. And we are confident that since the economic growth rate in general is going to be upwards of 6.5% to 7%, I think the necessity of having to invoke this guarantee for multiple borrowers is not going to arise. So I think we are quite confident that in terms of boosting the share of manufacturing and making credit available for purchase of capital equipment, which is what converts the small into medium and medium into large. I think that this incentivizes the banks to do so, and up to 100 crores is a very significant sum.
Yes, and we did speak with the SBI chief about this as well. But I want to talk about the PLI schemes in particular. And of course, we've already seen 13 of them being rolled out. But the expectation was that there might be more PLI schemes for some labor-intensive sectors, specifically toys, apparel, and so on and so forth. Is there any consideration to extend the PLI scheme beyond the current sectors?
I don't think, I mean, that's not my subject, first of all. But I don't think there are any new ones, immediately in the pipeline. Had they been there, they would have been announced in the budget. Having said that, let me just point out to a related aspect, and that is about the PMP. Is the phased manufacturing program which we had initiated for the mobile phones. And you are aware, that we have seen a threefold increase in the manufacturing over there. The duties had actually been increased. It's not a PLI, it's a support, through the customs duties. And here a significant statement has been made by the Honorable Finance Minister by reducing rates, rates which have actually gone up, reduce them so as to assure everyone that these hikes in rates are not, in perpetuity. They will be sunset so that the benefits, so that, the domestic industry actually becomes competitive and it's not, on crutches in perpetuity.
Let me get both of you to comment, and let me start by asking you about the rationale behind the changes that have been made for moving people or incentivizing more people to move to the new tax regime, and the changes that were announced in this budget, which will result in a saving of about 17,500 rupees, is what the finance minister mentioned. Could more have been done? Why the changes that you did decide to go in for? Would the revenue implications have been significantly higher had you put more on the table?
Obviously, I mean, if you give more benefits, the revenue implications will be more. And as mentioned, we had, made these changes only in the last year. And there the benefit given was about 37,500 at the most, I mean, for those having incomes more than 15 lakh. A benefit of 37,500 crore was 37,500 per person was given over there. On top of that, this is another 17,500. And the results have been good, encouraging. 68%, FM mentioned in her speech, have already shifted to the new tax regime. And with this change, we further expect more to change. As mentioned, we will be comprehensively now reviewing, the act, and we'll be closely looking at, what are the exemptions, deductions available in the old tax regime, and what can be, done to simplify those regimes.
The conscious effort and attempt has been to move away from exemptions, and that has been the stated objective and the intent of the government. So is that going to continue to be the thrust of this simplification and rationalization exercise?
You're absolutely right.
How much of it will be simplification? How much of it is likely to be rationalization as well?
No, see, here it is more of incentivizing people to move towards the new tax regime. So nothing has been taken away from old tax regime. Whatever exemptions, deductions, benefits are available, were available, continue to be available. So the effort always has been to make the new tax regime more and more attractive so that people on their own, they have both choices, both for old tax regime and new tax regime. And FM is on record to say that we don't plan to sunset or close this old tax regime. We don't have any date in mind. Of course, we would like everyone to shift to the new tax regime.
But the old stays as well. On balance, this is one of the announcements that came in from a consumption stimulus perspective. Right. The expectation is that this will move the needle. Outside of that, in the near term, of the many budget announcements, where do you believe we are going to see impact being visible and tangible immediately?
No, and in terms of the consumption aspect, the entire set of announcements regarding employment creation will be a boost to consumption growth, because the moment you generate jobs, you generate income, generate spending power, and therefore the boost to consumption is not necessarily only through taxation measures, but through the spending program on employment, and that will be a very direct contributor to consumption growth.
Well, gentlemen, it's a pleasure speaking with you today. We look forward to speaking with you again at the CNBC TV18 budget verdict. Appreciate you joining us. We're going to give you a little bit of a reprieve before you continue the conversations. But many, many thanks for joining us here at the CNBC TV18 budget headquarters. We are going to take a break, but there's a lot more coming up. Don't go anywhere. The budget is being decoded. The fine print is being explained. The rationale behind the many decisions taken being shared with us here by the budget makers themselves. A quick break. We're back with more. Don't go anywhere.
Coming to personal income tax rates, I have two announcements to make for those opting for the new tax regime. First, the standard deduction for salaried employees is proposed to be increased from 50,000 to 75,000 rupees. Similarly, deduction on family pension for pensioners is proposed to be enhanced from 15,000 to 25,000 rupees. This will provide relief to about 4 crore salaried individuals and pensioners. Second, in the new tax regime, the tax rate structure is proposed to be revised as follows: 0 to 3 lakh rupees, nil; 3 to 7 lakh rupees, 5%; 7 to 10 lakh rupees, 10%; 10 to 12 lakh rupees, 15%; 12 to 15 lakh rupees, 20%; and above 15 lakh rupees, 30%. As a result of these changes, a salaried employee in the new tax regime stands to save up to 17,500 rupees in income tax. Apart from these, I am also making some other changes as given in the annexure. As a result of these proposals, revenue of about 37,000 crore, that is 29,000 crore in direct taxes and 8,000 crore in indirect taxes, will be foregone, while revenue of about 30,000 crore rupees will be additionally mobilized. Thus, the total revenue foregone is about 7,000 crores annually. Government will implement following 3 schemes for employment-linked incentive as part of the Prime Minister's package. These will be based on enrollment in the EPFO and focus on recognition of first-time employees and support to employees and employers. Scheme A, first-timers. This scheme will provide 1 month wage to all persons newly entering the workforce in all formal sectors. Direct benefit transfer of 1 month's salary in 3 installments to first-time employees as registered in the EPFO will be up to 15,000 rupees. The eligibility limit will be a salary of 1 lakh per month. The scheme is expected to benefit 210 lakh youths. Scheme B, job creation in manufacturing. This scheme will incentivize additional employment in the manufacturing sector linked to the employment of first-time employees. An incentive will be provided at specified scale directly both to the employee and the employer with respect to the EPFO contribution in the first 4 years of employment. The scheme is expected to benefit 30 lakh youth entering employment and their employers. Scheme C, support to employers. All additional employment within a salary of 1 lakh rupee per month will be counted. The government will reimburse to employers up to 3,000 rupees per month for 2 years towards the EPFO contribution for each additional employee. The scheme is expected to incentivize additional employment of 50 lakh persons. Coming to personal income tax rates, I have 2 announcements to make for those opting for the new tax regime. First, the standard deduction for salaried employees is proposed to be increased from 50,000 to 75,000 rupees. Similarly, deduction on family pension for pensioners is proposed to be enhanced from 15,000 to 25,000 rupees. This will provide relief.
Families are getting, one, of course, tax relief. 2, a very big dream of every middle-income family is to own a home. So this budget puts big emphasis on that. 3rd, when we live in smaller, bigger urban areas, the biggest requirement is of transportation. That has been addressed in this budget, and in the last 10 years, a lot of steps have been taken. For example, expanding the metro network to 18 cities. Those kind of things have happened in the last 10 years, and that's going to be expanded in this budget. Then the focus on making sure that the basic amenities like water supply, the grid connection, all those are addressed in this initiative.
Capex is a big cry that comes from the industry. We saw 11.11 in the interim budget. There was a hope that we may go something, may see a figure north of that. We haven't, we've stuck to that figure of 11.11. Does it meet the infra needs that India is expected when we look at a Viksit Bharat? Do you think this meets the needs of that?
See, the budget is for the financial year 24-25. Interim budget and the main budget have to be seen as one document. Because of the general elections and our constitutional responsibility, the budget presented as interim is basically a vote on account. We have to see the two things in one go. 11,000 crore rupees of capital investment is unheard of in the Congress period. Congress days, it used to be just about 2.5 lakh crore, 2,75,000 crore. Prime Minister Modi ji has significantly increased it over the years and brought it to a level where most of our capital investment needs will be met by this investment. And today the Honorable Finance Minister has said in her speech that this kind of investment level will continue.
So one aspect I just wanted to get your thoughts on is that we've seen in the last couple of years PLI. If we look at PLI in context of the mobile industry's spectacular success, now there's a new initiative called ELI. The government is looking to promote employment. What impact do you see? We understand it's a 2 lakh crore allocation. We're talking big numbers. How do you see ELI panning out in the next few months?
ELI is based on our experience during the COVID, where employment-linked incentive scheme was launched for 3 years. It worked very well for 3 years. That helped the people who were looking for jobs and the industry which was trying to which wanted to employ more people, but because of the uncertainties of COVID, they were facing challenges, which was addressed by the ELI scheme. And in today's budget, that has been launched once again in a big way. And there is another component, which is internship. In our BJP's manifesto, these two programs were part of our manifesto. And we have basically built upon the experience that has been gained over last 10 years through the Skill India program, which also had internship and working with the industry as a component of it, and ELI, which was called as Atmanirbhar scheme during the 3 years of COVID period. So we have built upon that and launched this scheme. These are 5 schemes as a part of this package, and this will be a big employment generation scheme, as well as this will help the industry, because there will be a match between what the industry requires and what the society can do. So, and I'm sure you would have heard L&T CEO's statement, where I think he said that they need about 45,000 more people. So this kind of scheme will help provide employment to the youth, as well as it will meet the requirements of the industry.
If I can just ask one follow-up question, sir. The economic survey said that going forward for the next 5 years, we need to create 78 lakhs jobs every year. You think ELI can help us achieve that target?
Yes, it will definitely help. And even if you look at last year's job creation data, the net formal jobs which were created, they were of the order of about a crore and 40 lakh. 1.4 crore jobs were created in the formal sector. If you look at the EPFO data, where new joinees minus the people who left plus the people who rejoin, if you make the net of this, then that is about a crore and 40 lakh. So this will certainly help that goal of creating large number of jobs.
I think this is a budget which is reflective of inclusivity, innovative, and impactful. This budget is multidimensional. It addresses a very vast span of subjects. It will have an impact on almost every section of society. It has, in a very unique way, addressed the issue of increasing employment for our young men and women, particularly with its focus on skill development, so that we have more and more employable young people. The thrust is on making our young people job creators, not job seekers. Even the angel tax has been removed for startups. Infrastructure and tourism are two areas which will significantly provide employment opportunities. Also business opportunities, also trade opportunities, also support India's competitiveness in manufacturing or provision of services. And therefore, if you see on a holistic way, this is a budget that addresses so many things simultaneously. It focuses on the East, the backward states of Bihar, Odisha, West Bengal, Andhra Pradesh, Jharkhand. That entire eastern belt has received a significant thrust. Prime Minister since 2014 has maintained that until the eastern part of India develops, we cannot become a developed nation. Similarly, it's very pragmatic.
Right.
The gold and silver import duty reduced to 6%. It really will give a big boost. Women will be empowered. We have the marriage season coming up. Mangal Sutras will get cheaper. But more importantly, our artisans who use small quantities of gold with their intricate offerings can now look at export market also, can now look at a greater involvement in the Indian trade. So I think this has looked at very minor issues, but in a macro context.
Right. I would also like to speak to you about FDI, because this was a point specifically mentioned by the finance minister, saying that the government will work in the coming months towards simplifying FDI rules to encourage more investments, also to encourage use of rupee in overseas investments. Give us a sense of the thinking and some of the changes on the anvil.
Well, the changes on the anvil are still under deliberation. Otherwise, the Honorable Finance Minister would have given it to you. But I think the thinking is to make India an attractive destination. Under Prime Minister Modi, we've seen massive growth in FDI over the last decade. We believe that we are now in a strong position, strong fiscal position, strong foreign exchange reserves, fastest growing large economy of the world. We've clocked an average of 8% for 3 years in a row. We hope to continue that streak in the years to come. The world is looking up to India for leading global growth. And in that context, we do believe that it will be important for us to also encourage more and more international players to come and establish in India, manufacture in India, provide services from India. And with the greater interest in the developed world to look at India, particularly in Europe and the US, Middle East, they're all looking up to India to become their engine of manufacturing, engine of provision of services, engine of R&D. We believe that there may be some areas where we can further liberalize or make foreign direct investment foray into India smoother and simpler.
Any sectors which you feel on top of your mind, which you feel that liberalization is possible?
You won't get that headline.
Okay, all right. The next question, sir, would be about e-commerce hubs. The finance minister spoke about that. Is there a plan to launch a certain number of hubs in the next 1 or 2 years?
That's right. We do believe that we could do 10, 15 hubs, but we'll have to look at the interests of business. Ultimately, it'll have to be a demand-driven initiative. The idea is to make it very simple to operate in the e-commerce hubs, allow the free flow of goods, have custom clearance within the e-commerce hub. And I'm delighted that Honorable Finance Minister has brought it into the budget so that we can start operationalizing a few and test the market for it. I do believe that there is significant possibility for growing our e-commerce exports, and this will become a medium for that.
Right. Now, speaking about Chinese investments, one of the things that you've been strongly pushing is to make sure that India rises as a manufacturing hub for the world and is an alternate manufacturing destination. The economic survey noted that India must be open to Chinese FDI or be aligned to the Chinese supply chain. How do you see that suggestion, sir?
Well, I think these are suggestions or ideas that keep coming every year from different economists in different forms. We respectfully will examine all of these suggestions and ideas at all appropriate forums.
In terms of encouraging domestic manufacturing, give us a thinking of the government. There has been a duty rejig. The finance minister has said that the entire customs duty regime will also be looked at comprehensively. Where do you think you would like to take India as a manufacturing destination with these changes in customs duties?
Well, if you see, some of the ideas that she has promoted are very, very welcome. For example, the announcement around the inputs that go into textiles and leather goods. Now, their import duty reduction will not hurt, but will actually support labor-oriented manufacturing in textiles and leather. Similarly, critical minerals. It's a reality that we will have to bring in critical minerals from other parts of the world, particularly if we have to increase our foray and make our electric mobility more competitive. So it's a budget that has been very thoughtful, very incisive in particular sectors which needed to be supported.
Right. My final question would be about the Jan Vishwas Bill 2, which was also mentioned. Further measures on ease of doing business, decriminalizing certain laws. Could you give us a sense of some measures that are under consideration, some feedback that you've received from the industry?
Well, I must place on record my deep appreciation of all my colleagues at government who helped craft the Jan Vishwas 1 bill. We had the support of 18 or 19 different departments. We covered about 42 different laws and nearly 182 different sections, which we were able to decriminalize at one shot. And the name itself reflects a two-way traffic. The people of India trust Prime Minister Modi, and Prime Minister Modi's government trusts the people of India. And that is why it was called the Jan Vishwas Bill by Prime Minister Modi. We believe that the time is ripe for the second tranche. We are in dialogue with private sector, with with other government departments or other ministries. We are in touch with trade bodies, with exporters. We are in fact trying to crowdsource ideas on what are the particular areas which we should focus on. If there's any particular law which they believe or people believe we can decriminalize, make compliance burden easier, make it easier to do business, we are very, very much ready and willing. In fact, I'm often complaining to industry bodies, including CII, FICCI, that you're not demanding enough. Please come up with more ideas for compliance reduction or decriminalizing. Through your channel, I'll appeal to everybody that please give us your suggestions, which are the particular laws. For example, we are working on the legal metrology to see whether the Weights and Measures Act can be further simplified or decriminalized. Like that, there are many other laws where if we get feedback from MSMEs, from our small traders, retail traders, from the people at large, or from businesses, all of us in government are ready and willing to do our best. However, you will appreciate we cannot compromise on the safety and security of our citizens.
Any good news on FTAs in the coming months, sir, that we expect?
Well, we are always very optimistic.
Either EU might take time, but on the UK FTA?
Coming to personal income tax rates, I have two announcements to make for those opting for the new tax regime. First, the standard deduction for salaried employees is proposed to be increased from 50,000 to 75,000 rupees. Similarly, deduction on family pension for pensioners is proposed to be enhanced from 15,000 to 25,000 rupees. This will provide relief to about 4 crore salaried individuals and pensioners. Second, in the new tax regime, the tax rate structure is proposed to be revised as follows: 0 to 3 lakh rupees, nil; 3 to 7 lakh rupees, 5%; 7 to 10 lakh rupees, 10%; 10 to 12 lakh rupees, 15%; 12 to 15 lakh rupees, 20%; and above 15 lakh rupees, 30%. As a result of these changes, a salaried employee in the new tax regime stands to save up to 17,500 rupees in income tax. Apart from these, I am also making some other changes as given in the annexure. As a result of these proposals, revenue of about 37,000 crore, that is 29,000 crore in direct taxes and 8,000 crore in indirect taxes, will be foregone, while revenue of about 30,000 crore rupees will be additionally mobilized. Thus, the total revenue foregone is about 7,000 crores annually. Bihar has frequently suffered from floods, many of them originating outside the country. Plans to build flood control structures in Nepal are yet to progress. Our government, through that,
Hello and welcome to our budget special. I'm Ritu Singh and here are the headlines that we're tracking this evening. Finance Finance Minister Nirmala Sitharaman records setting 7th consecutive budget, focuses on continuity and growth, uses the cushion from a higher dividend from RBI and public sector companies to enhance and introduce certain welfare schemes and incentivize employment generation. Allocation to capex, defence and subsidies remains the same. So does allocation towards Prime Minister Kisan and Manrega. The government continues to aggressively walk the fiscal consolidation talk. Budget 2024 pegs fiscal deficit for FY25 at 4.9% of the GDP against the interim budget's 5.1%. Finance Minister targets a deficit below 4.5% for FY26. Minister Sitharaman proposes hiking short-term capital gains on certain financial assets to 20%. Long-term capital gains tax is hiked to 12.5% on financial and non-financial assets. Finance Secretary Somanathan clarifies that the idea was to bring equity in capital gains taxation, also rules out further hike to capital gains tax for now. Real estate investments lose the benefit of indexation, which allowed property owners to adjust their gains for inflation. Finance Secretary clarifies that the tax incidence under capital gains without indexation is actually lower and will benefit a lot of people. Adds that indexation benefit will attach to properties bought before 2001. The Finance Minister moves to deepen the tax base by taking advantage of rising retail investor participation in derivatives trading. Proposes to hike securities transaction tax on future contracts to 0.02% and on options contract to 0.1%. The changes will be effective the 1st of October. Big relief for individual taxpayers under the new tax regime. The budget proposes hiking standard deduction to 75,000 rupees from the current 50,000 rupees. Also tweaks tax slabs to lower the overall tax incidence. The Finance Minister says changes will help a salaried employee save up to 17,500 rupees a year in income taxes. At 14.13 lakh crores, the government's gross market borrowing numbers are largely unchanged from those presented in the interim budget. The Finance Minister promises to try and keep the central government's debt on a declining path as a percentage of GDP. Divestment revenues forecast also unchanged at 50,000 crore rupees. A roller coaster ride on Dalal Street as Sensex and Nifty recover in late trade after a sharp drop. Mid-caps and bank stocks see sharper cuts. India's startup ecosystem's long-standing demand to become a reality. Finance Minister Nirmala Sitharaman abolishes the angel tax for all investor classes. Says the move will bolster their entrepreneurial spirit. Startups laud the announcement, expect funding into the sector to go up. E-commerce companies also get a breather. The budget proposes withdrawing the 2% equalization levy on consideration received from e-commerce supply of goods and or services effective the 1st of August. Startups can also breathe easier. The Finance Minister proposes abolishing the angel tax for all classes. Made in India mobile phones, electronics, gold and silver and platinum jewelry may get cheaper. The budget proposes lowering custom duties on a host of input products for these sectors. The budget announces a slew of measures for coalition partners in Andhra Pradesh and Bihar. This includes a 15,000 crore rupee assistance through multilateral agencies to build a new capital in Andhra Pradesh. Bihar will also get 26,000 crores to build highways and promises of additional support to build new airports, medical colleges and sports infrastructure. In other headlines, the Supreme Court declines to scrap the NEET UG exam for aspiring medical students, rules that there is no systemic breach to the sanctity of the exam while admitting to the absence of sufficient material on record. Hindustan Unilever's first quarter numbers beat estimates, profits rise 2% and domestic volume growth comes in at 4%. The management expects a gradual recovery in rural demand. And Kamala Harris races towards the Democratic Party's nomination for the White House, gets support from enough delegates to clinch the nomination. A new poll shows Harris is outperforming Biden but still trailing Trump by 2 percentage points. Those are the headlines at this hour. Shireen Ban will be joining us with special guests in just a bit. But before we get to them, here are some glimpses of Finance Minister Nirmala Sitharaman presenting her record 7th consecutive budget and the reactions that has evoked.
short-term gains on certain financial assets shall henceforth attract a tax rate of 20%, while that on long-term gains on all financial and non-financial assets, on the other hand, will attract a tax rate of 12.5%. I propose to abolish the so-called angel tax for all classes of investors. Security transaction tax on futures and options of securities is proposed to be increased to 0.02% and 0.1% respectively. The standard deduction for salaried employees is proposed to be increased from 50,000 to 75,000 rupees. This year, I have provided 11,11,111 crore rupees for capital expenditure.
ये देश के गांव गरीब किसान को समृद्धि की राह पर ले जाने वाला बजट है।
हम लोगों ने एक कह दिया कि विशेष राज्य का दर्जा दीजिए या विशेष अधिकार के लिए मदद दीजिए। यहाँ के लिए जो जरूरत है बिहार के लिए, क्योंकि बिहार को भी आगे बढ़ना है, तो बहुत कुछ किया है, आप जानते हैं।
इस बजट में बिहार फर्स्ट, बिहारी फर्स्ट को भी धरातल पर उतारने के प्रावधान लिए गए।
आंध्रा की बात जब आती है तो उसके लिए तो मैं तहे दिल से शुक्रिया अदा करना चाहूँगा नरेंद्र मोदी जी को, जिन्होंने एक वादा किया था कि आंध्रा की देखभाल हम करेंगे और उन्होंने आज किया है बजट के रूप में।
किसान, गरीब, महिलाएं, युवा और मध्यम वर्ग के कल्याण पर विशेष रूप से ध्यान दिया गया है।
Finance Minister had an opportunity to read the Congress manifesto after the Lok Sabha 2024 elections. She has virtually adopted the ideas underlying our proposals.
There was no mention of Manrega. There was no mention or insufficient mention of any steps taken to improve the income of the ordinary person.
Hello and welcome to the CNBC TV18 Budget Town Hall. I'm Shireen Bhan. We've been decoding the budget fine print for you since the budget was unveiled by Finance Minister Nirmala Sitharaman, her 7th consecutive budget. We are now joined by captains of industry to talk about the impact and the implications. A power-packed panel: Sanjeev Mehta, Executive Chairman of L Catterton India, the former MD and CEO of HUL, Anish Shah, the President of FICCI and the CEO of Mahindra Group, Zareen Daruwala, the CEO of Standard Chartered India, the President of ASSOCHAM, Sanjay Nair, with us, also Sanjeev Krishnan, the chairperson of PwC in India. Gentlemen and Zareen, many thanks for joining us here on the CNBC TV18 Budget Town Hall. Sanjeev Mehta, first to you. A long speech, given the fact that the interim budget was barely 56 minutes. There's many changes. The priorities and the thrust areas remain similar to what we've seen announced by the Finance Minister in her previous budgets. What would your first take be on the impact of this budget, what it can do?
Before I talk about what the impact will be, let us take a step back and see where India is today. Yeah, if we compare India pre-COVID to where we are now, we have grown our economy by 20%.
Yeah.
And it's only India and China which have done that. Look at UK or France, they are just 2% above pre-COVID. Or look at developing country like Thailand, which is at the same level as pre-COVID. So we have done remarkably well. And in the last 3 years, growing upwards of 8% has been phenomenal. The second bit has been, look at the last big crisis, the global financial crisis. When the Fed said taper, rupee crashed. Today we are talking about a scenario where we have over $650 billion, which can cover our external debt. Our inflation today has been contained, and it is lower than many developed countries. So we are at a great position of strength. And from there, if we look at, I think what Madam Finance Minister has done, looked at certain structural issues, and she's tried to bring about a change. Let me talk about the biggest challenge that we face today. 60% of India lives in rural areas. 45% of the working population is in agri sector. And agri sector contributes 17% to the GDP, which is growing at about 1.5%. And even if you look at a past 30-year period, the agri sector growth has been at half the rate of the country's GDP. That's a non-sustainable. So what Madam Finance Minister, if you look at the thrust area, she has put in huge emphasis on agriculture. Earmarked about 1.5 lakh crore. The second important bit is, the other aspect that I would say is soft. You look at the private consumption, which has grown at about 4%. Whereas rest of, from the demand perspective, if you look at, they've grown at services at 7%, industry at about 9%. So that again is an area of concern. So what she's looked at, if I were to pick up from a manufacturing perspective, she's saying India is going to have multiple strategies. We need manufacturing, which is labor intensive. At the same time, she's very clear, we have to go up the value chain. So there is an enhanced focus on R&D and innovation. Whether you talk about modular and small nuclear reactors, or you talk about bringing in technology, digital public infrastructure in agriculture, or very importantly, the 1 lakh crore that was articulated during the interim budget. And now Madam Finance Minister is saying, yes, we are going to be led by the private sector. We must accept that India has to become a product nation. And India is not an either-or strategy, which often gets debated. We have to grow our agri sector, we have to grow our manufacturing.
And we have to grow services.
And services, if you look ahead, it will be impacted by AI. So we need to ask ourselves, what do we need to do to ring-fence services? So if you look at those 9 thrust areas, you know, of course, a lot of them will be based on the policy that gets articulated later on. They're absolutely bang on. That's what the country needs today.
Well, the intent, I think, is the point that you make is taken. The question now is one of execution, and many of these schemes will be in different phases of how quickly they will start to result in impact.
Shireen, let me give you one very interesting statistics. Go back to 2019-20. Our total capex, including the outlay that you have grants that go for capital, was 5 lakh crore. Today we are talking about the 7 ones plus 3 odd lakh crore, that totals up to 15 lakh crore. It's gone up 3x. Now the interesting bit is, in 2019-20, the total tax collection was 13 lakh crore. Today we are talking about 26 lakh crore. So out of the delta 13 lakh crore, the government is putting 10 lakh crore in capex, which is the right way to do. That's a productive expenditure. Rather than putting it under revenue heads or under administration of the government, which would not have yielded the kind of benefits it has yielded and it will yield in the future. So from that perspective, I'm very pleased with the thrust areas of the government.
Well, pleased with the thrust areas of the government. That's the first word in from Sanjeev Mehta. I have many more questions for you, but let me get Anish Shah into the conversation as well. Anish, you've been with us through the course of the day, analyzing what the budget has been able to deliver on. And, you know, to take forward what Sanjeev Mehta was saying, we find ourselves in a position of strength. Many are calling it India's sweet spot. In terms of both investment as well as consumption, Anish, does it really make a significant difference, or do you believe that the kind of growth momentum we were already seeing, that will only be further bolstered by the measures taken?
Shireen, the growth momentum that we've seen has been the result of a number of actions that have been taken. And Sanjeev mentioned the capex that we had seen in 2019 and the growth we've seen in that time period. If we just take last year's budget, it had a 34% growth in capex. So those actions have helped us get that momentum. And budget is always a tricky exercise because everyone wants everything. And as we've gone through today and done a detailed look at even the fine print, I'd say this is a very impressive budget. An impressive one because it manages to address a very large number of issues and keeps us on that path, on that momentum that we have achieved already by maintaining capex at a reasonably high level of 3.4% of GDP. Also, as Sanjeev said, you've taken literally the 10 lakh crore extra that has come in to fund capex because it has a greater multiplier effect. It has focused on agriculture. It is inclusive in many ways, having addressed the needs of women, farmers, the poor, the youth. Job and skilling is a significant focus for the budget, and technology. So a large number of areas have been looked at while maintaining fiscal discipline and getting to 4.9%, which is a tough act and has been done extremely well.
Yeah, Zareen, let me come to you now with some of the other changes that came in, and many changes this time around on the tax front. I think the long-term capital gains tax changes, people were hoping that it wouldn't be the case, but it has happened. And of course, the changes that have happened with respect to doing away with the indexation benefits, that certainly has many concerns, especially from the real estate sector's perspective. Other changes as well, the angel tax being abolished, the equalization levy being done away with, the corporate tax cut for foreign companies in India. Zareen, on balance, the tax announcements, what's your big takeaway on the impact?
I would say, Shireen, that, I heard some of the conversations with Mr. Somnathan, etc. Actually, 20% coming to 12.5% to some extent takes care of the indexation benefit being taken away. On foreign companies, tax coming down actually in September 19, when the tax was reduced from 30% to 22%. For foreign companies, it did not come down. So there was an 18% gap between foreign companies and domestic companies, if you exclude the surcharges. So to that extent, I think this gap has been to some extent narrowed. That is what I would say. And frankly, the real estate momentum continues. If we see H1 this year, we've had 35 million square feet of residential sales. To my mind, that momentum is going to continue. Also, one other point, while we are talking of fiscal prudence, I think the fiscal deficit coming to 4.9%, government borrowing will be lesser. With the JP Morgan index inclusion, what we'll see is there'll be a good amount of demand for government paper, and that will bring down interest rates for sure. So this, to my mind, is a very big positive of lower fiscal deficit and index inclusion coming around the same time.
Yeah, that fiscal deficit number being brought down to 4.9% and then 4.5% for the next year. Sanjay Nair, what do you like from what the finance minister has delivered with Budget 2024?
Not being populist. They could have used that 2.3 lakh dividend and they could have stuck to 5.1 and they could have splurged. So I think it's a pretty bold budget from a political point of view of taking the long, arduous route of creating jobs. Well, first the MSMEs, the environment, the jobs, and then the core sustainable income of the people, which will drive consumption. So I think it's the right way to do it. I actually didn't think that was going to happen. So I'm pleasantly surprised. As a result, I think you're sitting with a pretty strong balance sheet at a country level. I still agree. I still think total debt to GDP is high. Deficit is going down, but the total debt is still high. I think these next 6 months, Shireen, for the next budget, we can look for a lot of things, but I think simplification of life, as defined by simplification of taxes, TDSs, GST, the IT review of 1961, if all that can get done in 6 months, I think you begin to crowd in, as we have spoken earlier, crowd in the private investments and the private capex, and that's where the SMEs begin to come in. So frankly, you've got a pretty good, after 2-3 years after COVID, this country has a very solid balance sheet. It can get even better. And frankly, they can't do anything more than this with a balance sheet, which is where it is. I think the final thing is they're crowding and saving. I think Zareen just said the way they have tackled the deficit, and hopefully they borrow lesser or same as last year. Of course, leaving the contingencies on geopolitical crisis, you will automatically have a more attractive rate structure. So, private sector in India cannot have a better cost of capital environment with underlevered balance sheet, booming capital markets. So I think it's got to be really the ease of doing business, the cost of doing business, and the consumption capex gap has to begin to bridge. And frankly, it's not only the government's job to do this, right? Even jobs and skilling, they have put it back into the private sector's court and said, look, here is some PLI kind of thing. You guys always react to incentives. So we'll go hire people and skill them accordingly. So I think it's a pretty well thought out budget. I think it was better than I thought because it is not populist at all. And, but having said that, maybe we'll talk later, but I think there is still things to do to reduce the total debt to GDP. There's enough to monetize out there. And, we have spoken about that before, and maybe we'll pick it up later.
Yeah, and miscellaneous receipts, 50,000 crore rupees, that is what has been provisioned for in the interim budget and now in this budget as well. 6 months later, we've just come off a budget. I mean, we did a budget 5 months ago. We're doing a budget today, and another 6 months, we're going to do another budget. It is, I don't want to think about that just yet. Let me welcome Ratin Roy into the conversation as well. Ratin, thanks very much for joining us. I'm coming to you in just a second. Sanjeev, your take from the many announcements that came in, significantly, the impact as far as the moves on FDI, or at least the intent to move further on FDI, as well as, what they've been able to do to get rid of some of the pain points for the VCP community.
Shireen, I think first of all, I just want to say that we've been discussing the 4.9. I think it's eminently achievable. I think they've been very, very conservative, both in terms of their revenue collections, particularly on GST. If you compare it with the interim budget to what they're budgeted now, I think they were estimated lower. I think even the denominator is, I would have expected it to be higher because there is inflation. So I think it's eminently achievable. But for some of the stuff that they have, for expedient reasons, put in the budget, the 4.9% I think is eminently achievable, and it sets us on a very good fiscal path. I think some of the things that you mentioned, I think the taking away, for instance, of the angel taxation, I think it was possibly not, to the best of my mind, not creating a huge amount of tax revenues, but it was being too litigious in minds of many. And of course, it's about desirability, about India as an investment destination. So I think that was, to me, a very critical step. I think the two issues which we have been talking about, particularly employment generation, I think that's something which has been addressed in a very significant way by all the effort that has gone in terms of skilling, etc. And in a way, for some of the large corporations, in fact, there is ask is to walk the talk, and I think it's a very, very good one. Whether you look at the GCC story, which requires significant skilling efforts, because now we're moving from cost arbitrage to really doing some value accretive work. I think the whole skilling gap, bridging the skilling gap, will hopefully create significant employment. And of course, with the MSME, a bunch of norms, a bunch of things that have come on for the MSMEs in terms of credit lines and others, I think it will certainly help because the question really was that I'm willing to invest, but does India have the supply chain to be able to make sure that I can create sustained scaled businesses over a period of time? And I think that's something which has come through. I think on the ease of doing business, I completely agree with Sanjay. I think there is some more work to be done, but even steps that have been taken today, including, how do you, let's say, shutting down an LLP if you so wish on a voluntary basis, the whole scheme about coming up with the variable companies, capital companies. I think these are very good steps, and many possibly present in many other parts of the world. So I think these will again be significant incremental incentivization. They spoke about FDI, and I think that they've spoken about declogging the FDI piece as well. I didn't see anything very significant on the FDI pieces, but I think just making India easier to do business and making sure that there is
and the measures, the specific measures are yet to be rolled out. The intent is to roll those out, and we did have the Economic Affairs Secretary give us an indication or a glimpse of
Yeah. Yeah, if you can give, please. No, for the feed, the studio feed.
Bihar has frequently suffered from floods, many of them originating outside the country. Plans to build flood control structures in Nepal are yet to progress. Our government, through the Accelerated Irrigation Benefit Program and other sources, will provide financial support for projects with estimated cost of 11,500 crore rupees, such as the Kosi-Michi intra-state link and 20 other ongoing and new schemes, including barrages, river pollution abatement, and irrigation projects. In addition, survey and investigation of Kosi-related flood mitigation and irrigation projects will be undertaken. Assam grapples with floods every year by the Brahmaputra River and its tributaries originating outside India. We will provide assistance to Assam for flood management and related projects. Himachal Pradesh suffered extensive losses due to floods last year. Our government will provide assistance to the state for reconstruction and rehabilitation through multilateral development assistance. Uttarakhand too suffered losses due to cloudbursts and massive landslides. We will provide assistance to the state. Recently, Sikkim witnessed devastating flash floods and landslides that wreaked havoc across the state. Our government will provide assistance to the state. Bihar and Andhra Pradesh Reorganization Act. Our government has made concerted efforts to fulfill the commitments in Andhra Pradesh Reorganization Act. Recognizing the state's need for the capital, recognizing the state's need for a capital, we will facilitate special financial support through multilateral development agencies. In the current financial year, 15,000 crore rupees will be arranged with additional amounts in future years. Our government is fully committed to financing and early completion of the Polavaram irrigation project, which is the lifeline for Andhra Pradesh and its farmers. This will facilitate our country's food security as well. Under the Act, Andhra Pradesh Reorganization Act, for promoting industrial development, funds will be provided for essential infrastructure such as water, power, railways, and roads in Kopparthi node on the Visakhapatnam-Chennai Industrial Corridor and Varavakal node on the Hyderabad-Bangalore Industrial Corridor. Andhra Pradesh Reorganization Act. Our government has made concerted efforts to fulfill the commitments in Andhra Pradesh Reorganization Act. recognizing the state's need for the capital, recognizing the state's need for a capital, we will facilitate special financial support through multilateral development agencies. In the current financial year, 15,000 crore rupees will be arranged with additional amounts in future years. Our government is fully committed to financing and early completion of the Polavaram irrigation project, which is the lifeline for Andhra Pradesh and its farmers. This will facilitate our country's food security as well. Under the Act, Andhra Pradesh Reorganization Act, for promoting industrial development, funds will be provided for essential infrastructure such as water, power, railways, and roads. In Kopparthi node on the Visakhapatnam-Chennai Industrial Corridor and Varavakal node on the Hyderabad-Bengaluru Industrial Corridor. Andhra Pradesh Reorganization Act. Our government has made concerted efforts to fulfill the commitments in Andhra Pradesh Reorganization Act. Recognizing the state's need for the capital, recognizing the state's need for a capital, we will facilitate special financial support through multilateral development agencies. In the current financial year, 15,000 crore rupees will be arranged with additional amounts in future years. Our government is fully committed to financing and early completion of the Polavaram irrigation project, which is the lifeline for Andhra Pradesh and its farmers. This will facilitate our country's food security as well. Under the Act, Andhra Pradesh reorganized
taxes. At 14.13 lakh crore rupees, the government's gross market borrowing numbers are largely unchanged from those presented in the interim budget. Finance Minister promises to try and keep the central government's debt on a declining path as a percentage of GDP. Divestment revenues forecast is also unchanged at 50,000 crore rupees. A roller coaster ride on Dalal Street as Sensex and Nifty recover in late trade after a sharp drop. Mid-caps and bank stocks see sharper cuts. India's startup ecosystem's long-standing demand to become a reality. Finance Minister Nirmala Sitharaman abolishes angel tax for all investor classes, says the move will bolster their entrepreneurial spirit. Startups laud the announcement, expect funding into the sector to go up. E-commerce companies get a breather. Budget proposes withdrawing the 2% equalization levy on consideration received for e-commerce supply of goods or services effective the 1st of August. Made in India mobile phones, electronics, and gold and silver and platinum jewelry could get cheaper. Budget proposes lowering custom duties on a host of input products for these sectors. The budget announces a slew of measures for coalition partners in Andhra Pradesh and Bihar. This includes a 15,000 crore rupee assistance through multilateral agencies to build a new capital in Andhra Pradesh. Bihar will also get 26,000 crores to build highways and promises of additional support to build new airports, medical colleges and sports infrastructure. In other headlines, the Supreme Court declines to scrap the NEET UG exam for aspiring medical students, rules that there is no systemic breach to the sanctity of the exam, while admitting to the absence of sufficient material on record. Hindustan Unilever's first quarter numbers beat estimates, profits rise 2% and domestic volume growth comes in at 4%. The management expects a gradual recovery in rural demand. Kamala Harris races towards the Democratic Party's nomination for the White House, gets support from enough delegates to clinch the nomination. A new poll shows Harris is outperforming Biden but is still trailing Trump by 2 percentage points. Well, those are the headlines at this hour, but guys, why aren't you moving? I thought you were moving that. Okay, can I just record this now? Those are the headlines at this hour. Shireen Bhan will be joining us with special guests in just a bit. But before we get to them, here's a glimpse of the Finance Minister Nirmala Sitharaman presenting her record 7th consecutive budget, as well as the reactions that budget evoked. Yeah.
Andhra Pradesh Reorganization Act. Our government has made concerted efforts to fulfill the commitments in Andhra Pradesh Reorganization Act. Recognizing the state's need for the capital, recognizing the state's need for a capital, we will facilitate special financial support through multilateral development agencies. In the current financial year, 15,000 crore rupees will be arranged with additional amounts in future years. Our government is fully committed to financing and early completion of the Polavaram irrigation project, which is the lifeline for Andhra Pradesh and its farmers. This will facilitate our country's food security as well. Under the Act, Andhra Pradesh Reorganization Act, for promoting industrial development, funds will be provided for essential infrastructure such as water, power, railways and roads. In Kopparthi node on the Visakhapatnam-Chennai Industrial Corridor and Varavakal node on the Hyderabad-Bengaluru Industrial Corridor. Andhra Pradesh Reorganization Act. Our government has made concerted efforts to fulfill the commitments in Andhra Pradesh. Multilateral development agencies. In the current financial year, 15,000 crore rupees will be arranged with additional amounts in future years. Is fully committed to financing and early completion of the Polavaram irrigation project, which is the lifeline for Andhra Pradesh and its farmers. This will facilitate our country's food security as well. Under the Act, Andhra Pradesh Reorganization Act, for promoting industrial development, funds will be provided for essential infrastructure such as water, power, railways and roads. In Kopparthi node on the Visakhapatnam-Chennai Industrial Corridor and Varavakal node on the Hyderabad-Bengaluru Industrial Corridor. Andhra Pradesh Reorganization Act. Our government has made concerted efforts to fulfill the commitments in Andhra Pradesh Reorganization has frequently suffered from floods, many of them originating outside the country. Plans to build flood control structures in Nepal are yet to progress. Our government, through the Accelerated Irrigation Benefit Program and other sources, will provide financial support for projects with estimated cost of 11,500 crore rupees, such as the Kosi-Michi intra-state link and 20 other ongoing and new schemes, including barrages, river pollution abatement, and irrigation projects. In addition, survey and investigation of Kosi-related flood mitigation and irrigation projects will be undertaken. Assam grapples with floods every year by the Brahmaputra River and its tributaries originating outside India. We will provide assistance to Assam for flood management and related projects. Himachal Pradesh suffered extensive losses due to floods last year. Our government will provide assistance to the state for reconstruction and rehabilitation through multilateral development assistance. Uttarakhand too suffered losses due to cloudbursts and massive landslides. We will provide assistance to the state. Recently, Sikkim witnessed devastating flash floods and landslides that wreaked havoc across the state. Our government will provide assistance to the state. Implement following 3 schemes for employment-linked incentive as part of the Prime Minister's package. These will be based on enrollment in the EPFO and focus on recognition of first-time employees and support to employees and employers. Scheme A, first-timers. This scheme will provide 1 month wage to all persons newly entering the workforce in all formal sectors. Direct benefit transfer of 1 month's salary in 3 installments to first-time employees as registered in the EPFO will be up to 15,000 rupees. The eligibility limit will be a salary of 1 lakh per month. The scheme is expected to benefit 210 lakh youths. Scheme B, job creation in manufacturing. This scheme will incentivize additional employment in the manufacturing sector linked to the employment of first-time employees. An incentive will be provided at specified scale directly both to the employee and the employer with respect to the EPFO contribution in the first 4 years of employment. The scheme is expected to benefit 30 lakh youth entering employment and their employers. Scheme C, support to employers. All additional employment within a salary of 1 lakh rupee per month will be counted. The government will reimburse to employers up to 3,000 rupees per month for 2 years towards the EPFO contribution for each additional employee. The scheme is expected to incentivize additional employment of 50 lakh persons. Government will implement following 3 schemes for employment-linked incentive as part of the Prime Minister's package. These will be based on enrollment in the EPFO and focus on recognition of first-time employees and support to employees and employers. Scheme A, first-timers. This scheme will provide 1 month wage to all persons newly entering the workforce in all formal sectors. Direct benefit transfer of 1 month's salary in 3 installments to first-time employees as registered in the EPFO will be up to 15,000 rupees. The eligibility limit will be a salary of 1 lakh per month. The scheme is expected to benefit 210 lakh youths. Scheme B, job creation in manufacturing. This scheme will incentivize additional employment in the manufacturing sector linked to the employment of first-time employees. An incentive will be provided at specified scale directly both to the employee and the employer with respect to the EPFO contribution in the first 4 years of employment. The scheme is expected to benefit 30 lakh youth entering employment and their employers. Scheme C, support to employers. All additional employment within a salary of 1 lakh rupee per month will be counted. The government will reimburse to employers up to 3,000 rupees per month for 2 years towards the EPFO contribution for each additional employee. The scheme is expected to incentivize additional employment of 50 lakh persons. Coming to personal income tax rates, I have 2 announcements to make for those opting for the new tax regime. First, the standard deduction for salaried employees is proposed to be increased from 50,000 to 75,000 rupees. Similarly, deduction on family pension for pensioners is proposed to be enhanced from 15,000 to 25,000 rupees. This will provide relief to about 4 crore salaried individuals and pensioners. Second, in the new tax regime, the tax rate structure is proposed to be revised as follows. 0 to 3 lakh rupees, nil. 3 to 7 lakh rupees, 5%. 7 to 10 lakh rupees, 10%. 10 to 12 lakh rupees, 15%. 12 to 15 lakh rupees, 20%. And above 15 lakh rupees, 30%. As a result of these changes, a salaried employee in the new tax regime stands to save up to 17,500 rupees in income tax. Apart from these, I am also making some other changes as given in the annexure. As a result of these proposals, revenue of about 37,000 crore, that is 29,000 crore in direct taxes and 8,000 crore in indirect taxes will be foregone while revenue of about 30,000 crore rupees will be additionally mobilized. Thus, the total revenue foregone is about 7,000 crores annually. Coming to personal income tax rates, I have two announcements to make for those opting for the new tax regime. First, the standard deduction for salaried employees is proposed to be increased from 50,000 to 75,000 rupees. Similarly, deduction on family pension for pensioners is proposed to be enhanced from 15,000 to 25,000 rupees. This will provide relief to about 4 crore salaried individuals and pensioners. Second, in the new tax regime, the tax rate structure is proposed to be revised as follows: 0 to 3 lakh rupees, nil; 3 to 7 lakh rupees, 5%; 7 to 10 lakh rupees, 10%; 10 to 12 lakh rupees, 15%; 12 to 15 lakh.
UK, EFTA, I think are very welcome. We got to be supercharged about it. We need the capital, we need the technology, we got to create the industrial zones, and we got to make it easy for these folks to come in here, manufacture in India, for India and for the world. I think it's critical. We've got to get more independent of this whole globality because, frankly, I don't know what's going to happen in terms of the global world at large. So we got to be pretty independent.
Well, that is a risk factor, the global uncertainty or the continued global uncertainty that we're faced with. But Sanjay Nair, Sanjeev Krishnan, Zareen Daruwala, KV Subramaniam, Sanjeev Mehta, Ratin Roy, many thanks for joining us here on the CNBC TV18 Budget Town Hall with your insights, not just on the announcements that have been made in the budget, but more importantly, what the road ahead looks like and what the unfinished agenda will need to factor in. Appreciate your time here. We will take a break. There's a lot more coming up. Don't go anywhere. We're back in a moment with more.
Coming to personal income tax rates, I have two announcements to make for those opting for the new tax regime. First, the standard deduction for salaried employees is proposed to be increased from 50,000 to 75,000 rupees. Similarly, deduction on family pension for pensioners is proposed to be enhanced from 15,000 to 25,000 rupees. This will provide relief to about 4 crore salaried individuals and pensioners. Second, in the new tax regime, the tax rate structure is proposed to be revised as follows: 0 to 3 lakh rupees, nil; 3 to 7 lakh rupees, 5%; 7 to 10 lakh rupees, 10%; 10 to 12 lakh rupees, 15%; 12 to 15 lakh rupees, 20%; and above 15 lakh rupees, 30%. As a result of these changes, a salaried employee in the new tax regime stands to save up to 17,500 rupees in income tax. Apart from these, I am also making some other changes as given in the annexure. As a result of these proposals, review of about 30 revenue of about 37,000 crore, that is 29,000 crore in direct taxes and 8,000 crore in indirect taxes will be foregone, while revenue of about 30,000 crore rupees will be additionally mobilized. Thus, the total revenue foregone is about 7,000 crores annually. Andhra Pradesh Reorganization Act. Our government has made concerted efforts to fulfill the commitments in Andhra Pradesh Reorganization Act. Recognizing the state's need for the capital, recognizing the state's need for a capital, we will facilitate special financial support through multilateral development agencies. In the current financial year, 15,000 crore rupees will be arranged with additional amounts in future years. Our government is fully committed to financing and early completion of the Polavaram irrigation project, which is the lifeline for Andhra Pradesh and its farmers. This will facilitate our country's food security as well. Under the Andhra Pradesh Reorganization Act, for promoting industrial development, funds will be provided for essential infrastructure such as water, power, railways, and roads in Kopparthi node on the Visakhapatnam-Chennai Industrial Corridor and Varavakal node on the Hyderabad-Bengaluru Industrial Corridor. Bihar has frequently suffered from floods, many of them originating outside the country. Plans to build flood control structures in Nepal are yet to progress. Our government, through the Accelerated Irrigation Benefit Program and other sources, will provide financial support for projects with estimated cost of 11,500 crore rupees, such as the Kosi-Michi intra-state link and 20 other ongoing and new schemes, including barrages, river pollution abatement, and irrigation projects. In addition, survey and investigation of Kosi-related flood mitigation and irrigation projects will be undertaken. Assam grapples with floods every year by the Brahmaputra River and its tributaries, originating outside. Short-term gains on certain financial assets shall henceforth attract a tax rate of 20%, while that on long-term gains on all financial and non-financial assets, on the other hand, will attract a tax rate of 12.5%. I propose to abolish the so-called angel tax for all classes of investors. Security transaction tax on futures and options of securities is proposed to be increased to 0.02% and 0.1% respectively. The standard deduction for salaried employees is proposed to be increased from 50,000 to 75,000 rupees. This year, I have provided 11,11,111 crore rupees for capital expenditure.
ये देश के गांव गरीब किसान को समृद्धि की राह पर ले जाने वाला बजट है।
हम लोगों ने एक कह दिया कि विशेष राज्य का दर्जा दीजिए या विशेष अधिकार के लिए मदद दीजिए। यहाँ के लिए जो जरूरत है बिहार के लिए, क्योंकि बिहार को भी आगे बढ़ना है, तो बहुत कुछ किया है, आप जानते हैं।
इस बजट में बिहार फर्स्ट, बिहारी फर्स्ट को भी धरातल पर उतारने के प्रावधान दिए गए हैं।
आंध्रा की बात जब आती है तो उसके लिए तो मैं तहे दिल से शुक्रिया अदा करना चाहूँगा नरेंद्र मोदी जी को, जिन्होंने एक वादा किया था कि आंध्रा की देखभाल हम करेंगे और उन्होंने आज किया है बजट के रूप में।
किसान, गरीब, महिलाएं, युवा और मध्यम वर्ग के कल्याण पर विशेष रूप से ध्यान दिया गया है।
Finance Minister had an opportunity to read the Congress manifesto after the Lok Sabha 2024 elections. She has virtually adopted the ideas underlying our proposals.
There was no mention of Manrega. There was no mention or insufficient mention of any steps taken to improve the income of the ordinary person.
Hello, welcome to our special broadcast on the first budget of the NDA 3.0 government. The focus was on the poor, women, youth and farmers. We saw an employment-linked incentive scheme being rolled out. In fact, 3 schemes to increase entry-level employment across the country. The industry will also be reimbursed to some extent over a 2-year period. That is what the scheme said. There was a lot of focus on MSMEs, rejig of customs duties to make sure that we manufacture more in India, are able to export more as well. Certain changes in the tax slabs in the new income tax scheme, which will lead to savings of about 17,500 rupees per citizen who has subscribed to the new income tax scheme. Also, in a way, rationalization of tax slabs when it comes to capital gains. Now, joining us to discuss the politics of this budget, what was the BJP's thinking, the NDA's thinking? Are NDA allies actually satisfied with the assistance and the message to states in the union budget? And what is the view of the opposition? We've seen some very strong words from the Congress party saying that only 2 people in the country have benefited from the union budget. Lakhs of people across the country have been ignored. There is nothing to tackle inflation, and there is no major mention of how this government will deal with the problem of unemployment. Joining us right now is Syed Zafar Islam of the BJP, Rajiv Gowda of the Congress Party, Priyanka Chaturvedi from the Shiv Sena Uddhav Bal Thackeray Group. Also with us, Jyotsna Tirunagari, TDP spokesperson, and Swayam Purohit, TMC spokesperson with us. Let me go across to Zafar Islam. Zafar Islam, while we did see messages of assistance for the states of Andhra Pradesh and Bihar, we did not see any kind of assistance or special mention for states like Maharashtra, a state like Uttar Pradesh, Haryana for that matter. And that is why several opposition parties are asking, why have states been left out? Also an allegation being made against the BJP that you are punishing the backward classes for not voting for you in big numbers in the state of Uttar Pradesh. So how are you going to counter the opposition?
Rashid, first of all, let me make it very clear that by not mentioning the name in her budget speech, that does not mean that the allocation has not been made for other states. It is a very unfair statement by many of the political parties without going through the details that the allocation has not been made or the assistance has not been made, being made to other states. It's just that the 2 states have been mentioned, but Uttarakhand has also been mentioned, the Himachal Pradesh has also been mentioned, but without exception, every state is going to get assistance from the central government. It is just that she has mentioned about 2-3 states, but let me tell you, and she has also clarified, the Honorable Finance Minister has clarified, that there is no exception. All the states will get assistance from the central government, and it is very unfair to make this kind of allegation on the part of the opposition parties that we are not supporting any state or being ignored by or not giving assistance to some state like Uttar Pradesh. Every state will get, Maharashtra will get. Secondly, you have to understand that the focus of this budget was very clear. That we are trying to give a message, very clear message that fiscal prudence is something which is very important. Everybody was talking about. Today, we have done better than the street was expecting, 4.9%, which is definitely much better than any of the houses of financial market or the business houses was expecting. That fiscal deficit number will be 4.9%. Secondly, the growth, it's a growth-oriented budget. It's the fiscal prudence is there. The focus on MSME, great focus on creation of jobs, and of course the middle class. All and these have been given a lot of impetus in this budget by the Honorable Finance Minister. But the opposition parties, since they are not behaving like responsible opposition parties, they will make this kind of statement, make this kind of allegation, but when they go through the final prints, they will also realize that there no states have been left out. Every state will definitely get the assistance from the...
Okay, what Zafar Islam is trying to say that there is an overall allocation for state governments in the union budget, and every state will get its share as per a formula. Let me go across to Priyanka Chaturvedi. Priyanka Chaturvedi, as it had happened in the interim budget, we saw a focus on consolidation, we saw a focus on fiscal prudence. This budget has spoken about a fiscal deficit projection of 4.9% with an aim to bring it down to 4.5, 4.6% by 2026. Do you think this is the right way forward when it comes to future policy making related to budget? Less on populism, more on fiscal prudence, and this is what global businesses want to see. How do you rate the budget from that front?
So if I was to make this argument about fiscal prudence and then compare it to the consumer spending, savings, investment, and the expenses, then I would say the operation is successful, but the patient is dead. Today, as an armed janta, they're facing the brunt of inflation. They're facing the brunt of not having salary increases. They're facing the brunt of joblessness. They're facing the brunt of having the lowest savings possible simply because life has become expensive for them. Investments are next to impossible. Now, asset creation also has been de-incentivized thanks to the long-term capital gain tax and removing real estate from indexation. So having said that, like you said, while you're maintaining the fiscal prudence and going on harping on the fiscal deficit bit, what you've done is you've effectively killed everything else that gets the economy going. And that is one massive issue. The second issue is with regards to, there's some percentage, on the basis of some percentage, every state has been given something. So my question is on what basis, what was this quota basis or amount that they're talking about, that allocation was done for Bihar and Andhra Pradesh? So I just want to know whether the Prime Minister, is he the Prime Minister of India or he's the political manager of India? Is she the Finance Minister of India or is she favoritist minister where she's looking at her favorites and deciding where the allocation will go? And that is the unfortunate part. We did not start the discrimination. The discrimination began from this budget. That is why I call this a Pradhan Mantri Sarkar Bachao Yojana, in the hope that hum 5 saal chala lenge because we need the support of the political parties in Andhra Pradesh and Bihar. So we will allocate money to them. What about Maharashtra? Maharashtra, for every rupee that we send to the center, what we get is maximum 3 to 5 paisa back in return. Not that we are grudging it, not that we mind not getting enough. But what we do grudge is when you use this funding to other states on the basis of your politics. And that is the crux of this entire budget.
Right. Interesting you raised this about states because, and you've raised this in several tweets, that Maharashtra is a state which contributes immensely to tax revenues, to the GDP of the country, and it should get assistance. Now, I'll put this to the TDP spokesperson who's with us on the panel today, Priyanka Jyotsna Tirunagari of the TDP. Ms. Jyotsna, are you happy today? Is the TDP happy and satisfied with the announcements made for Andhra Pradesh in the budget? 15,000 crore for the development of Andhra Pradesh capital, the grant for backward areas of the state, special mention of Polavaram as well. because in successive meetings, the Chief Minister Chandrababu Naidu had asked for assistance to the tune of 1 lakh crore for reconstruction of Andhra Pradesh. So does this satisfy you to some extent?
See, definitely we are looking at sustained support. Let me put it very clearly here. We are looking at a very sustained support, and we are looking forward for the coming years as well. And again, when we talk about, we have to understand one thing, that we are a part of India. We are not some aliens. We are a part of India. We are suffering. Andhra Pradesh is suffering. We do not have a capital for the past 10 years. The state is suffering. And that's the reason special, representations were made to the central government regarding the state's financial situation and the state's industrial situation, everything. See, in that case, definitely, if we talk about the AP Reorganization Act, today people are crying foul. I don't understand. Today people are saying that why Andhra Pradesh gets so much. But the point is, according to the AP Reorganization Act, the capital construction, the construction of the capital for the state of Andhra Pradesh, the central government has to aid. That is written there. Polavaram is a national status project and the central government has to assist there. That is written there. The industrial corridors are also being, that is also something written there. And again, I'll tell you, you're asking me whether we are satisfied. Yes, because we are looking forward for the coming years also. And we are looking forward for a very prosperous 5 years from now, because we want to take the state on a developmental mode. Here, we are not, somebody putting it saying that we are getting what we want. No. We are getting what we deserve. As a state, we have suffered a lot. So definitely, we have requested the center for some extra attention. That's it. And this is what is written in the Act. And we are glad that the central government has taken our representations into consideration. And we are it's not just 15,000 crores for the construction of capital city of Amaravati. And that is not for something, we are not going to put it in our kitty or something like that. It's again capital investment. And again, if you talk about Polavaram, you remember Finance Minister has very categorically stated in the Parliament itself that if you complete Polavaram at a very, fast pace, it would help in the food security of the country as well. So we are a part of the country. We are not somebody apart from the country, right? So definitely, if Andhra improves, this country would also improve.
Okay, so you are seeking sustained support from the government over the next 5 years. This is what the TDP spokesperson is saying. Let me go across to Rajiv Gowda of the Congress Party. Mr. Gowda, today and in the run-up to the election, the job crisis was a big issue that had been raised by the opposition. Now today, the government has announced 3 schemes, A, B and C, they have been called, and these are employment-linked incentives. These will be subsidies extended to the industry for new hirings in the manufacturing sector and also across sectors for first-time employees who find it difficult to get a job. So do you think this is something that will help the industry or incentivize the industry to create more jobs? Do you think this experiment can work, or would you like to see the fine print of how this is going to be implemented?
So these ideas have come from the Congress manifesto. This is a copy-paste version of our manifesto. Unfortunately, it's been done in haste. And in the process, the way we had structured the employment-linked incentive was to actually provide tax benefits, tax relief to those companies that actually went in and invested in many more people getting hired. We similarly, our internship program, what they call the internship program, is our apprenticeship, right? And there we had actually planned something much more nationwide, not restricted just to the top 500 companies. So they've copied our ideas. And I'm very happy. We don't want copyright. We want to share these ideas for the benefit of the nation. But in the process, I think they've messed them up and they won't give the results that are actually desired. The one thing I can say is I'm happy that the government has finally opened its eyes to the unemployment crisis facing young Indians, especially facing women. This is something that over the last decade, the Prime Minister has been in denial about. We've not seen budgets focus on that. And only in the recent election campaign would they have got the real sense when the numbers started coming in and people demonstrated that more than temples, what mattered were jobs, what mattered were price rise, these sorts of hardcore bread and butter issues. And I think the government is trying to respond, but the way they're implementing these schemes, as you said, the fine print is really an issue. When you talk about fine print, there is something that I saw in the context of Andhra Pradesh, right? I mean, the commitments made in the Andhra Pradesh Reorganization Act were made by our UPA government 10 years ago. For 10 years, we saw no action on the part of Modi Sarkar. Even now, when you look at the fine print, when the finance minister says, we are going to help Andhra Pradesh raise money, we're going to facilitate the borrowing of money. It's not like the government is giving that money for Amravati. So I think we need to go through that fine print a little more carefully to see whether, actual investment is happening or whether the debt burden of Andhra Pradesh will only worsen with the government, giving its nudge out there. Apart from this, where are the real investments in people, in the human capital that we really need to strengthen? Have we seen that much more oriented towards education, towards healthcare? There's all this talk about skilling. Tell me how many skilling programs have been successful over the last decade. Tell me what is going to be done differently this time on skilling, which will generate the kind of empowered employees who will be, in great demand. So all these details are left out. The only bright picture that I see out here is the abolition of the angel tax, because that's something that our startup community in Bengaluru and across India, for that matter, would be very happy about. But otherwise, this is absolutely nothing to write home about. It is a signal that this is a kursi bachao budget, that this is a government that is running out of ideas, running out of steam. They're just holding on until they're voted out as early as possible.
All right. Swayam Purohit of the TMC, today we saw the finance minister in the budget speech saying that the government was committed to Purvodaya aimed at all-round development of the East, Bihar, Jharkhand, West Bengal, Odisha and Andhra Pradesh. No state-specific announcements barring Maharashtra and barring Bihar and Andhra Pradesh. But how do you see the focus on the East and overall focus in terms of job creation, also helping the poor in the country and also helping women?
See, actually, I am totally agree with Mr. Gowda. What he has said, that is totally kursi bachao budget. What they have given to Bengal, I just asked to the Finance Minister of India what they have given. They said don't give our money, which we are demanding since last 3 years. The money of Manrega is pending dues to there, but they are not giving that money. This budget is totally हमारे साथ है, हम उनके साथ हैं. It's not सबका साथ सबका विकास. It's जो हमारे साथ है, what the leader of opposition in Bengal, Subhandu Adhikari said few days back, जो हमारे साथ है, हम उनके साथ हैं. What they have shown, they have given to Bihar and Andhra Pradesh to sit their kursi. It's a crafted bribe. The Article 41 of the Indian Constitution has been violated today. The democratic fundamental federal system has been killed. The Union Minister of India, the Finance Minister of India doesn't think about Bengal. Bengal has been totally deprived. It's totally anti-poor budget. It's totally anti-farmer budget. They doesn't give any MSP. They have they guaranteed MSP. The Modi Sarkar came in 2014. They told Modi 1, Modi 2, Modi 3. But still they does not able to give MSP to poor farmers. How do they sell the food?
I think that's an important point.
Yes.
That's an important point, Mr. Purohit. And I would like to put this to the BJP spokesperson. Yes, we have seen a commitment to the agriculture sector, more than 1.52 lakh crores for the agriculture and allied sectors, 2.6 lakh crore for rural India. But there were demands for legal guarantee of the MSP. There were proposals before the government to increase the allowance under the PM Kisan Samman Nidhi scheme from 6,000 on an annual basis to 12,000. These proposals are pending. They have not seen the light of day, at least in this budget. So could you give us a sense that when it comes to doubling farmers' income, Zafar Islam, What more can the farmers community expect in the months to come, in the years to come? Because this will be a continuing problem for the BJP, challenge for the BJP to answer farmers.
Well, Prakshit, first of all, let me respond to Mr. Rajiv Gowda, what he said. I think I can understand his constraint because when they realize that something very good has happened, because the policy which has been announced in regards to job creation is unprecedented. It's a path-breaking initiative which has been undertaken by the Government of India for job creation, and I think the whole market and everybody who really analyze the budget are pleasantly surprised, because this kind of initiative they had never thought of it. So the state is extremely happy, but of course I can understand his constraint that they can make this kind of allegation that we have picked up from their manifesto. In fact, they should go through our manifesto. Everything what we have done has been announced in our manifesto before the election. Having said that, the issues which you have raised in regards to the additional contribution towards PM Samman Nidhi, I think this is something which not necessarily should be announced in the budget. If anything needs to be done, which can be done in later whenever the government feels appropriate, because you cannot just start distributing money, but you also have to understand that you have to nurse all the section of the society, and the focus on the farming community has been paramount for our government, and we have done enough, and we will continue to do for the farming community. In this budget we have done, and all the other budgets and policy measures whenever it is required, we will undertake such initiative to ensure that their interest is safeguarded. As far as the MSP is concerned, I think as you all know that there is a committee which has been formed, and then once the committee give their recommendation, then of course the government will examine that recommendation, and whatever feel appropriate given the overall finance of the budget and the government, if whatever best can be done for the farming community, for the farmers, our government is committed to do for the farming community, and we will continue to ensure that their income level is improving, and what we have promised and what we have always advocated, that the farming community or the farmers' income should be doubled, and we will ensure that through policy measures, through our various initiatives, we will ensure that their interest is safeguarded, their income is improves, and they definitely have better life and ease of living than what they had during UPA time.
Zafar, we would also like to ask about women empowerment. This budget, the finance minister did put a lot of emphasis on women empowerment. She said that 3 lakh crores are being allocated for schemes which benefit women across the country and will encourage their participation, greater participation in the labor workforce. Priyanka Chaturvedi, I'd like to put that question to you. Do you think this budget in a way shows us a direction when it comes to encouraging the participation of women in all sectors of the workforce, and also when it comes to putting more money in the hands of the Aam Aadmi for consumption, the rejig of income tax slabs, which puts about a tax benefit of 17,500 rupees in the hands of an ordinary taxpayer who is in the new tax regime. How do you think this budget does when it comes to consumption and also for increasing the participation of women, which is extremely important for the growth of our economy?
So before I answer this question, I just wanted to reassure the spokesperson from TDP who was talking about Andhra Pradesh being a part of India. Of course, Andhra Pradesh is part of India. In fact, we as a collective was saying this, that an assurance was made on the floor of the House when Andhra Pradesh and Telangana were bifurcated, that it would be given a special status. Unfortunately, that has been denied, and I'm very surprised. You are feeling happy about the 15,000 crores of course, capital investments, but are not looking at, this was a demand of TDP. I remember TDP and YSRCP getting into fights on the floor of the House over the special status. But somehow TDP is quiet on this. So all I was reminding is that Maharashtra is also part of this country. Maharashtra also needs some hand-holding at times. It is a state which is giving the highest amount of taxes to the centre. So we expect equality. We are not even for once grudging what you have got. The only issue is that you are using it for political issues. Now, having said that, women-led development, women-led growth, out of whatever is offered, 17,500 as tax relief, there's a term and condition, and I'm glad you mentioned it, that if they move to the new tax system, Can I tell you, people would still continue to benefit in the old tax system. It's just an incentive to switch over. 17,500 rupees annually in their hand. I don't know if you're aware of this, or I don't know if we understand the high rate of inflation, where fees are increasing annually at 10%, school fees, college fees. The kind of amount that goes in daily expenditure, the kind of inflation people are grappling with incomes not doubling, incomes not even increasing. There are single-digit income growth that are happening in an individual's life. So it's not really a big relief to any armed army. What they're doing is they've given from one hand and taken from another, which I was talking about. The indexation removal. So you're also now discouraging asset creation. What does an armed army invest in this country now, where he won't be taxed to death? That's my only issue. So rationalization of taxes is what is being spoken about if you're moving towards a new tax system. Anyway, the question about women-led story. There are several skilled women who are educated, who are graduates, postgraduates, who are part of that 9.2% unemployment bracket in this country. Has the finance minister assured them of jobs? No, she hasn't. She speaks of skilling. So like I said, there are already graduates and postgraduate women who are doing exceedingly, have studied well, who've done well in their universities, but still awaiting for a job offer. They could be coming from IIT, they could be coming from IIM. This is a challenge that they're facing. The second thing, a woman who's running a household, the challenges that she faces in maintaining the daily expenses with income not increasing. Thirdly, women who are working, who step out to work.
Right.
So they are already grappling with gender pay gap, plus no tax relief for them. So what is women-led development and what is the women-led incentive story that they're talking about? That is
Priyanka,
the unfortunate part.
I've run out of time, but I'd like to put just one quick question to Mr. Rajiv Gowda. Mr. Gowda, finally, when you speak about becoming a Viksit Bharat, when India wants to become a developed country by 2047, what now do we need to do? Yes, this government has come out with the blueprint in the form of this budget. At the same time, the economic survey has left us with a thought whether we should be more open to FDI and investments coming to China, or whether we want to be more aligned with the Chinese supply chain. What kind of decision does India need to take when it comes to its own growth over the next 20, 25 years? And what's your take on Chinese investments?
FDI is welcome from anywhere. The basic point is to create conditions that would allow for FDI to come in. The real issue there is actually not running after Chinese FDI, but to actually provide an alternative destination to investments that would have gone to China. There's this whole China plus one strategy post-COVID that has been becoming popular. Those investments are going to Southeast Asia, to Vietnam. We need to create the conditions to get that money to come in here. Now, at the same time, there are opportunities for us to invest in infrastructure, to change the way we would, facilitate the ease of business, the turnaround time on ports, all these sorts of things. I just want to end with one or two other points that were missing in this budget. One is there was no mention of the railways at a time when we're facing massive accidents, we're seeing safety failures. This is something, we got rid of the railway budget, now we've got rid of any mention of the railways itself. And that's the lifeline of India's poor. So that's something that needs to be highlighted. And again, thankfully, there were no grand announcements about divestment targets, about sell-offs, which have never been met by this government. So hopefully a little bit of that hoopla has come down and they're getting their feet on the ground for the first time.
All right, we've completely run out of time, but we'd like to thank all our guests for joining us. We had with us Zafar Islam, Priyanka Chaturvedi, the TMC spokesperson, the TDP spokesperson, and Rajiv Gowda from the Congress. Thank you once again for being with us here on Budget Day. Goodbye, and thanks for watching.
माननीय सभासदों, माननीय अध्यक्ष जी,
माननीय सदस्यगण, मुझे अपनी ओर से तथा सदन के माननीय सदस्यों की ओर से अंतर संसदीय संघ IPU की प्रेसिडेंट और तंजानिया संयुक्त गणराज्य की नेशनल असेंबली के अध्यक्ष माननीय डॉक्टर तुलिया एक्सन का स्वागत करते हुए अत्यंत प्रसन्नता हो रही है। वे हमारी सम्मानित अतिथि के रूप में भारत की आधिकारिक यात्रा पर आई है। यह हमारे लिए खुशी की बात है कि डॉक्टर एक्सन बजट सत्र को देखने के लिए यहाँ उपस्थित है। माननीय डॉक्टर तुलिया एक्सन शुक्रवार दिनांक 19 जुलाई 2024 को भारत पहुंची। उन्होंने 21 जुलाई 2024 को आगरा का भ्रमण किया और इस समय वह विशेष बॉक्स में आसीन है। हम भारत में उनके सुखद और सफल प्रवास की कामना करते हैं। हम अंतर संसदीय संघ के प्रेसिडेंट के रूप में उनकी भूमिका के लिए सफलता की भी कामना करते हैं। उनके माध्यम से हम तंजानिया गणराज्य की संसद के सदस्यों, तंजानिया की सरकार तथा वहाँ की मित्र जनता को बधाई और शुभकामनाएं देते हैं। माननीय सदस्यगण, जैसा कि आपको समाचार भाग 2 के माध्यम से पहले ही सूचित किया जा चुका है कि माननीय वित्त मंत्री जी के बजट भाषण की प्रतियां हार्ड कॉपी के रूप में उपलब्ध कराई जाएगी। अतः बजट प्रस्तुत हो जाने के पश्चात माननीय सदस्य कृपया बजट भाषण की अपनी अपनी प्रति प्रकाशन काउंटर से प्राप्त कर लें। आपको ये भी सूचित किया जाता है कि माननीय मंत्री द्वारा बजट प्रस्तुत किए जाने के पश्चात बजट की प्रतियां आपको मेंबर्स पोर्टल के माध्यम से भी उपलब्ध करा दी जाएगी। माननीय वित्त मंत्री श्रीमती निर्मला सीतारमण।
Honorable Speaker, I present the budget for 24-25. Introduction. The people of India have reposed their faith in the government led by Honorable Prime Minister Shri Narendra Modi and re-elected it for a historic third term under his leadership. We are grateful for their support, faith, and trust in our policies. We are determined to ensure that all Indians, regardless of religion, caste, gender, and age, make substantial progress in realizing their life goals and aspirations. Global context. The global economy, while performing better than expected, is still in the grip of policy uncertainties. Elevated asset prices, political uncertainties, and shipping disruptions continue to pose significant downside risks for growth and upside risks to inflation. In this context, India's economic growth continues to be the shining exception and will remain so in the years ahead. India's inflation continues to be low, stable, and moving towards the 4% target. Core inflation, that is non-food and non-fuel, currently is 3.1%. Steps are being taken to ensure supplies of perishable goods reach markets adequately. Interim budget. As mentioned in the interim budget, we need to focus on 4 major castes, namely the Garib, Mahilaye, Yuva, and Annadata, the poor, women, youth, and the farmer. For Annadata, we announced higher minimum support prices a month ago for all major crops, delivering on the promise of at least a 50% margin over costs. Pradhan Mantri Garib Kalyan Anna Yojana was extended for 5 years, benefiting more than 80 crore people. Administrative actions for approval and implementation of various schemes announced in the interim budget are well underway. The required allocations have been made. Budget theme. Turning attention to the full year and beyond in this budget, we particularly focus on employment, skilling, MSMEs, and the middle class. I am happy to announce the Prime Minister's package of 5 schemes and initiatives to facilitate employment, skilling, and other opportunities for 4.1 crore youth over a 5-year period, with a central outlay of 2 lakh crore rupees. I will speak about them shortly, while more details may be seen in the annexure. This year, I've made a provision of 1.48 lakh rupees, 1.48 lakh crore rupees for education, employment, and skilling. Budget priorities. The people have given a unique opportunity to our government to take the country on the path of strong development and an all-round prosperity. In the interim budget, we promise to present a detailed roadmap for our pursuit of Vikasit Bharat. In line with the strategy set out in the interim budget, this budget envisages sustained efforts on the following 9 priorities for generating ample opportunities for all. Number 1, productivity and resilience in agriculture. Number 2, employment and skilling. Number 3, inclusive human resource development and social justice. 4, manufacturing and services. 5, urban development. 6, energy security. 7, infrastructure. 8, innovation, research and development. And 9, next generation reforms. Subsequent budgets will build on these and add more priorities and actions. A more detailed formulation will be carried out as part of the economic policy framework, about which I will speak later in this speech. This budget details some of the specific actions to be initiated in the current year towards fulfillment of these priorities, with potential for transformative changes. The budget also covers some of the previously made announcements, with intent to strengthen them and step up their implementation for expediting our journey towards the goal of Vikasit Bharat. Priority 1, productivity and resilience in agriculture. Transforming agricultural research. Our government will undertake a comprehensive review of the agricultural research setup to bring the focus on raising productivity and developing climate-resilient varieties. Funding will be provided in challenge mode, including to the private sector. Domain experts, both from the government and outside, will oversee the conduct of such research. Release of new varieties. New 109 high-yielding and climate-resilient varieties of 32 field and horticultural crops will be released for cultivation by farmers. Natural farming. In the next 2 years, 1 crore farmers across the country will be initiated into natural farming, supported by certification and branding. Implementation will be through scientific institutions and willing gram panchayats. 10,000 need-based bio-input resource centers will be established. Missions for pulses and oilseeds. For achieving self-sufficiency in pulses and oilseeds, we will strengthen their production, storage, and marketing. As announced in the interim budget, a strategy is being put in place to achieve Atmanirbharta for oilseeds such as mustard, groundnut, sesame, soybean, and sunflower. Vegetable production and supply chains. Large-scale clusters for vegetable production will be developed closer to major consumption centers. We will promote farmer-producer organizations, cooperatives, and startups for vegetable supply chains, including for collection and storage and marketing. Digital public infrastructure for agriculture. Buoyed by the success of the pilot project, our government, in partnership with the states, will facilitate the implementation of the digital public infrastructure in agriculture for coverage of farmers and their lands in 3 years. During this year, digital crop survey for Kharif using the DPI will be taken up in 400 districts. The details of 6 crore farmers and their lands will be brought into the farmer and land registries. Further, the issuance of Jan Samarth based Kisan credit cards will be enabled in 5 states. Shrimp production and export. Financial support for setting up a network of nucleus breeding centers for shrimp brood stocks will be provided. Financing for shrimp farming, processing, and export will be facilitated through NABARD. National cooperation policy. Our government will bring out a national cooperation policy for systematic, orderly, and all-round development of the cooperative sector, fast-tracking growth of rural economy and generation of employment opportunities on a large scale will be the policy goal. This year, I have made a provision